Now, for that and other top calls of the day, just head over to cnbc.com/pro. Subscribers get full access to detail and analysis behind all those big calls and stories. So, Andrew, some sentiment, at least slightly positive. We'll see if we can get over that negative Santa Claus rally period. I'll send things back over to you guys.
Thank you, Dom. Happy New Year. Meantime, we have some news just coming out crossing from Uber, the company launching a $1.5 billion accelerated share buyback program. Now, it says it expects the purchases to be completed in the first quarter of this year. You can take a look at that stock. Now it's 66.67. It had been up close to 88 bucks at one point. I think, well, let's get you the actual number. There had been talk about these buybacks before, but now it seems to be happening. And maybe because of where the stock is relative to where it was, we're looking right now. Yeah, I'm looking here. Top tick was about 89 bucks, 89.94.
Yeah, you can see it maybe just in October on some of this. By the way, there is a story on the front page of the Wall Street Journal today about Uber and Lyft gearing up for the revolution in driverless taxis. Waiting to hear what happens with that, building out some of the infrastructure on that now. I was just kind of looking through the story.
Don't you think that we're still like 5 years from that?
Probably from it being a common, like every day, every one that you're ordering, but it's moving quickly. And
in some cities.
Yeah, and if you're an Uber driver, you might want to think about that too.
Long term.
Driver. Yeah. All right, when we come back, we're going to kick off the first full week of trading with Jason Trennert of Strategas. That's right after this break. And then what Apple and Microsoft are offering President-elect Trump as we inch closer to Inauguration Day. Squawk Box will be right back. welcome back, everybody. Joining us right now with his outlook on the markets for the year is Jason Trennert. He, of course, is the chairman and CEO of Strategas Research Partners, which is a Baird company. And Jason, Happy New Year. Good to see you.
Happy New Year. Thanks for having me.
I don't know, by the Larry David rules, is it too late to say Happy New Year? It's just, this is the first real week
I don't
where
think so.
everybody's back.
I think January 6th, the way the
calendar
holiday fell, I think you can
everybody's
still say,
like
you can still say
full-time
Happy
back at
New Year.
work this
Yeah.
week. So looking at where things stand for the year, how are you feeling about things? What concerns you? What are you excited about when it comes to the markets?
Well, listen, I mean, you're not starting off with the greatest springboard for returns, right? If you're looking at the stock market, you're at roughly 22 times earnings,
Right.
okay,
22.5.
and you're at 10-year Treasury yields at, this morning. I think they're about 460.
Yeah, just above it.
We found over the last 2.5 years, anytime the 10-year Treasury yield goes above 450, the market tends to have troubles. There's been 3 corrections. 2 of them were associated with 10-year Treasury yields above 450. The third was the yen carry trade. So it's going to be hard to realize real multiple expansion this year. The expectations are for earnings to be up about 12 to 13%. In my opinion, that's probably the most you can expect from the market, but I also think it's going to be very choppy because you have the new administration that's trying to do big things, and whether they're successful in doing those big things will have a big impact on how well we do in the markets. Doge is the thing, in my opinion, that excites me the most, excites our clients the most.
The efficiency program that
Right.
Elon Musk and Vivek Ramaswamy are going to be looking at, trying to make the government a little more efficient. You know, what you just said, the idea of waiting to see how much gets done. Earlier this morning, we were talking with Axios, Mike Allen.
Right.
He was talking about this plan to try and do everything in one big, beautiful bill for the Republicans, to wrap it all together. Now, I can understand the reason for doing that, thinking that it's easier, as House Speaker Mike Johnson has said, to convince everybody to vote for one big Republican bill than to try and convince them again and again to vote for these things, that you'd see more defectors. But it also comes with an awful lot of risk. It could mean that you get no points on the board, that nothing happens.
That's certainly possible, and I want to kind of stay in my lane here. I don't know. I mean, I think
I just want the market's reaction.
I think the market's
Are you good with waiting and hoping to try and get that big bill passed?
I think so.
Or would you like to see a win on the board?
Listen, the market would probably rather see a win on the board in the short term, but the potential impact, positive impact, would be much greater if you're able to get the big bill later in the year. And that's what will be the tough part about this year, is that there's going, if you're serious about fiscal reform, right, it's hard to not break a few eggs, right? I mean, it's just, and I do think, I don't want to point fingers, but the Trump administration is inheriting some things, whether it was student loan forgiveness, whether it was the TGA, whether it was the SPR. They're inheriting a little bit of a mess, I think, on the fiscal side. Which if you want to correct those things, it's not going to be, it's hard to do them, hard to correct them without pain.
Part of the argument for this was that you wouldn't want the tax cut bill to be the last thing that you're dealing with and working on. If you've already spent a lot of your goodwill, if you've already had those things that have come through. But I always thought that was the one issue that you might get Democrats to support too, because who wants to say they voted to raise taxes?
Today,
I'm much more from a political, again, from a market perspective, you'd probably
today's
rather see less
commercial.
risk than more risk, right? As an American,
You like the go.
Today's commercial is brought to you by, heck, I don't even know what these are. Herman Survivor boots. I've had them over 20 years, and I wear them in the winter when the weather's bad. And today, the shoestring finally broke. So now I gotta go out and buy a new pair of shoestrings. Gotta figure out how to measure these things out. I guess you measure them by the eye. But they've been a good boot. Waterproof, hardcore toe on them, right? Rubber grip, hardly any wear and tear on them. But it's time for new shoestrings. I don't know if I want to get a new pair of boots, because I only wear them on special occasions. when I'm out on a date or not, when there's snow on the ground or ice. Damn it. It sucks. I was thinking that the other day when I put them on. I said they're about due. And this one here, yeah. The other one's fine, but still yet. This one could break in one spot. Okay. Time to put on my others. So now I go to my Merrell's waterproof hiking shoe. Insulated, kinda, but definitely good shoe. These are called the Vibram. Backup, which is one of my favorite shoes. It's the cheapest of them all. Oh well. CNBC is so ignorant at times. Tariffs, 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 tariffs. Worried, worried, worried. I mean, God. It's like they just forgot what happened. And they love these wars and open borders and crime and CEOs getting shot. Debt. They love the debt. They keep putting fear in the market. This channel does. The other one doesn't. The other one doesn't give a crap about tariffs. And they might not even happen. That's the big thing about it. It's either this. Mexico, you put a grip on this fentanyl coming over and killing our hundreds of thousands of people, or we're going to slap a big old tariff on you. I am all for it. China, you keep sending these drones over, we're going to flap a good tariff on you, buddy. It's all about national security. It has nothing to do with anything else. What happens if we get nuked or something because of this last administration, what they've done? So, well. They pumped Boeing up this morning.
make money.
We got some breaking news for you. Disney and streaming provider Fubo TV nearing a deal to combine their online live TV businesses. That's according to a Bloomberg report citing people familiar with the matter. Disney would fold its Hulu Plus live TV business into Fubo, creating a new venture that would be 70% owned by Disney and the rest by Fubo. The deal would only include Hulu's live TV business, not its subscription video business, which includes, of course, the catalog of non-live content available to stream. As part of this deal, Fubo would drop its legal claims against Venue Sports, the joint sports streaming venture by Disney, Fox, and Warner Brothers. The report says the tie-up could be announced as soon as this week if talks don't fall apart. Shares of Fubo up sharply on the back of that news. You can see it right there, up about 15%. We should note that its market cap before today's move was just $481 million, and a couple of other things. This service, of course, competes with YouTube TV. This has a lot to do with the bundle or unbundling of cable television, and this is effectively this is the bundle. What we're talking about is a bundle of services with sports. The bigger question now, if you remember this three-way tie-up on the sports side, also with Fox, also with Warner Brothers, Fubo was trying to block that.
Saying that it was not allowing competition, that it was going to be 70 to 80% of the sports that would be going through that three-way tie-up, and that this would squeeze out all the other competitors. This sounds like if you can't beat them, join them.
Well, the question that's what it does sound like, but the question that I have is whether regulators decide, okay, this is fine too. And that whole deal had sort of broken apart, or at least been stalled, or temporarily stalled out, because there was this view that it just could not go forward. Part of the issue is
that view that was being fueled by people or the companies like Fubo that were complaining about this.
Exactly.
Right.
And so I don't know if this fundamentally changes that dynamic or not.
You also have a new set of regulators coming to town at the same time, so I guess they'll look at that pretty closely. I tried Fubo for a while, just to get basketball games. It was really expensive. So it didn't last in our house, but they had some really good games and access to them. All right, January is forecasted to be one of the coldest months in several years, with more than 200 million Americans expected to see below average temperatures. Natural gas prices ran up more than 30% heading into the new year, and joining us to talk about the sector right now is Amrita Sen. She is Energy Aspect founder and director of research. And Amrita, first of all, thank you for being here to talk us through some of these things. People think it's really, really cold. That means a lot more natural gas is going to get used. But your perspective on this and explaining a lot of this is it also means that production is going to be tougher in some places. Why don't you lay it out? What's happening?
Lay it out, baby.
Yeah, look, thanks for having me. Happy New Year to everyone as well. Like you said, I think, of course, we are expecting additional gas demand, potentially over 120 BCF. But the key focus really is how much production do we lose, mostly in the Appalachia. The weather run is a little bit warmer right now versus what we were looking at last week. We are still expecting 25 to 30 BCF of production losses across the US. Most of that is going to be in the Appalachia. Now, to put it into context, last January, the unnamed storm, we lost 55 BCF. Back in the day when it was Winter Storm Uri, we lost 150 BCF. So the losses this time around are smaller than some of these bigger ones, but it's not immaterial, right? Like the price rise is justified, especially because the market has been pretty bearish. It's just that if the cold as it currently stands, it's kind of spreading further south, so it shouldn't be disrupting more production. But you never know, these weather fronts do shift, and then of course there's going to be an upside to our 25 to 30 BCF number that I just mentioned.
Yeah, Rita, part of what I always think about with natural gas, I guess liquefied natural gas is part of the issue too, but what's happened in Europe, where things stand with Germany, the huge reliance that they had on Russian natural gas, and how the market has been so changed and disrupted post the Russian
591,
How do you sort this out from where we were just a few years ago?
Let me get that.
Like over the next year
Go back.
I mean, it's a paradigm shift, right? And we have been calling for Russian flows via Ukraine to stop. We've been calling for that for a few months now, even though we had a lot of pushback, and that has, of course, materialized over the last few days as well. And therefore, we do think there is upside to European gas prices as well as a consequence of that. But the negative, of course, of this is that we have seen about 15% of European gas demand, industrial gas demand, being lost forever because of higher gas prices than in the past. We've also seen IRA from the US attract more industry to the US because one of US's biggest benefit is cheap natural resources. So I think US has benefited indirectly because of this, and Europe faces both higher costs but now also lower demand structurally as a result of the Russian invasion of Ukraine and just structurally higher gas prices.
That's really interesting. The upside here in the United States on that industrial front, you think that's long term? It's going to continue to grow?
If Trump's in office,
We'll
yes.
have to wait for what President-elect Trump does with a lot of the IRA, but we do believe that it's not going to be a blanket, revoking of everything that's there. A lot of the policies are kind of focused on America first. I think tariffs do complicate matters.
Oh, God, here we go with tariffs again.
Growth, even if ultimately the aim is to boost U.S. growth, I think that is going to be a tough one to decide before we have the full details. But ultimately, U.S. does benefit from cheap feedstock prices. There's no two ways about it, particularly natural gas and NGLs and LPG. So I think industry will flourish in the U.S. Anything that requires cheap energy, U.S. has a massive advantage over Europe.
Just in terms
Duh.
of the U.S. consumer,
We're not relying on
gas prices
Russia.
like that up 27% over the 3 months.
And Ukraine, honey.
Something like 65%
God.
of homes in the Midwest.
Are we brain dead over there?
for heating.
You're fired.
What's this going to look like for the consumer here?
Of course, it's a hit for the consumer, but we should also remember that natural gas prices have been at rock bottom, right? In the grand scheme of things, the same thing comes back for oil and gasoline prices as well, that people talk about the rate of change, which is of course fair when prices do go up a fair bit and quickly. But we have to remember, I mean, natural gas prices fell so low, it was almost like $1 per MMBTU, right? Not that long ago. And we have seen consumers also deal with $11, $12 in the past, right? So yes, the percentage increase in some ways looks very high, but it also looks very high because it's coming from a very low base. So I do think in the grand scheme of things, it's not going to actually be that detrimental for consumers because the outright price is still very low based on historical levels at least.
We've got to run, but WTI just below $75 a barrel right now. What's your guess for where prices are headed over the next 3 to 6 months?
Again, it's been a quiet rally for crude as well, right? It's TI is almost at 75, was below 70. We think Brent will be at about $80 average for this year. WTI is about 77, so we do think there's a little bit more upside, not just because of the cold spell. Inventories are very low. Look at Cushing stocks. That's the one chart I'd say to watch out for. Inventories have ended 2024 at the lowest levels ever for this time of the year, and I think people should be concerned about just how low stocks are.
Amrita, thank you. Really great to see you.
Okay.
Thank you.
Coming up, we've got some big tech sending warm wishes to the incoming Trump administration. We're going to talk about what's going on, what it all means after the break, and a quick note about tomorrow. We've got an exit interview with outgoing FTC Chair Lena Khan. We're going to talk about everything that's happened over the last 4 years. Squawk Box coming back right after this.
Oh boy. New shoelaces. I haven't bought shoelaces in I can't tell you how long. I really can't. Herman survivors. Herman survivors. Popular choice. Herman survivors. Wax bootlaces. 72-inch. What? Herman survivor shoelaces. 5-star 71 review. That sounds like too much.
Athletics.com.
One, two, three, four. 1, 2, 3.
Welcome back to Squawk Box. Apple and Microsoft courting President-elect Trump ahead of his inauguration. Technology correspondent Steve Kovac joins us now
1, 2,
with some
3.
more
There
of the
they
deals.
are
It
right
seems
there.
like everybody is courting the president.
Yeah, these are just the latest of the two courting Trump ahead of the inauguration day. This is Microsoft and
These are
Apple
the-
CEO Tim Cook, each offering different things, and it might not be the end. We
Thank
hear
you,
about
Matt.
these cozy relationships between these people. On Friday, according to Axios, Cook is donating $1 million to Trump's inauguration, comes ahead of Trump's promised China tariffs, which Apple needs to dodge like it did in the first term. Also on Friday, Microsoft
These right here
President
look
Brad
like the
Smith
size
put
I
out a
need.
lengthy blog post promising the company would spend at least $40 billion on AI development here in the United States for the fiscal year that ends in June. That's mostly for AI data centers, not necessarily creating a ton of jobs or anything like that. It's going to be a lot of buying NVIDIA chips as well. Smith also mentioned Trump a total of 9 times in that blog post and included a bunch of praise for his 2019 executive order on artificial intelligence. So let's talk about what's at stake for each of these. Let's Apple first of all. Tim Cook's donation, what that could possibly get him. Tariffs, of course. Trump promising up to 60% tariffs on imports from China. Although the Washington Post this morning reporting that may not happen for every single good coming in. Those blanket universal tariffs might not be as universal as originally thought. No comment from Apple on what's going on here. They're not saying if the company itself is donating as well, or if this is just a personal donation from Tim Cook, though what's the difference really there? Trump has said Cook had dinner at Mar-a-Lago with the two of them before the holidays. That was a few weeks ago, so unclear what was discussed there. Microsoft, on the other hand, it provides a lot of tech services for the government, and recently some questions around how serious it takes security. That follows recent breaches of State Department emails by Chinese hackers. Microsoft has since said it's going to make security a top priority. And Microsoft is facing some legal challenges related to its stake in OpenAI, that lawsuit from Elon Musk, plus some investigations from regulatory agencies. Not the only notable names, of course, in tech donating to Trump's inauguration. You have OpenAI CEO Sam Altman donating $1 million to the inauguration, as are Meta and Amazon. Uber is donating $2 million,
There
$1
they
million
are,
of
right
that from
there,
CEO
Amazon.
Dara Khosrowshahi, and another $1 million from the company itself. And of course, Elon Musk spending over $270 million to help Trump get reelected, guys. This seems to be...
Okay, so here's the question, and Becky and I were talking about it in the last hour.
Yeah,
Andrew had a good point.
In the old days,
in the old days, 8 years ago.
I have a suspicion, but maybe not fact,
Yeah.
that the defense companies, some of the banks, others were doing this because they
Yeah.
were traditionally the ones that were
They were
being
the contractors.
regulated, and they were trying to figure out how to curry favor.
Yeah.
Let's call it what it is. But that was sort of a normal course of business. These are the companies today that are in that business, meaning they are the ones that are going to need help from the government or not as it relates to regulations. Now, it'd be very interesting to see, does this go on for, whoever's the president in 2028 and 32?
But it wasn't with
right?
Biden. I mean,
And so that's the question.
Yeah, we know that Trump is so much more transactional. We also know what happened during the first term. I mean, just look at Jeff Bezos and look at his relationship with Trump in that first term. The whole Jedi Pentagon contract for cloud services, that kind of got knocked down. Bezos ended up suing. Remember the whole U.S. Postal Service thing with Bezos and Trump too? A lot of that talk, and it just became a big headache. And I think these guys are now realizing, hey, we should do what Tim Cook did in the first term and just cozy up right up front. And Trump could probably make our life a little less miserable than he did the first time. And this seems to be the cost of doing business now with the Trump administration. You literally.
What do you think about the distinction between some CEOs paying themselves? And some
I don't see it.
companies paying.
Tim Cook is Apple. Tim Cook represents Apple, just
Right.
like, you could argue you represent CNBC
Right.
when we're out there in public doing things. There's a reason you and I aren't allowed to do certain things. So I see less of a distinction between Tim Cook personally donating or Sam Altman personally donating. They are their companies, right? It's very obvious what they're doing.
So why do you think that some are doing it personally and some are doing it as corporations?
Apple usually doesn't donate politically.
I was going to say,
Yeah.
from that perspective, the
Right.
idea of just saying, look, I'm going to donate, but I'm not going to take shareholders' dollars.
Exactly, to do it. That's probably the thing. And again, Tim Cook
And
effectively
especially
synonymous with Apple.
If you have not used company money to
Do it in the past.
do it in the
It's a bad look. And there's also a reason I think it's really interesting. Apple's not talking publicly about this. Keep in mind, the dinner in Mar-a-Lago, Apple completely silent about what was discussed. Apple completely silent about this inauguration donation for Tim Cook. They don't want to touch this or even openly admit that this is actually happening. I think that speaks volumes as well, because they know it's kind of icky. And it's really interesting to see this change from so many of these people after 8 years.
Icky. Icky is the new practical.
Yeah.
Steve, thank you. We're going to have a lot more on big tech and the markets at the top of the hour with portfolio manager Dan Knox. Next.
When we come back, former Boston Fed President Eric Rosengren on Fed Speak and this week's jobs number. Squawk Box will be right back.
Okay, I got that figured out now. Shoelace strings. $54. Hmm. 72 is too big. I think I can get away with 54. That's 7 inches. Yeah, I can get away with that. They were kind of long. Randy, you ever replaced shoestrings before? I can't remember the last time I did it. Did you measure by the eye? There's 63 inch, but damn, they're big already.
Welcome back to Squawk Box. The December jobs report due out Friday. It's going to be a critical piece of data ahead of the Federal Reserve's meeting at the end of the month. Joining us right now is Eric Rosengren. He's former.
Yeah, my boots are every bit of 20 years old. Maybe even older. How'd I get up so high?
Employment around 4.2%, and payroll employment will come.
I think if we break this
100,000.
resistance, we'll go
I
higher.
think the real news is actually not coming from the data from December, but really what happens with tariffs and immigration policy once the new administration begins to make their decisions about what exactly the policies are going to be in those two areas.
Okay, so that's the big question, though. I mean, we were talking about this Washington Post report this morning as it relates to this new administration, tariffs in particular, this idea that there's going to be tariffs across the board for what they're describing as critical items to our national security. How that's defined, I think, is going to be the big question. How do you think the Federal Reserve is supposed to think about all of this? And are they supposed to think about this ahead of any action or not?
So the Fed's going to be driven by data, and right now the core inflation already is pretty high. So if you look at the PCE, we're at 2.8%. If you look at the CPI, we're at 3.3%. And the Fed's own forecast was that at the end of this year, we're still going to be only at 2.5% for both total and core. So just based on the data, it makes sense for the Fed to pause. But the Fed does have to make a forecast.
That's a 52 inches on them.
Presumably going to be more
That has to be
information about what the
61.
nature of particularly the tariffs are going to be. While the Fed's driven by data, the
63
data is
inch.
likely to be driven by some of the fiscal actions. And those fiscal actions in the short run are going to be driven by tariffs and immigration. In the longer run, we'll see the benefits potentially from deregulation and lower taxes. It will be good news if the Washington Post article is correct and there's going to be more flexibility on the tariffs, but I think it remains to be seen.
Eric, the thing that I can't figure out, though, about
can't figure out
that
nothing.
strategy, if you will, is whether that by default means the Federal Reserve is going to be late. That no matter what, if it has to be, I'm not saying it shouldn't be data dependent, but
Oh, God. Why do you always talk about the stupid stuff, Sorgensen? Can't you just show us stocks and talk stocks and charts and get so political?
But, I mean, as the chair said in his press conference, many of the members did incorporate some movement related to what fiscal actions were likely to be. But I think you probably keep it at a relatively low number until you have some specifics. As just your last session just highlighted, there's some uncertainty even with China, which is probably where the tariffs are most likely to go up. The administration has talked about 60% tariffs.
God.
Those are very significant. And it's going to start causing a supply shock and cause people to really rethink how they do the supply chain. That doesn't change in just a quarter or a couple of quarters. That's going to be a major shift if people think this is a more permanent effect.
in terms of the employment picture, and I know you said we're not going to have any surprises, if you were to look out over the next 12 months, what do you think employment looks like in this country, given all the things that we're talking about, Doge and everything else?
So again, it's very hard to determine just because the policy on the fiscal side has not really been clearly described. But in terms of the immigration policy, if a large number of people are deported, it's going to cause people to move to places they think they're less likely to be deported. And it's going to cause some shortages in places where labor for immigrants is particularly.
You mean illegal immigrants, sir? So you support human trafficking? Is that what you're saying?
In terms of the
I personally don't see the benefit. We're spending a lot more on them, and then they're taking in taxes. And half these people can't even speak, I mean, 3/4 of them can't even speak English. It's ruining our educational system. We're going to create dumber people because of it.
So when we do know a lot more, you get your thoughts on all of that as well. Appreciate it. Nice to see you.
I don't know.
Nice to see you. Thank you.
When we come back, news on the donut front. Uh-oh, listen up, Andrew.
I know.
It is crazy good. We'll have the details for you right after this break. Right now, though, as we head to the break, let's take a look at the chip stocks this morning. After Foxconn reported record revenue overnight. That news boosting the sector here in the United States across the board.
In what?
ASML up by about 5.9%. Taiwan Semiconductor up by 4.75%.
Yeah, TSM was up nice.
Again, better than 5% for ASML. Micron 2. We'll be right back.
And here's another one. For the last 3 months, they've been trying to dummy us down on these chip maker stocks, saying they were way overbought and that they were going to broaden out the market. No, you stay with what's been doing good. Good companies with good cash flow. These people have been wrong a lot here lately. We got a triple top on SMCI today. Just above 36 bucks. Or 35.48 if you want to count the wick. $35.48 to the penny. And that's what we just hit, so that's a triple top. They're back from the Hampton vacations. I don't know where Mike's been. He didn't say goodbye or anything. I know he was getting involved in some kind of crypto stuff. I hope he's okay. I mean, I'd like to hear from him.
Okay, this is my favorite, you know. We're talking Krispy Kreme, guys. Krispy Kreme partnering with Pop-Tarts for the first time, unveiling what they're calling Crazy Good Donuts. It's a collection. Started today at participating locations. Krispy Kreme offering 3 new Pop-Tart flavors: frosted strawberry, frosted chocolatey fudge, and frosted brown sugar cinnamon. I think the third is probably my speed. They're available in store and for pickup via and delivery via Krispy Kreme's app and website, individually and by the dozen. I should say
it's all a bit. On them.
It's too much sugar. It's too much sugar.
Oh yeah, because you'd say no, thank you.
No, you know me. I actually just like a classic
like a little,
glazed.
Yeah.
Just because you can't really. That's a lot of sugar.
Yeah,
That's a lot of sugar. And I'm not really a Pop-Tart guy, so.
The idea of a mini Pop-Tart on it, I'm just curious as to whether there's actually stuff inside of that.
Oh, I don't know. We'll have to get to some.
To check it out. All right, when we come back, port workers threatening to strike a second time. Former Commerce Secretary Carlos Gutierrez will join us next to talk about this, what the implications are, what he thinks is likely to happen. And
port workers are threatening to strike again. It's not like they didn't get a good raise last time around. This is why inflation's here to stay. Oh, gosh. Here on the other hand, yep, I agree. We're just going to have to live with it. This has been probably the worst 4 years of my life when it comes to cost of living increase. I mean, for me to get a good ribeye, it's $30. And that ain't very big. Just a good size ribeye. When they used to be like $12, $13 just 4 years ago. Thick one. Juicy. They've gone up 100%. Chicken gone up 100%. 5 chicken breasts. It's cheaper to almost go out and eat.
Supply chain impacts. Carlos Gutierrez is the former Secretary of Commerce, also a CNBC contributor. I want to get his views on tariffs and everything else that's going on. But in the short term, we almost
tariffs. Would you shut up?
With longshoremen.
Tariffs. It's not the big issue right now. Unless I'm just totally backwards.
I think management can just, call it quits without a fight. But I don't see any big changes in technology or in the contract. There will be a delay. We can't expect a strike to happen on the eve of the inauguration. So yes, there'll probably be a short strike, but in the end, I think the longshoremen have won this one, and we'll just move on,
No, we don't.
Here's a larger question in the context of labor in this country.
Cost of goods will go up because you got to pay higher labor costs.
His relationship with labor and with unions as we move forward. I mean, are we going to see more of this, and will he be supportive of them or not? Because it's been very mixed over the years, and clearly there's been maybe even a little bit of a shift even the last 6 or 8 months during his campaign.
Yeah, I think that's a great question. On one hand, there is a link between the doctrine of America First and unions. You can make a case for that. But I don't think the president is making broad policy. I don't think he's saying that he will always side with labor versus technology. That's a very big statement. I think what he's saying is, in this specific case, he believes the longshoremen are right. It's interesting that the argument is probably made that the profits are going to foreign companies, and foreign being the key word. It's really not about foreign companies. If U.S. companies were running these ports, were operating these ports, it'd be the same thing. The money would be going to them. So the reason there are foreign companies, because there aren't U.S. companies who manage ports on this scale. It's a very difficult business, the business with a lot of expertise required, built over decades. The foreign aspect isn't really the key issue, but this is an issue that's going to come back up. Is it, technology versus labor, and how do we deal with it without it being binary? It's either one or the other, or we go on strike. So it's something to watch, and I think it's important.
Carlos, I want to talk about tariffs with you and the role of inflation. There's a Washington Post piece out this morning talking about how the president is really going to implement tariffs across the board on what he's describing as critical national security items.
Hey, fat dumbass. How did we get such high inflation if there were no tariffs under the Biden regime? Overspending. I'm more worried about the overspending in government. I don't care about tariffs. Do you not get it?
That the way to approach tariffs is surgically, by industry, by product, in some cases by company, whereas across the board we'll have consequences that are self-inflicting. There's self-inflicting damage, especially if we want to, for example, if we want to move supply chains to Mexico. It would be self-defeating if we put tariffs on products that are being moved to supply from Mexico. So I think that there has to be an analysis. It has to be a bit more strategic. I do think that it points toward specific strategic products, industries, companies, as opposed to across the board. There are too many things that fall through the cracks when you do across the board. Just on supply chains, these things are so complicated. It's so easy to say, let's bring supply chains home. You talked about Apple a little while ago. Their supply chain has come out of China. You're talking about hundreds of components coming from different countries that all congregate in China for assembly. That cannot be replaced overnight. In fact, it can't be replaced in years, in decades. So these things are going to take time and a lot of analysis, a lot of work. And if we want to facilitate that, then I think we need to be more selective about tariffs, especially in countries like Mexico, or Vietnam, where they will be recipients of supply chains.
Carlos, I want to thank you for joining us this morning. We will see what happens. Appreciate it.
Thank you.
It is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Andrew Ross Sorkin. Joe is off today. Among our top stories this morning, Nippon Steel is accusing President Biden of exerting undue influence over its attempted $15 billion merger with U.S. Steel. Biden blocked that deal on Friday. In filing 2 new lawsuits, Nippon Steel says that Biden caused the Committee on Foreign Investment in the United States to fail to conduct a good faith review process of the deal. Nippon says that it's still confident that it will close the transaction. We'll see. Disney and streaming TV provider Fubo TV are closing in on a deal to merge their online live TV businesses. That's according to a Bloomberg report that says that as part of the deal, Fubo would drop its legal claims against Disney, Fox, and Warner Brothers Discovery over their Venue Sports streaming service that combines all 3 of them. And aides to President-elect Trump are looking into implementing tariffs on every other country, but only on imports critical to national or economic security. That's according to a Washington Post report. It would represent a big change from Trump's campaign rhetoric. The report also says that these are talks that are still in flux. We'll talk about this at 8:30 a.m. Eastern Time with former Speaker of the House, Kevin McCarthy.
Meantime, take a look at futures right now. We got some green on the screen on this Monday morning. The Dow up about 170 points. The NASDAQ up about 222 points. We're looking at the S&P 500 up about 46 points. We'll also show you treasuries right now. You're looking at the 10-year note sitting just about 4.5, call it 4.6. The 2-year at 4.262. Our good friend Mike Santoli is down at the New York Stock Exchange. And this morning he is weighing the chances of another banner year for the markets following 2 consecutive 20% gains in the last 2. Can it be a three-peat, sir?
Well, Andrew, you'd have to say it's possible because it has happened before, not since the late 90s, but it probably would have a lot of things need to break right. You have a lot of bullish sentiment going out at the outset, and a lot of the big names in the market have to cooperate. Hey, here's a 2-year chart of the S&P 500. Last year, we had a maximum of an 8.5% pullback. So the ratio of reward to risk was very high. It's hard to know if we can really expect anything like that again. You had a 23% gain, only had to sustain about an 8.5% drop along the way. What happened here approximately 2 years ago? Well, inflation had decisively peaked, and the AI story really started to come into its own, driving up the NASDAQ. If you really wanted to just sort of say, okay, what's the overall trend? That's the angle of ascent, and we actually had this stealth pullback in December. Important groups like industrials, banks, small caps down 8%. That was a pretty good little reset. Friday, we finally had a response to that oversold rally. We're going to try to continue that today. We'll see if there's traction. Take a look here, though, at the ratio of the NASDAQ 100 to the equal weight S&P 500. So this is kind of mega cap tech relative to the average large cap stock. And you see, obviously, this was a massive peak in relative performance toward the middle of last year. The market broadened out, which meant that the average stock did a little bit better relative to the NASDAQ 100, and then a resurgence again in the last month or so. If we're getting to 20% gains, it's got to involve these stocks. The math gets very hard when you have 7 stocks worth 30% of the S&P 500, and you say, oh, maybe they're not going to lead the way. Well, then you have 70% of the market has to get the overall index up more than 20% or even to 11%, which is the consensus strategist target for this year. It becomes very, very difficult. Take a look at rates. This has been one of the, at least psychological headwinds, rates going up, even as people are questioning whether the economy is in fact accelerating. This is the yield on Treasury inflation-protected securities on a 10-year basis. This is the yield you get over and above the rate of inflation. It's known as a market's estimate of real yields. And we're kind of at this key threshold here, or at least one of them, 2.25%. Maybe you'd say, hey, that's a pretty good deal. You get 2.25% above inflation. This is, though, also somewhat of a restraint on the real economy. Does it mean that the market is saying that under the new policy mix, we're going to have a faster growing economy, or that so much debt is going to be issued by the government, you need more compensation for it? It could be some combination of those things, but we're at this level where it might start to test equity valuations and flows, but hasn't happened so far this morning, guys.
Let me ask it this way then. What do you think that the markets will be looking at this week, effectively, to test the overall 25 bull case?
Yeah, I mean, first of all, we have this speech by Jensen Huang at CES, NVIDIA's CEO. I want to see if, in fact, there is real fatigue with the AI story, because NVIDIA has not been able to break out above its June high in a sustainable way. Microsoft's been dead money for 11 months. You want to see if the market still is going to be able to seize on the same old theme on AI. Finally, of course, the jobs number. I do think the market craves confirmation that the jobs market and the economy remains in good shape. We don't want bad news just to bring in more Fed easing. So I think those two things is probably going to help fill in some of the blanks this week.
Okay, Mike Santoli, thank you. Appreciate it.
Joining us right now for more on the markets as we get ready to kick off the first full week of trading in 2025 is Dan Niles from Niles Investment Managing. He's the founder there. And Dan, what do you think about what Mike Santoli was just laying out, this idea about levels that need to be tested, things we're going to be pushing on? How are you feeling about the year?
Well, I think Q1 earnings and guidance is going to be key to this, because you've got a lot of things that need to get taken into account. The first big one, honestly, is at the end of Q3, the US dollar was at 101. It ended the year at 108. So you've got a 7% move in that, and you're going to have guidance that a lot of these companies are going to give either for the full year or for the first quarter. And S&P companies get about 30% of their revenues overseas. So you're going to get a 7% hit to that immediately. And for the Magnificent Seven, a lot of their revenues, it's closer to 60% overseas. So you're going to have to deal with that. The second part of it is some of the calendar shifts you're seeing, like they shouldn't really matter, but you've got Easter moving out from the end of March to April 20th. And so for companies that only guide a quarter in advance, et cetera, We may have guidance below expectations. So you've got a lot of things that I think it's going to be interesting to see how stocks react to this guidance. And multiples are really high. Let's not forget, we are exiting the year at about a 25 times S&P 500 PE. You go back through history, and when CPI is between 2.5% to 3%, the trailing PE is closer to 19 times. So valuations don't give you a lot of room to maneuver, and so that's why I think this year it's like one of the widest range of outcomes I can think of, and I think it really hinges on the path of inflation in terms of whether that multiple can hold or it contracts by 20 to 30%.
So last year at this time, you had top picks like Amazon, Meta, Texas Instruments. I was a little struck by your top pick. You've got 5 top picks, but the first one you listed was cash. When's the last time you did that?
Well, the last time I picked cash was in 2022, and the market ended up going down 19%. So, yeah. So we'll see how this year turns out, but I think especially to start the year, you're going to get a 4% yield in money market funds if you have cash. I don't think that's a bad place to be. Now, if you go through the rest of the picks, there are individual stocks that I hope can get through even if the market goes down 10 to 20% this year, which I think is possible. I think the upside is up 10%, but I look at Cisco, where we think you're going to have, the last 2 years you've had AI spend to build out that infrastructure. I think this year you're going to have companies wanting to get to that data, move that data around, network that data. Adtran is bringing, helping companies bring fiber to the home on the telecom side. British Telecom, Deutsche Telekom in Europe is doing that. And in the US, you have BEAD funding, bringing broadband to underserved communities. Those funds are going to start to roll out in the middle of this year. I like the bank stocks because with the new administration, less regulation, tax cuts, that should really help those stocks. And don't forget, 2023, we had to deal with the bank failures of Silicon Valley Bank, First Republic, Signature. And so even though the S&P is up 23% or so over the last 3 years, the bank ETF, KBWB, is down about 4% over that same period of time. And then the final pick is the mid-cap value space because, you know, you go back to COVID, a lot of infrastructure spending there. Then the last 2 years, spending on AI infrastructure. And the mid-cap space has just been sort of left for dead as all the money is congregated into 7 stocks. And so you've got mid-cap, small-cap value names trading at 17 to 18 times trailing, with the S&P sitting up at 25 times trailing. And they've underperformed by about 35 to 49% over the last 5 years relative to the S&P 500 that's up 82% and just been left for dead. And I think this year, especially if we do get a pause in AI spending, which I expect by about mid-year, I think a lot of that money is going to come out of the Magnificent Seven and try to go into these other areas of the market like small and mid-cap value.
The big argument against small cap in particular has been as interest rates rise, they're going to have a tougher time. They're not going to get those hoped for eventual lower rates that you've already seen bigger companies able to qualify for. Things could get a little tougher sledding. Jason Trennert was here just a little bit ago, and he said that he would stay away from those stocks for this moment because he wants to wait till after there's a recession. That's when you really jump into those stocks.
Yeah, I mean, that's why mid-cap value is our top pick, or one of the 5 top picks that we're looking at, because they are a lot more defensive. If you go back and you look at what happened during when the tech bubble broke, or during that 22 period of time, they held in a lot better than the market. And because they're bigger than small cap names, they tend to have, you know, better profitability, better ability to handle it if rates do go higher. And that is one thing I'm definitely looking at, because the other side of, you know, when CPI is between 2.5% to 3%, you normally got 10-year treasury yields, if you look back in time, about over 100 basis points higher than where they are today. So I can definitely see a situation much like in 2022, when you lost money in bonds and you lost money in stocks, if inflation really picks up. Because don't forget, these pro-growth policies are wonderful, but the other side of that is you've got low unemployment sitting at 4%, the economy is already growing at 3%, and the policies coming in are pro-growth for the U.S., but they're also somewhat inflationary, such as immigration policies or tariffs. And so I think you really need to watch that, and the market really cares. As you saw when Jerome Powell said our inflation forecasts have, quote, kind of fallen apart, and the market dropped 3%. So to your point, Becky, that's why I think mid cap's a better place to be than small cap, which is why we went with the IJJ as one of our top 5 picks.
Dan Niles, again, another of his top 5 picks is cash. He hasn't done that since 2022. Thank you, Dan.
Thank you, Becky.
Okay, coming up, former House Speaker Kevin McCarthy. We're going to talk to him about this new tariff plan that we're reading about in the Washington Post this morning, and also this story coming up. What could a Disney Fubo TV partnership mean for the streaming landscape and the venue sports service that 3 of the biggest players are trying to launch? Lightshed's Rich Greenfield is going to join us in just a moment to talk about this breaking news this morning that could reshape the television landscape. You're watching Squawk Box, and this is CNBC. Welcome back to Squawk Box. Netflix, one of the big winners of last night's 82nd Golden Globes. The streamer taking home the top prize for Best Film. Comedy for musical for Amelia Perez. It stars a transgender actress and tells the story of an American drug lord who undergoes gender-affirming surgery. Best Drama Film went to the post-war epic The Brutalist from private distributor A24. The film clocks in at more than 3.5 hours, but the Globes win puts the chance to be a major contender at this year's Academy Awards.
You know, I've never watched one. I've never sat down and watched one of these Academy Awards. I mean, the last movie I watched was 8 years ago, maybe longer than that. It had to have been longer than that.
That's the joint sports streaming venture by Disney, Fox, and Warner Brothers. Joining us right now is Rich Greenfield, who's an analyst and partner at Lightshed. And Rich, what do you think of this? Obviously, not a done deal at this point. Is this something that would clear the way for that sports venture to go through, or are there other authorities that might get involved?
Look, at the end of the day, Bob Iger is a pretty amazing deal maker, and I think he very much believed in venue sports. I think there was a
Woo! That's a good one.
there's executives about the way the lawsuit was going. I think they weren't in a great position on appeal, and so this becomes a very elegant solution to solve two problems. One, Becky, Hulu Live TV was not a good business. Disney was in it to sort of help ESPN, but within the bundle. But now that ESPN is going direct to consumer in September of 2025, this year, they don't really care as much about the linear bundle. And so exiting the money-losing Hulu Live business, sending that to Fubo, letting them deal with the fact that the online or virtual cable business is not a great business, seems like a pretty sort of a win-win for Disney. They get out of their not-so-good business, and they help the venue sports joint venture actually get off the ground. So I would put this into sort of a double win for Iger in terms of coming up with a very elegant solution to this problem.
Hey, Rich, two questions. One is, do you think, there's the lawsuit, which is what's keeping this venue service from moving forward right now, but how do you think regulators, could they independently be looking at this in a different way?
Look, that's obviously the unknown. The judge was clearly very clear that she saw major issues with this. The question is, you've got a change of administration, right? So, like, the timing of this may not be a surprise, right? Like, you waited until the Biden team is sort of on the way out, the Trump team is on the way in. Is this an issue that the Trump, whether it's DOJ or FT, like, I don't know which agency would take this on. The DOJ wrote a brief. The former DOJ wrote a brief in support of Fubo. They're obviously on the way out. So My guess is there isn't really a catalyst to bring this back into a lawsuit. Anything is possible, but my guess is this will clear the way without Fubo. And remember, DirecTV was sort of silenced because they got a deal done with Disney. So I'm not sure there's a real catalyst to keep this lawsuit going, or another version of this lawsuit going. I certainly sit here today looking at the news, and if this happens, I think venue sports probably launches over the course of the next few months. They're ready to go. They have hundreds of executives sitting on the Fox lot. That's where the tech was based. They're ready to go as far as I know. And so if this lawsuit gets cleared, you might see this happen very quickly.
So if that is the case, if venue does get launched, what does that mean? Who are the losers in that potential setup? What's the competitive field look like?
Well, look, the unknown, Becky, is from the very beginning, venue was always let's get this started with Fox, Disney, and Warner Brothers programming, and let's try to bring in more programming over time. There was sort of an expectation that, hey, David Ellison is coming into Paramount and will own CBS. Maybe there's something to do there. Now that sort of Jeff Shell and that new team from Redbird is sort of flowing into CBS. I don't know. Look, as it stands today, I don't think venue is a massive business, only having sort of, less than half the NFL, they're going to have all of the NBA this year, but then they lose half the NBA when the Turner stuff goes over to Amazon. So it's not I still think that the sort of headwinds facing venue are pretty significant in terms of like how big of a service it can be. But again, if you're sitting there at Disney, Fox, and Warner Brothers, every subscriber you get is good because you're actually laying off, you don't bear the cost because you only own a third of the joint venture, but you get 100% of your distribution fees from venue. So it's a very elegant solution to helping your linear business in a time when everyone is looking for smaller bundles, cheaper bundles. And so this seems like a win for Disney, Fox, and Warner Brothers.
Rich, a couple of questions. This is a big win for Edgar Brafman, who's the chair of Fubo, it seems like. I was unaware, so Hulu, you're saying Hulu TV or Hulu Live?
I got a secret. Trump might buy it all with Elon. People do not watch TV hardly anymore. Do we understand? It's gone too far wacko. But there's people that are glued to the TV. I mean, I'll never get it. That's their entertainment.
You have almost double the subscriber base at YouTube TV that you had at Hulu Live. Now, obviously, combining Fubo gets you a little closer, but you're still trailing by millions of subscribers. And so I think that relative scale is pretty significant, Andrew, when you're looking at the cost structure. So, look, this doesn't fix the overall problems. YouTube is part of Google, right? Like, there's a much larger purpose to YouTube TV. Fubo plus Hulu is still a pure play online video service that is going to face, meaningful headwinds long term.
Rich, long term, do you see Venue becoming a place that brings in a whole bunch of other partners, whether it be Amazon, which obviously is going to have NBA rights, whether it be NBC, whether it be or do you see a bunch of these sort of mini bundles?
It seems like this conversation has been going on for years.
Andrew, I think the only way that
they
Venue
keep
can be
pushing
really
it
successful, and what I mean by really successful, meaning 10 million plus subscribers. The only way you're going to get to that type of real scale and probably even potential of real profitability is you're going to need more content, meaning you're going to need to have a fuller offering, which means Comcast, Brian Roberts, which means, David Ellison and Paramount are going to have to play ball with Venue. Whether that happens, I don't know. Only owning a part of the ecosystem, and there's definitely some tension. Starting Venue did not sit well with Brian Roberts, did not sit well with the team over at Paramount. Obviously, they're on the way out. But, bringing everybody on board, that will be critical to whether this is actually a meaningful service.
Is
Monopoly?
Is there a lesson in Hulu? Meaning, if you go back and think about the creation of Hulu, that was obviously a whole bunch of folks getting together, and for a long time,
Disney wasn't part of it. Disney wasn't even part of it at the start, right? So it brought in Disney. At one point, it brought in Warner Brothers. So it brought in more and more partners. That's what you need to do. Can you convince everybody to play ball, given everybody is sort of out for their own interests? Heck, Andrew, we don't even know if Fox will look like Fox in a year, given the litigation that's going on in Nevada. So there's a lot of moving pieces over the course of the next 12 to 18 months. But I do think, to answer your question very clearly, for a Venue to be super successful, it's going to need more of the NFL. It's especially going to...
Really? And that's a seasonal trade, buddy. And I don't watch football anymore either.
The sports content. So whether it was Roger Goodell or Adam Silver, I don't think any of them are excited about this as it currently sits today. But to Andrew's point, does this look much, much different in 18 months than it looks today? That's a big and multi-billion-dollar question that needs to be answered.
You asked that question 2 years ago.
Thank you.
You dick. When Disney came out, the same thing was going on back then. And they just continue down this fork road. And another 2 years, they'll be saying the same thing. Another 2 years, they'll be saying the same thing. Who's going to save them? Well, I'm debating on if I need to go to the IRS or not. We didn't get that much snow. I guess, just didn't get it. But it's cold. Icy. I think I'll go just to go in case I got any ice. I don't want to, but you gotta do what a man's gotta do. be back. I hate winter. I hate it, I hate it, I hate it.
Welcome back to Squawk Box. Bitcoin up more than 40% since Donald Trump's election win in November. Many in the crypto community enthusiastic for what they hope will be a more friendly environment for crypto under Trump. Joining us right now is Ari Redboard. He is the head of legal and government affairs at TRM Labs. Good morning to you. I think we're all trying to understand what it means to have a more friendly regulatory environment and sort of how that will therefore manifest itself in some of the valuations that we're seeing, Ari.
First of all, good morning, and thank you so much for having me. Yeah, there were a lot of promises made on the campaign trail, and now we're sort of slowly seeing some of those promises come to life. There's this adage in politics that the people are the policy, and over the last, really since the election, we saw several key appointments really across the cabinet, from Scott Besson as Treasury Secretary, Paul Atkins as SEC Chair. We have now a crypto czar, or we'll have a crypto czar, David Sachs, an entrepreneur and former PayPal executive. So if the people are the policy, we're seeing people really up and down the cabinet who have been supportive of digital assets, have been supportive of innovation, AI. There's this excitement and I think sort of cadence of almost a space race where the U.S. is now in a position to keep up with the rest of the world or even surpass the rest of the world. And so far, we've seen a number of really key appointments of folks that support innovation in the digital asset space.
But I guess the question is, if you look at Bitcoin at close to $100,000 now, what happens? Meaning, how's it going to trade in the future? Do you believe it becomes some kind of true electronic currency? What happens that actually brings value to all of this?
Yeah, it's a great question. And, I mentioned the people, and the real question next is sort of what happens from a policy standpoint. We've heard a bunch of different suggestions to include a strategic Bitcoin reserve. But I think what I'm really most excited about is even beyond Bitcoin. Over the last few months, we have seen fintechs like Stripe and Cash App and others across the ecosystem use stablecoins at scale for payments, right? We're actually seeing the technology used. I think Bitcoin traditionally has been this investment mechanism or store of value, but what we're really seeing is people start to use the technology for cross-border payments, for remittances, to buy things. And I think that's when we're really going to see this ecosystem grow when we talk about digital assets. So I think on the one hand, you have Bitcoin, which has been, I think, this really incredible success story, and even in more bolstered by the election. But I think what we're really seeing, and I'm most excited about, is the technology being used in a meaningful way for cross-border payments and beyond.
You have a view on what Bitcoin ultimately is going to be worth? Is there an ultimate way?
I don't. I think we're going to see it go significantly higher. I think things like a strategic Bitcoin reserve in the United States, and it's not just the United States. I think, when countries around the world look at the election, look at some of the campaign promises, and now look at what the Trump administration is already doing, I think we're starting to see other countries and even states. I spoke to folks from Texas recently that are looking to build a strategic Bitcoin reserve. So I think we're going to see it go significantly higher. But I'm definitely, I'm a former prosecutor, not a guy who's going to necessarily make predictions on the ultimate price of Bitcoin.
We should have a larger conversation about this, given your former prosecutorial role and the fact that there's a whole bunch of prosecutors who think that Bitcoin gets involved in a lot of crime, but we can discuss that another time. All right, thank you. Appreciate it.
Hey, thanks so much for having me.
When we come back, a can't-miss interview with former Republican House Speaker Kevin McCarthy, coming off of Friday's re-election of Mike Johnson to the top post in the House. Stay tuned. You're watching Squawk Box, and this is CNBC.
Curse.com.
Welcome back to Squawk Box. 11 members of the House Freedom Caucus board sending a letter to their GOP colleagues saying newly re-elected Speaker Mike Johnson must prove he won't fail to deliver on President-elect Trump's agenda. They write the following. They say they voted for Johnson on Friday, quote, despite our sincere reservations regarding the Speaker's track record over the past 15 months. Joining us right now to talk about the new Republican dynamic in Washington, former House Speaker Kevin McCarthy. He's chairman of the Alpha Institute. Good morning to you.
Good morning.
So there's a big piece in the Washington Post this morning, I don't know if you saw, about tariffs and not just tariffs, but really actually the bill. I mean, I should really go maybe to the piece that was in Axios. I'm sort of mixing pieces in my head now about sort of the idea that there's going to be sort of one massive bill that's going to come due, if you will, with everything in it: immigration, potentially taxes, all sorts of component parts. Will the Freedom Caucus go along with sort of a massive MAGA bill?
They're going to have to. I mean, this is what's so critical. And for your viewers to understand, this is because of reconciliation. Yeah. You can only have it if you have the Senate and the House. It's how the Democrats did Obamacare. It's how we did tax reform. But the critical part here is this is in modern history, it's the first time that the majority in the Senate is bigger than the majority in the House. They actually lost seats in the House. And another thing they're not talking about, the Speaker talks about getting this done by April 1st. He won't even have the 2 seats in Florida that are open. The election is on April 1st. So the election for Speaker, he had a bigger majority than wants to do this. Now, this is a big win for the Chairman of Ways and Means, Jason Smith, because earlier they were talking about doing 2 reconciliations, which I thought was wrong. Because what happens, it gets more difficult to pass a bill later, exactly to your question.
Reconciliation just means you don't have to have any
I don't need 60 votes in the Senate, right? And you can do cuts. But you can't write any bill you want because you got the Byrd rule in the Senate. The parliamentarian has a lot of power. Thune already said he's not going to go against the parliamentarian. So Trump is right by moving to just 1. Because I think getting that bite of that apple is going to be a difficult job.
What would you put in that?
Well, you got to do tax, okay? But think about this. You couldn't pass the same tax bill that you had now because the New Yorkers and the Californians
want the higher
for state, for the SALT.
For SALT.
The president now said that he doesn't want no tax on tips. So this all costs more money. So how do you offset this, right? Then if you need money for the border, and think about this: if this is all supposed to be done by April 1st, they never got the funding done from last year. That's due in March. So what are they going to focus on? They should have got all that done ahead of time.
You're saying you would do this, but it also sounds like there's no way, there's not a chance that this is getting done by August.
Oh no, it's getting done. Okay, the way we got tax reform done, because we did the same way, because we failed on health care. People leaned into tax, even though some didn't want to vote for it, because they felt if we failed here, we'd lose everything.
So basically,
they
this is
know
like take it all or you have nothing.
Yes, they know the American public is watching this. Now, President Trump is doing a very good job for this reason. He's got the Freedom Caucus coming down. The Freedom Caucus letter there. The people who are anti-Trump are more in the Freedom Caucus than any other place. So for them to play this card, they're wrong. They're trying to leverage for their own personal positions. They're really not leveraging for the Trump stuff. Right. I know what the private meetings are about. I know what they tried to do to me.
Where are you going to put me in charge? Which
I want the Rules Committee. I want Chip Roy in charge of the. That's what they asked.
And by the way, the rest of the Republicans say, no way, we're not going to take that again.
They couldn't win the vote by their own conference, so they tried to leverage this point.
So this makes sense from the House perspective. Does it make sense from the Senate perspective? Because Thune has not sounded as
well. It's easier It's easier for Thune because remember, for the first time in modern history, he's got a bigger majority. And they go along more than here. But what Trump is doing, next week he's bringing a number of members down. So Trump is not only president, he's pretty much the speaker now, too. Because he's turning these votes.
It's like an LBJ sort of situation where he's going to go around and kick people in the shins and say, you're going to do this.
He has to do this. And he realizes the importance. The uniqueness, too, I was just with the president Friday. He is better prepared.
Incoming president.
President. That's easy to do. President Trump is better prepared to go into the job this time than he was 8 years ago. He knows the job. He knows what has to get done. He knows he's got one term. He doesn't want to waste one day. The people that he's brought in, he is much better prepared and the knowledge of what has to happen. So he also knows how to work. President Trump knows these districts better than these members do. I spent a lot of time with him. When we would go and endorse, he knows the outcome. He knows the strength in them.
I've been talking to a number of people who've been down in Mar-a-Lago, and they say they think that there's more access to him, and it's better that it can be easier for him, or this last month, easier for him to see people and to get to people than it is once he actually gets to the White House. Do you think that's true?
No, President Trump is more accessible than anybody on his staff. And this is the difficult part for someone who works for him. Because members will talk to him.
You don't get to be the gatekeeper.
He will talk to everybody. I don't understand how good he is at a work ethic. He doesn't need much sleep. He never has in his life. I usually would talk to him early in the morning, late at night, every single day. Still talk to him. And the number of people he talks to in a day is amazing, is more than any that his staff talks to.
What do you think we should all make of the number of CEOs who are going down to Mar-a-Lago and or now contributing to the inauguration? I ask because there's some people who look at this and say, these companies never did this before. These tech companies weren't doing this in 2016. And by the way, they weren't doing it for Democrats either, interestingly. Is this transactional? Is this cozying up? Is this practical? Are these the new defense companies, if you will? Meaning, I would say defense companies and some banks and others were doing this years ago.
I look at people who give to the inaugural different than someone gives to the campaign, because it really is a celebration of there. Now, are they doing it just for celebrating?
No. At that point.
Yeah, but there's a lot of people. Tech companies are different today, though. They never played in politics,
They need to.
But now they do. Yeah. Government can affect them, and what have they done? So they now begin to realize, a lot of them are just now putting government affairs together. They're realizing they better start building a relationship.
Oh, but companies like Meta and Google have been spending enormous amounts of money in Washington for the last decade and a half.
Yeah, but they're further along than others. But they also spent a lot. Look, you say they're spending money, it's now getting reported. A lot of these people spent money in campaigns that didn't get reported. Right. So, people know who they play with and what side. But the difference here is, I take it as a positive that they've accepted this election. They don't want to fight this president. He never got a honeymoon, President Trump did, and normal presidents get 9 months. So I think this is better for the whole country, and it's better because he won the popular vote. And you got to give him credit. Right. He's the first non-incumbent Republican president to win the popular vote in 38 years. So this is making the country stronger for that.
So you just were with the incoming President Trump.
Yeah.
How does he feel about because we're paying a lot more attention to who's visiting Mar-a-Lago than to who's visiting the White House these days. How does he feel about that?
More is happening in Mar-a-Lago than happening at the White House.
Right.
And that's been happening for a long time. But look at it, the world leaders are coming. Look, I spent a lot of time with this president. He's meeting so many people, and all the world leaders are coming. I think it's stabilizing the world too, because if you look around the world after COVID, most leaders of democracy have lost.
Okay, so go around the world with us. Yeah. Justin Trudeau may be out.
I think he's out.
Okay. UK, I don't know what's going on over there.
He has not got off to a good start, and he's in real trouble. So what? Macron, how many times he changes? You know what?
So how does this all? So if we're sitting here together a year from now, what do you think this whole world looks like, and what is the impact of either Trumpism, MAGA, or maybe Elon Musk ultimately?
Well, I would say with Trump, I think the world becomes more stable. I think the Middle East calms down. I think if you look to Europe, I'd look to the Prime Minister of Italy. Now, normally the Prime Minister of Italy only lasts a year and a half. She is a unique leader, and I think she's becoming the leader of Europe. And you just watch, she was at Mar-a-Lago Saturday. But she is a unique leader, and she's genuine. And I think Macron's gone, I think Europe and the others. Germany, what have they done, right? Ever since Merkel. Trump does something different in stabilizing the world. Like you talked about that conversation on tariffs.
Right.
Prior to the election, most of the questions you would have if you were worried about, is Trump going to put in across the board? Well, now you're seeing he's being more selective.
Well, that's in the Washington Post today, that it's going to be select industries, and I guess that gives you more room for negotiation.
Trump uses it for two different ways, right? And when leaders of other countries call me to ask about what's going to happen, I tell them this. Well, how do you treat America? Mm-hmm. If you want to know what Trump thinks, he's going to look at your country and say, how do you treat us? And don't say, well, this is what we've always done. That's not the correct answer. Right. Treat America with respect that you want to be treated by us. That's the way Trump's going to look at it. You could be his friend, but you can't treat America poorly and think we're going to take it anymore. So it's all part of a negotiation, but I think the world's going to be in a stronger place economically for this.
What happens with Ukraine?
Well, Ukraine has fought for quite some time. Now, I have a belief what Putin has done is similar to Hitler. And he cannot invade another country. He's lost how many men, and now North Korea? It creates a great deal of fear to me, looking a little more like 1938 when you have this axis of evil. I think Ukraine will come to a solution, but my biggest concern is you have to break that axis of evil from China, North Korea, Iran, and Russia. That is a scary part for the rest of the world. That's what keeps me up at night.
Finally, Elon Musk.
Yes.
Co-president, what's going on here?
No,
but tell us.
That's a talking point.
I know, as somebody who's inside the room,
mm-hmm.
What's his role really going to be, and what do you see going forward? And I asked because he's spending an enormous amount of time, obviously, in Mar-a-Lago with the president now.
Yeah.
He's spending an enormous amount of time on Twitter, or X, and now he's working on what's going on in the UK, it sounds like. But he also has these other businesses, and I just wonder, at some point, is there enough time in the day? I mean, the accordion of his life to actually be able to do all of this.
As you know, I've known Elon for a long time. And people have bet against him for a long time. And I tell people, don't ever bet against him. And he's always had a lot of businesses, and he focuses on a few at one time while he gets the others running, and he's hands-on. The thing I've always known about Elon, and we have dealt in politics for a long time. He doesn't really drive on, am I Republican or Democrat? He's an independent, but he's really a constitutionalist. And the thing that drives him the most is the First Amendment. It is what drives him. And what he has found since he bought Twitter, he watched what government had done to people. It was a fundamental change in who he was. I was to the right of him. And then after he bought Twitter, he came to see me, showing me things that I didn't even know government had done. And what he truly believes in this election. He would say to me, if we lose this election, there's no other place to move. He moved out of California. I'm still there. He goes, I can't move to another state. So he really believes that he's working for the goodness of this country and for the Constitution. And he's a driven person. And when you push back against him, he will stand up for what he believes in. I think it's going to be very positive. Now, Doge to me is great because our greatest threat to this nation is our debt. And no one really is paying attention to it.
Are they going to have more teeth than the Simpson-Bowles Commission had? Will Congress listen?
They need to. Okay, what I propose, we need to deal with this the way we dealt with BRAC, the base realignment and closure. Yeah. What has to happen is Congress and the Senate needs to put teeth in this, where if whatever Doge comes up, they're guaranteed to vote on the House and the Senate, guaranteed to vote, and no amendments. Let it vote up or vote it down. That's the only way you'll get beyond the partisanship. If this goes to committee, it will die. Yeah. If this gets members to, if they get to make amendments to it, everybody's got some. He's an outsider, and what I would do, he's embracing anybody that wants to come into it. I mean, you talk about getting rid of the swamp. Any American can give an idea, and the power of the idea can win.
We're going to have you back. We're out of time. Yeah. We should actually talk about the HB1 visa issue, because that's actually a fascinating thing that we've seen this sort of blowback on that. But we've got some breaking news to bring everybody. Thank you, sir.
Thank you.
The Fubo deal, I should say, with Disney that was reported, well, it's now official. Disney's going to own 70% of the combined entity, and Fubo's management team will operate the new combined live TV business. It's going to operate under the Fubo, a publicly traded company name. Fubo says all litigation between Fubo and Disney has now been settled, which should be a green light potentially for Venue, the sports service between Disney, Fox, and Warner Brothers. We'll see. And we'll bring you some more news on that after this. Squawk Box coming right back.
welcome back, everybody. Our next guest is out with his annual Top 10 Trends piece highlighting financial predictions for 2025. Want to welcome Rashir Sharma. He is the chairman of Rockefeller International. And Rashir, I want to run through this because you've got a really interesting list. Your first two items on this list for your top trends are number one, the return of the contrarians, and number two, momentum crashes. Do you think that overall the markets are going to be faced with a lot of trouble this year?
Well, I think that if I can start off by saying this, Becky, which is that in my 30 years of investing, and I've been coming out with this annual list practically for most of those 30 years, I've never seen such strong groupthink prevail, which is that at the start of this year, it's almost everyone seems to have the same view, which is that the American stock market will keep outperforming, the US dollar will keep rising, and the AI trend and mania will continue with the big tech companies benefiting. And this is really a bit contradictory to the fact that we have elected to office someone who's supposed to be the biggest disruptor. And instead, what we are predicting here, or at least the groupthink is predicting, is that the trends which we saw under Joe Biden and really over the past 10 to 15 years will continue undeterred. So I think I take issue with that. And I say here that I feel that the US market in particular is possibly set to underperform in 2025. That really, I think, is my big call for 2025. The valuation gap has never been this wide. The sentiment differential between US and the rest of the world has never been this wide. And I think the situation is unsustainable where the US economy is less than 30% of the global economy, but the US stock market's weight now in the global MSCI index is approaching 70%. And as that old line goes, if something can't go on forever, it won't. So that really for me is the big central call of 2025. And what the trigger for that could be, there are many triggers I point out, but a leading trigger could be that the attention could finally turn to America's yawning fiscal gap, because there is no sign that that's going to retrench.
Let's focus on that. We're almost out of time, and I'm very sorry, Rashir, because this is a fascinating list. But I think that's the one that really jumps out at me next, too. This idea of punishing deficits. We've had them for a long time, but you think the markets might actually sit up and take notice now?
Yeah, that's because across the world that trend is coming, right? Which is that we've seen the markets take notice of that in places from Brazil to UK, now of France. The UK has been given a hard time with that, but the US has been given a free pass because it's got the world's reserve currency and the sort of attitude that, listen, people have been warning about this rising deficit for years, if not decades, so why worry about it now? But the US has never run a deficit which is such an outlier. There's no country in the world today running a deficit number like the US is running, and that has been artificially propping up growth. And I think there is a sign now, or an increasing sign, that the bond market is beginning to take notice. And I suspect as this year goes on and the Treasury tries to sell more paper on the longer end of the curve, that will begin to really prick markets. So I think that, yes, that is something which could be a leading trigger. But the big call still is that I'd be shocked if the groupthink is so right as it is now with its strong conviction of US outperformance.
Rashir, thank you. Squawk Box will be right back.
Educator.com.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer here at Post 9 of the New York Stock Exchange. David Faber has the morning off. Stocks do look to add to Friday's rally ahead of a busy week of eco data, the Consumer Electronics Show, a jobs number on Friday. 10 years still pretty elevated at 4.6. On roadmap, chip stocks rallying. NVIDIA's Jensen Huang is set to speak at CES tonight. U.S. Steel and Nippon Steel sue the U.S. government after the president blocks their attempted merger. And Salesforce among the Dow laggards today, cut to sell over at Guggenheim. Let's begin with the markets, though, kicking off another shortened trading week, Jim, as we'll be closed for business on Thursday.
Right. Today is one of those days where, because of that, they're pulling forward some bond auctions. There's a 3-year, and then today a 10-year, and then a 30-year. And I mentioned those first only because the 30-year is back to where it was November of 23. Very negative article about housing today in the FT. Trying to figure out what sectors are weak versus the obvious sectors that everyone seems to like today, which is enterprise software. So you've got this kind of conflict where people like tech, and once again, the rest of the market seems to languish. I think that's because people perceive that the rest of the market is hostage to rates, and that tech is not hostage to anything. Right. So I'm aware of that, and I'm just concerned that you have this speech tonight, 9:30, Jensen Huang, and everyone's every word we're really kind of just whatever he says is going to move things.
Yes.
Against that, there's a really terrific piece. I like the FT today. They're really terrific. I like it every day. I don't need to about private equity and private equity trying to get into the 401k business. And Mark Rowan, who is a close associate of David when it comes to knowing about what's going on in private equity, should know that Mark Rowan, CEO of Apollo, says, I jokingly say sometimes we levered the entire retirement from market to NVIDIA's performance. So on the one hand, we've got the NVIDIAs of the world, which everybody likes. On the other hand, there's just these stocks that really are hostage to rates, and no one wants them.
Yeah, you mentioned the issuance from Treasury this week, $119 billion with rates at 14-month highs.
Right. I mean, that's why I start with those, because that's what's going in the end control. Because if we do see a spike in the 30-year state of 5, then that'll start interfering with this tech rally that it seems to be motivated by a lot of analysts coming out and saying, this is the time. There's now re-acceleration of tech spend. Interesting, the Salesforce that you mentioned is one of the few where there's not to be acceleration. I think that is dead wrong. I think that analyst has missed the whole move. I think Agentforce is incredible. It's starting to really make, from my work, Agentforce is coming on very strong. An interesting post this morning by Mark Benioff saying that they're really going after healthcare. And the easy one there is Viva. And I think that Viva is a very high multiple stock, and I think Mark sees a lot of opportunity in that.
So look at the downgrade.
Stay focused. This is fatuous.
Yeah, well, I mean, they're skeptical about Agentforce. They're talking, they argue that double-digit growth is in the past. It's more now about 5 to 7 to 9% growth.
Agentforce represents an acceleration of sales. It's Salesforce. And I'm not saying that my research is necessarily better than that analyst. I am saying that I'm close enough to recognize that Agentforce ads are working and that Agentforce is doing quite well in different verticals that have eluded Salesforce, and that's not included in the data.
Right. On the flip side, Piper today does name CRM, Snow, and Microsoft as top picks for the year.
I think we have to go back to what a lot of people feel was just a kind of a ho-hum piece. Brad Smith's his blog entry, and really much more than that. He's offering an AI manifesto, and the reason why I say it's important is because a lot of people said, listen, he's talking about $80 billion in spend, so what? No, he's not. He's talking about the new industrial revolution, which is what you're going to hear tonight from Jensen. The new industrial revolution is such that you can't afford to not spend, not because you're worried about what other people are doing, but because it's so bountiful. And I think that one of the things that Jensen is going to talk about today are all the new use cases. It wouldn't surprise, this is tonight's CES talk, it wouldn't surprise me that we start hearing about robots. It wouldn't surprise me if we didn't hear a lot about Tesla. Tesla and self-driving car, Tesla and the neural network that is based on NVIDIA.
Yeah. Tesla, Stiefel goes to 492 today. That's good to know.
That was a very interesting piece.
Yeah. B of A, Jim, looks at what chip stocks did for CES last year on the 8th of January. NVIDIA was up 6% on the day.
Yeah, well, I think we also have this positive news about Han High, which we call Foxconn
revenue,
saying that things have accelerated there, and that helps NVIDIA, it helps Marvell. They talk about AMD, which has a keynote, by the way, Micron really soaring. Linked also to Apple AI. I think that there'll be people who come out and say that too has been known. I find a lot of these things where people say that's known. I follow everything.
This is what you wrote this morning. This morning you wrote the Bears will come in and say we knew that, but we didn't. That's what
I've been watching Frank Holland this morning. I'm seeing these stocks pop, and I love watching Frank's show because you get the unmitigated tape, and it just boom, it's just saying these things are. And then I know that I read later. Well, everyone knows this. Well, I didn't know it. No, I follow Han High really closely. Again, not like the Salesforce where I'm just saying these analysts don't know anything, but this is my life, okay? I wish my life were better and different. Like, I wish I were like an NFL coach / someone who got fired.
It's Black Monday.
Right, it is. But I come back and I say, well, look, we didn't really know that Foxconn was that strong. And we didn't really know going in that Salesforce Agentforce is doing very well and that the ads that Matthew McConaughey has, which, by the way, he wrote, are being very effective. I think that you have to drop your skepticism about things you know. Brad Smith, not talking about 80 billion, talking about how you have to spend billions just to be able to stay in the game because there's so much opportunity. Jensen Huang will be talking about how if you spend $1, you get 4 times, and he's going to give you the use cases.
Kind of leads you to Amelia's today upgrading Cisco on that front, and he argues that we're only in, quote, year 3.
I know, going back and forth with Ben today, and Ben writes, and I was friends with his dad. Yep. I am friends with his dad. He was a great chemical analyst at one time. And I think that Melius has got a beat on this, and I think there are a lot of people who realize that Ben is not a cynic, that Ben is looking for opportunity. I think Chuck Robbins has so many things going at Cisco, in part because they're kind of reformulating their whole business, but the Splunk acquisition is proving to be good.
So CES is one big story tonight, and we'll watch chips as a result. The other is this Washington Post piece on tariffs, which reportedly aids considering universality, but only on critical goods, defense, pharma, energy, things, and that's had an effect on the DXY this morning.
Well, look, yes, and I see copper trading up. The one I would mention, we've been buying a stock. Sometimes I like to mention things that I do wrong because I can also mention things I do right if I do wrong. We've been buying Constellation Brands, and it's basically the Marianas Trench. I mean, we just keep going down, down, down. All we were looking for was were tuna, and what we got was a stock that makes beer in another country. This would make it so that you would not have a tariff on beer. I don't think it's a very popular thing to say, you know what, working person, the price of beer is going up. Which, by the way, Lena Khan, in her last action suing distributors, when I speak to distributors, and I'm very close to them, that last one was a universal increase in the price of alcohol, completing her completely mystifying notion of making it so that anything that is good is bad.
This is a club name.
Very much so.
They report this week?
They report Friday, and it's been wrong because we know from Diageo, we know from Brown-Forman that when you do everything, including in the end put a sticker which says it causes cancer, you really have a revulsion of alcohol of historic proportions. I come back and say that alcohol is a cyclical business, not a secular business, and people will come back to drinking. But GLP-1 against drink, Surgeon General against drink, cannabis against drink, but maybe not tariffs against drink.
The other group benefiting this morning from the tariff story, in addition to alcohol or cars, GM and Ford are doing some nice work.
Thank heavens, because those stocks have been in a bear market of outrageous proportions. Ford can't get out of its own way. Now, a lot of that is people worried about warranties. They gave you a lot of longer-term warranties, and the cost of fixing a car now versus 5 years ago is probably something that the CPI would tell you is up the most of anything, including insurance. It's the cost of fixing a car that is dramatically higher. I have Brian Krasanich on tonight. Now, he's Cerence, and of course, that's what we're going to talk about because of a deal with, of course, NVIDIA. But he knows the auto business. Cerence is auto AI. And I want to ask him what the hell happened, because the previous job he had was CDK Software, which was bought by Brookfield in a leveraged buyout. This man knows about cars, he knows about semis. Something's going on that makes it so cars are too expensive to repair, and it's really hurting the working person.
We mentioned the Stifel price target bump on Tesla. The other news regarding Elon Musk is United, of course, going to start testing Starlink Wi-Fi as early as this spring.
Phil LeBeau with just fabulous reporting this morning, talking about it's going to start with regional and then go national. And I think he and Andrew Ossorkin were joking about the idea that one of the most frustrating things is when you pay a lot for GoGo and then it goes down. Now, Starlink makes a deal with the Italian government. My Italian holdings, I guess you could say, we switched to Starlink because we cut our cable bill dramatically. Now, one of the things that's been missing in the existential articles that I'm reading is that Starlink's going to come after our cable companies. T-Mobile downgraded today in two different firms. They came out after that's that fixed wireless that everybody's worried about, this valuation of T-Mobile. The coming collision of people trying to get in your house is going to be monumental and happening sooner than people expect.
Although the only friction may come from Elon Musk antagonizing the leaders of the UK, Germany, virtually everyone in the EU.
Elon Musk is amazing. From the very beginning, when you have ambassadors, you're supposed to not irritate the host countries. This guy's irritating all countries, and he didn't have to be approved. At the same time, when you say something negative about him, or by the way, and we'll get to it, Alex Karp, a downgraded Palantir. Yes. I think that you live in fear. Anyone who downgrades Palantir, look over your shoulder, please.
We're going to get to that. We're going to get to that downgrade. We'll talk some U.S. Steel and Nippon, as we said, suing the government after the White House did block their merger deal. Bunch of upgrades as well on AT&T, Boeing, HPE, Bros, Capri, with futures pretty solid on this Monday. Don't go away. U.S. Steel and Japan's Nippon Steel are not giving up on their plans to merge. Both companies are suing the federal government over the president's blocking of their proposed deal. The plaintiffs allege the White House's decision was political, violates the Constitution, Jim, their right to due process. They argue the unions had undue political influence on CFIUS and their good faith review.
Well, there's two comments here. One is Nippon Steel, and it's very statesmanlike. And the other is the U.S. Steel, the CEO of U.S. Steel, David Byrd. I'm just going to quote this: says Biden's action is shameful and corrupt. It's political payback to a union boss. The Chinese Communist Party leaders in Beijing are dancing in the streets. Now, I'm not quite familiar with they even know how to dance. Someone guy I've ever seen dance over there is Elon Musk. But it does seem to be a very contentious and ugly fight that won't seem to end, even though it's a very small company. It's symbolic of, frankly, it's kind of a little Macbeth-like. It's full of sound and fury, signifying nothing.
Yeah, there's actually two suits. One is against the government, the other's against Cleveland Cliffs.
Yes, well, I mean, Cleveland Cliffs has said over and over again, they're going to get it. Cleveland Cliffs is going to get it. Now, he's gone silent here. I'm speaking about Lorenzo Gonzalez. He's just gone silent. I've been trying over and over again to get him on air because he's very, I'd say, effusive about what's going on. But Lorenzo Gonzalez has told me again and again, after they do the Steelco deal, he has the room to be able to do this. Meantime, his stock has just been clubbed. So I don't think people necessarily want to stock, but the steel stocks altogether have just been horrendous. And a lot of that, I believe, is because of Mexican transshipment of Chinese steel. That's what the Nucor people would tell you is keeping things down. Nucor guiding down again. A fine company that really, I think, it is spot on when it says that it's Chinese steel depressing the market.
You seen the percentage of S&P material names that are above the 50-day? 4%.
The material stocks are an untold story of the underneath what's going on. You see the Fed, we're not, inflation not under control, inflation not under control. And then you look at the materials and you say, well, one thing that is under control is every building block of everything, whether it be wood, whether it be plastic, whether it be metal. These are, they're just falling apart. People aren't talking about it because we're so busy talking about AI and what it can mean. AI is great for productivity, but we should accept the fact that materials are going the right way for the Fed.
Is there any expectation that the outcome on Nippon U.S. Steel would be different in this new administration?
No, they both seem to follow along with that same decision, which is that it's a somewhat, remember, Nippon Steel answered the objections, which is that, look, Nippon will get in there, they'll start closing thing, and they basically said, listen, we won't do that. And no one seems to trust Nippon Steel. I think what's odd is that we're as skeptical about the Japanese as we are about the Chinese. But the Japanese have been our friend, and China, which, by the way, maybe remember backs Iran, has not been our friend. But we treat them equally, and if I were from Japan, I'd be questioning what exactly is the Biden administration doing? They're paying a heavy hand against us and not as heavy hand against China, even though China's spying and has gotten, even they've gotten the TikTok.
So you don't think it would be a foul of an America First agenda to let the Japanese do this?
No, but I think that everyone's so caught up in the rhetoric and trying to get Pennsylvania, even as the people of Pennsylvania who are from that area are afraid that if left to its own devices, U.S. Steel could close a great number of facilities. It's very convoluted because a lot of people just wanted to win a state and said a lot of things that they thought would win a state, and now we're stuck with their campaign rhetoric.
We'll follow the progress of that suit, see where it goes. We'll get Kramer's Mad Dash, countdown to the opening bell, take one more look here at the pre-market. Pretty steady as we get ready for a busy week of not so much earnings, but definitely macro, including some PMIs later this morning. Stay with us.
I'm back. Jake Paul, I'm back. Oh. Well, that's real cute.
Mad Dash as we count down to the bell, referencing this Palantir call we mentioned.
I alluded to this call, but I think it's kind of symbolic of where we are. Palantir is probably the most highly valued enterprise software data analytics company, and you see this. It's kind of also been captured retail. Some people say this is the GameStop of our era. I totally rebel on that. I think what really is, this is a very, very high growth company, and we really don't know how to value it. We don't know how to value it because Alex Karp, the CEO, is basically saying, listen, our valuation is confused. We're the fastest growing, but we're not really going to tell you everything that we do. I am a believer in Alex Karp. I ordered his book, I read a lot, I've seen his videos, and I think that what he's got here is something that is much more special than Morgan Stanley talks about. It is the early stage of AI, and Alex Karp really gets it. It's both defense, but it's also consumer. And I've growing respect for what the company's trying to do, and I think that even though it seems 100 times earnings, it may turn out to be much less in terms of the multiple. It is the highest, got the highest so-called rule of 40 about its growth and margins of any company. And my hat's off to these guys. If you go back and read the last couple of analyst reports, it really is the exciting AI company of our era.
Is the exposure to government a plus or a negative?
I think if it weren't for the fact that you have people like Elon Musk who are aware of what he's doing, Peter Thiel behind the scenes, I would say it's a negative. But now I think it's a positive, and the main reason why is because the Defense Department would be rationalized. They understand the procurement process. They would really take out a lot of the costs of the Defense Department because they think that what's really at stake is cyber, not necessarily hardware, and I agree with that. I find myself agreeing with Alex again and again, even as he's certainly an abrasive personality, but so is Elon Musk. And I've tended to try to temper my view that he is abrasive, knowing that he is in some ways trying to be a street kid from Philadelphia, not unlike Bernthal, who tries to be a street kid from Baltimore, who's really from an upper-class group in Washington.
Okay, I'm back. Man.
Yeah, he has been outspoken about the shorts.
It's cold outside.
Is it your favorite enterprise, Nick?
I talked about it this weekend and how I struggle with it. Salesforce is my favorite. And I said, look, I would love to put it in my Chapel Trust, but it doesn't fit any parameter other than the fact that I think it's going up. And that's a good hedge fund reason to own, but certainly not a good portfolio reason to own.
Interesting. There's a look at Salesforce. We mentioned the Guggenheim downgrade earlier today.
Yeah, I mean, look, I think that you have to either believe in the numbers of Agent Force or you somehow don't think it's caught fire. And I think if you read Mark Benioff's blog, you would be hard-pressed to think it's not caught fire.
Yeah. The other one on this one were Sam Altman's comments about AGI and the likelihood that we will see agents work their way into the workforce this year.
And I think that's what Jensen Huang could be talking about, which is that you're going to see robots everywhere. One of the notes that I thought was very encouraging, published this morning by Mark, was that healthcare is an area that we haven't seen. When you do a health
Salesforce took a pretty good dive.
One of these
FDA tests for a drug that I've invented, and you can't afford it if you're an individual. There's no individual for other than maybe Musk. But if you had agents that could check in on the patients, then next thing you know is that you would have very inexpensive cost to be able to get in front of the FDA. It does
It's up still 300%,
Those calls and a bunch of others as
250.
well. Coming up in about 4.5 minutes. Don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
AVGO is up 500. These really need to come down a lot. There's no doubt in my mind how expensive they are. Okay, man, I cannot handle the cold. My fingers are still feel like they're frostbit. It's about 10 below in Missouri. It says 15, but the wind chill. My doors were completely iced over. I couldn't hardly get in my car. I was afraid I was going to break the handle. Penny traders are a whole different world if you hang around them a little bit. They're more or less pump and dumps. I always look at the float. Then I look at the news and I see if they have any cash. And they're always having offerings, and we've got 2 minutes left. We've had such a great run already this morning. I think we got to pull back some, but we're going to find out on the SPY. We did pull back here into open. RITM's at that third resistance level of 1122. Randy. Google is up. That's probably undervalued. See, they dumped it right here first thing in the morning at SPY. You know, I listen to CNBC and I just get so pissed off at them. All I can do is be negative.
Busy week for Fed Speak, already getting the first speech of the week out of Lisa Cook. She makes some
I
comments.
don't know what
Jim,
they're trying to
about
do.
AI and productivity, but does basically say the Fed can be more cautious on cuts.
Look, I think that the Fed
Boom, boom, baby. Yeah, it's just up too much. Now, Rime's back at support. It had a huge breakout this morning. There's 18,000. I'm watching Rime. and MEGL. SPX opened up too high. So let's look at SPX on the bigger time frame. Nile's popping. We got the 608 at the 200 SMA, 6,007. There's a gap right there. And that's right at the 200. There's the previous top right there at 597 on the 5-day. So SPY. Now you listen to CNBC, they think it's the end of the world. They're just a bunch of liberals, progressive liberals. You have to understand that. So that's what you're dealing with. And that free money. It's taking its time this morning. Not sure what the puts are. I had one of my best years last year when I really got serious and started trading the SPX. I was having $3,000 or $4,000, $5,000 days. Let's see what's on the negative list on the watch list here. That's not the one I want. There it is. Everything's up. SMCI, it's up like $3. Apple called that one out. FFIE's down to 33. I got to keep an eye on it. AVGO up $5, $6. Tesla. Tesla hit 425.27. I called that out in the video. SPX put. Today's the 6th. Now, these options ain't that expensive today when their stock's up. When they were down last week, they were freaking expensive. Now the puts are expensive. Now we got a huge gap up too. $50. of the 5960s. TSM's up $8. Crazy. Start a morning out like that. They got Boeing had an upgrade, and I think it's not ready for any upgrades yet. Tesla's back here at the 200 right now. We just had 3 black crows. SPY's the only one I think I can trade and get away with it. We got 5960s at 550. Look at the penny stocks. MEGL's got 60. MEGL has 61. Oh, there you go. Now we're getting somewhere. Looks like it was halted. No halt. Correction, Magic Empire, H1. Keep gravitating to Google for some reason. SPY has a triple top. Okay, SPX puts. $59.60s at $4.90. Put a tight stop on this in case it wants to break out. Damn, look at it already shooting up. Fuck. They're pumping it up. SPY broke that resistance level. $3.60. QQQ hit my 525.95 area. Google's just shooting straight up. Knife. I got a 425 average on these two calls right here. It's a bear flag. I can get out even right now. There's some penny stocks. Miguel's right at MEGL. Darn, man, this thing ain't right. Mobot pulled back to my buy zone and bounced up a little bit this morning. Higher at the company announced a 4.6 under ATM agreement with Generated. They had a direct offering of $7 million, priced at $175. Ugh. That's MBOT. Uber's up. What a monster trade here. Got stopped out of SPX. We just hit my resistance level, a little bit shy, a buck shy of it. Minus 50 bucks. Tesla has a double bottom out of a snake. Mike's here. We missed you, buddy. We didn't know nothing. What happened to you? Everybody tell Mike how much we love him. I was in the SPX, took a $50 loss. I'm in Tesla long. That's about all I got going right now. Google had an outstanding breakout and pulled back a little bit here. Next time you take some time off, let us know. New York's a crazy city. I didn't know if you caught on fire or what. I'm kind of attached to you. I don't know why. Now here comes my puts now. She looks cute in that turtleneck.
introducing new frameworks and models that people can use to build applications. And on the Blackwell side, we think that Blackwell is really on track. We think the concerns were overblown going into last year, so
yes,
any
they
sort of
were.
indication that that's going well will be a positive catalyst for the stock.
So do you expect
Glad you have the guts to
any
say it, honey.
updated numbers, or is this mostly product and sort of innovation talk given the setting?
These types of events are mostly product and innovation talk rather than numbers, but you can easily imply if things are on track, then their guidance all of a sudden becomes achievable, and people have some concerns about them being able to deliver billions of dollars of Blackwell. So any sort of commentary that would indicate that the numbers are still on track would be positive.
Would be positive.
What is the kind of next step for product? Just to come back to that point, to your point on Blackwell, that seemingly is now sort of an assessment of how many buyers show up and how ready the machines are to be bought, kind of a supply and kind of demand basic, because we kind of know the product. What might surprise in terms of either the applications that they're offering, the software, or just generally kind of from the consumer standpoint, what are people going to be buzzing about?
Well, I think the one thing that people kind of don't appreciate here is how model training is changing over time. And everybody is asking where is the next demand leg going to come from? And this is really where we see a lot of it coming from. Models are going to be trained in a very different way that they are trained today. It's going to be more of an iterative process that will require significantly more compute. So I think any detail on that, basically driving exponential growth for accelerated computing, will be very valuable to get from this conference. So in the past, we used to train models and then do inference. In the future, we're going to be doing more of a continuous process of constantly training and improving the models.
Well, when he's called the demand insane for Blackwell, I guess that sets the bar pretty high, but stock moving close to the record like it believes that it will be justifiably insane. Thinking about the price action, Ivana, kind of what is your baseline on that right now? Where do you think NVIDIA could get to this year, and what kind of path do you think it takes?
Well, we are expecting pretty significant upside to the numbers. So we think they're going to be able to deliver $200 billion just from Blackwell alone. And if you do the math on that, even if you assume constant multiple, and if you assume that they can continue to grow, you can see this stock compounding at a 30+% rate over the next several years. So we still see pretty solid upside. At some point, the upside is not going to be as exponential, but it will be more of a compounding type upside, and that's what we expect for this year.
Okay. The Taiwan Semi and Hon Hai news good overnight for the narrative?
TSM?
Oliver, I couldn't hear very well.
Taiwan Semi this morning ripped.
What happened there, buddy?
Sign. So I think it's a very good sign for the space overall.
Tom, let's talk some options. Hang with this, Ivana, for a moment. When you look at the options in NVIDIA, how wild is it? I mean, this is not an earnings report, but when Jensen takes stage at a big event, I would imagine implied vols are creeping up, Tom?
Creeping up just slightly. They're still relatively low. The IVR percentile rank still around that 25% level, so in the bottom 1/4 of implied volatility levels that we've seen over the last 52 weeks. Now, last year, CES was on January 8th. Stock rallied 6% after that first keynote that he gave. So expectations pretty high. Option flows on upside calls, out of the money calls are expanding as we talk. The put call ratio really low at this point because everybody's piling into speculative calls to the upside here. So I looked at it from the perspective, if you think it's going to go up, maybe you take that bullish stance, you buy some calls, but maybe offset some of the costs on it because the stock has rallied pretty significantly over the last few sessions. So going up to the January 31st weekly cycle, this 25 days to expiration, I'm going to buy the 148 strike call that's slightly in the money. It's got that higher delta. And then against it, because maybe it gets back to all-time highs, maybe it continues to move up. I sold the 160 call against it to offset some of the risk and cost on the bullish call purchase on the 148 strike. $12 wide bullish call vertical, paying roughly about a $4.50 debit for it. That's going to be your risk, $450, and that spread can expand to $12 if it gets above 160. And you have some flexibility as far as trade management goes on this one because you're buying a directional bullish vertical, right? So if the stock pops to 155 tomorrow, 156, this thing expands maybe to $7, $8. That gives you the opportunity to maybe parse some of your position if you're buying multiple spreads on this one, or just close it all. You don't have to wait until expiration to exit this trade. If you get the move you want sooner than expiration.
I mean, it's going to do really well if we get past the high.
Yeah.
You know, obviously your gains will get capped out, but you know that's kind of a logical approach, I think, given the chop that this has been in. Until it breaks out, it might well be range bound. So it'd be a pretty harsh rejection though if it gets up here to 150 and then turns around.
Yeah, it would. That
Yeah.
that all-time high about 152.
This is why I like the direction.
Yeah, you only need a 2% move from current share prices to get above the break even here, about 152.5.
Right. Ivana, when it comes to the other stuff, is there room in 2025 for the second-rate chip trades to take a stand, or have we learned that the numbers are just too powerful for NVIDIA to allow second-rate players? I mean, AMD was pretty rough in the second half of last year. Bunch of chip makers' charts look totally different.
Well, Oliver, it's going to be interesting to see. The downside actually for AMD last year came more from the custom chip makers. So I think there is room for several players here.
I love you.
However, it's very difficult to compete with NVIDIA, and really the custom chip
To
makers
compete
have
with
made
NVIDIA.
slightly
I
more
love
progress than
it.
AMD last year. So we're watching this very closely because the Microsofts, the Amazons,
I could
and
trade
all,
with
they're
you.
partnering with companies like NVIDIA, like Marvell and Broadcom to develop their own chips. So AMD is having a bit of a rougher go, but I do think the market is pretty large and there is going to be a space for
We had a
multiple players. It's just gonna take a little
152.89
longer
high
for somebody like AMD to gain traction.
Okay.
on
Thanks a lot.
NVIDIA.
Good to get your take as always. Thanks for being here. Looking forward to continuing the conversation throughout 2025. Ivana Delevska, Spear Invest, SPRX. Tom, what do the AMD options look like?
Implied volatility, the stock's rebounded a little bit. Remember, it was down 18% last year, but it's rebounded a little bit over the last few sessions along with NVIDIA and the tech trade in general. So I looked at a bullish trade in here if you think it's going to rebound even further, but I'm offsetting some of the costs. So instead of buying just a straight call or a straight call vertical like I did in the NVIDIA example, I'm buying an unbalanced call butterfly to the upside where I can offset some of my costs, where my risk is only what I pay on it, and it's lower just because I'm doing the butterfly. So going out to the January 31st weekly cycle, so 25 days to expiration, 3.5 weeks, you're going to capture earnings.
This
on
would be
on
like a
30th
long
28. So you have to
January
keep that in mind,
30th.
some event risk there.
We got a
But
butterfly.
buy one of the 130 strike calls, slightly out of the money to the upside.
Butterfly calls.
Sell two of the 140 strike calls, and then buy one of the 145 strike calls. So in essence, this strategy is you're buying a call vertical, the 130, 140 call vertical, that's bullish, and then offsetting
For the
some of the costs by
31st.
selling the 140, 145. You've got two short options.
Butterfly
for that
call.
140 strike. That's where you want it to go. But you can see here the apex
That's
of
62
profitability down
cents.
near that 140 strike. You paid that
62
$2.40
bucks.
debit for it. That's
What?
going to be your risk with the break even 132.40 to the upside. That's only about 2% above the current share price. You don't need a monster move, and even above 145, it's going to be more than a double in profitability on this one. But you do kind of want it to
God, I got to figure out how they do that.
towards that 140 strike over the next 3.5
Mine
weeks.
says 57 cents,
One more on the slow
53.
grind than the other trade for NVIDIA, which capitalized on a pretty quick pop.
Right.
Okay, fair enough. AMD joining in this morning, 3.5%. Thanks again to Ivana Delevska from Spear Invest. Thanks, Tom Light, for a look at the trades there and the options. We got some economic data we'll revisit. PMIs did come out and it rose from the last reading, but a little bit light. Didn't move the market too much. We'll talk about that when we come back.
Okay, we've been hovering up here on SPX.
Trading at Schwab is now powered by Ameritrade.
We got Darvis box going sideways, horizontal channel, have an upward rise snake
with robust charting and analysis tools
on SPY,
400 technical
flagging out.
Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash met.
Pushing up Nvidia by $5.50, almost 4%. All the Mag 7 are higher. Apple a little bit sleepy, but at least it's up. And Bitcoin with a pop just in the last 20 minutes, up $2,500 now to 102 almost, 2.5% for BTC. And green in a lot of different sectors too. So it's a pretty good morning that's underway here right now. 9 of 11 sectors are higher. High beta and tech stocks are leading the way, but there's other stuff in the mix too. Materials are up. Energy's up. Is crude oil is also rallying now to $75. And the greenback slipping again. So it's a pretty active start here to what's going to be a packed week. And we've got a lot ahead of us for the next hour. We're going to do some trading. We're going to do some preparation for the economy this year. We're going to take a look at Unity for a morning trade in a software stock. By the way, those negative notes we talked about earlier this morning in software for Palo Alto and Salesforce from Guggenheim to put the sell rating on those two companies, not having much of an impact. Salesforce is up and Palo Alto's now only down 1%. Software space looking pretty resilient. We'll talk commercial real estate and the risk of chaos in the riskier parts of that sector. And the chart master has got some interesting look for us on some notes this morning and some stories. Lifts up about 2% right now. We'll take a look at Citi as well, a bank that's rallying pretty big, up 3% on an upgrade. Financials also having a pretty decent session today, but really Citi standing out. So we'll take a look at that stock. All right. Firstly, though, looking at the market session. Also, we're going to chart Fortinet too as we continue to look at cyber trades, and that's up about 2% this morning. Let's go to Jeff Pierce.
SPX hit my resistance.
And some data too. We got PMIs out earlier this morning. We didn't hit them, Jeff, because the market didn't seem to respond too much. But let's go through the numbers here for the PMI composite. How are we looking?
Yeah, you're right. We're not seeing a whole lot of response here, but we did see the December service PMI numbers come in at 56.8. Versus 56.1 in November. Similar story here for the composite PMI at about 55.4 versus 54.9 in November. I mean, I think we're seeing activity levels, new orders, things like that pick up a little bit, and certainly the combination of both manufacturing and service picking up, but we're not seeing a ton of movement in the market related necessarily directly.
January 10th.
I think part of this, of course, is coming from what we're seeing out of the chip sector. And
425s.
You know, takeaways from President-elect Donald Trump and potentially narrowing those tariffs and not maybe.
Shut up about the tariffs.
Is what investors were worried about previously.
That's what I say.
Kind of back and forth on the tariff stuff, creating a little bit of volatility, but not too much. I mean, market overall kind of grinding higher. It seems like it really wants to.
It's like they don't know who Trump is by now. They've got issues. They really do. They've never owned a business or they've never negotiated with anybody. All we want to do is stop the human trafficking and the wars. That's it. They can't put them two together. We have an ascending triangle on the SPY, kind of an upper wedge. Put on my foots. Man, it's cold outside. Ugh. NVIDIA broke resistance.
interesting is, we've seen some concerns over Uber, especially around robotaxi. And we've got a CFO here that's saying that the stock is undervalued relative to their business performance. They describe this ASR as a strategic move to enhance shareholder value. They said that they're entering 2025
I'm gonna put on my
considerable
footsies.
momentum and expect to continue scaling out free cash flow significantly. That enables them to return meaningful capital to shareholders while still investing in growth. So they seem fairly positive. This seems like a move that they think is much needed, and it's going to enhance that, deploying that capital, and I think investors are liking what they see.
All right. Investors always seem to like buybacks, and the faster they arrive, better. So pulling forward some demand. And then speaking of demand also, New York's trying to lessen demand for going downtown right now. As today begins congestion charging. They're going to charge $9 to drivers that want to get into the congestion zone, and Uber's I think like $1.50 extra to drive through. So I don't know the last time you were in New York, but I was there a couple weeks ago, and every time I go, as much as I like that city, it's just so awful with traffic that anything seemingly can help here. But for Uber, it might also actually kind of help them too, even though it's going to cost more. I mean, the price of the ride going to go up, and I think people are going to use them instead of trying to drive their own. So.
Yeah, I mean, and that seems to be a trend we're seeing, especially among kind of younger demographics. There's less cars and relying on companies like Uber more. We know Uber's mobility segment holds about 75% market share in ride sharing in the U.S. And leads about 25% globally. So to your point, the impact of these types of moves certainly hit Uber the hardest, but sometimes in a positive way. If they can charge a little bit more, that certainly could be a good thing. We'll see kind of what comes of these type of rules. Uber, among kind of the competitors as well, seem to be very good at working within these new rules that come out around their business model. And so, first day, we'll see what happens. But with that sort of market share, we're certainly going to see the reaction mostly in Uber if it does, especially if it has any sort of negative, reaction to their numbers next quarter.
Yeah. All right. Good stuff. Thanks, Jeff. Nice one there. Uber shares up 3% this morning. Another winner and a up market. Thanks, Jeff Pierce. Let's go to Alan Nuttman, Chief Market Strategist at BullseyeOption.com. Excited as anyone, I'm sure, to see so much green on our official start to 2025 this week. Alan, what say you?
Well, I mean, we had a little pause in December, but obviously this is a momentum market. We're back above 6,000 in the S&P. We had talked a long time ago about 6,500 as the upside target. And if you take that 300-point drop we had here recently on those old highs, that brings us to 6,300. So, still 7-8% up above. But the NASDAQ is really where the potential push is going to be. If you look at it technically, don't think too much, but look at it technically. We could see
X just broke out
25,000 in the NDX.
All right. So that would be a nice little ripper there. Solid 3,500 points.
Yeah, momentum melt up. I mean, we haven't really seen the melt up in the markets yet. I don't know how sustainable it's going to be. Now, I do want to throw out that I'm a trader, and I think this is going to be the greatest time that we've seen, in many, many years for trading, because there's going to be big winners and big losers. It's not just going to be the boat float for everybody. It's going to be big winners and big losers. The administration has their prophecy project here. They want certain sectors to succeed, and they're going to push them that way. So, hey, I'm going to follow the money. I'm not going to fight it. And there's going to be amazing, amazing opportunities with that support behind those sectors.
All right. Seems like today you're going for a more kind of secular theme, though, trading Unity software, which is more about the sort of image and 3D generation that some of this AI stuff is capable of.
Yeah, so this is not sexy. Now, in the past couple of weeks, I've traded Cisco, I've traded ARC. I've traded ARC to the downside, and believe it or not, with puts. And then you can see last week that little downside push when we made new lows, but didn't follow through, new swing lows in the S&P and in the NASDAQ, and didn't follow through, and had a positive close on the day. That was my signal that downside, little push was over. Now, looking at Unity, this is a stock that's traded between 15 and 30 for the year, for the last 10 months anyways. So it made an important bottom base back in August, and it bounced 75%. Now, it has come back, and now it's about 15% off its high just 1 month ago. But what I saw was that bottom base, and I saw that money flow in leverage long positioning in the options markets was a signal that someone was seeing something, and that stock had really good risk reward to the upside.
Okay. So you're looking for this to make some higher highs, continue this trend that it's been putting in since the low in the summer.
Yeah, so it's got a nice strong move here. Now it's paused, is giving us a secondary chance to get in. Obviously this morning it opened up a little bit higher than what we were expecting. We're sitting around 25 right now. The $20 call is $5 in the money. I think it's trading for about 7. So now this is an important point as a trader and as your, as an individual. The question is, I never put in market orders. I put in limit orders. I was trying to get this option at 650. That didn't happen, but it's trading for about 7 right now. It's a May option, so I've got plenty of time for the markets to fluctuate up and down. But if the next few hours, the next day or two, I can't get that 650, I might raise it to 7. But I want to get in on my terms, because options trading and trading altogether, obviously, is all about risk reward. We want to get in our terms. It's hard from a leverage standpoint if you buy, when things open up 5% higher, because once that gap gets filled or things pull back, then your edge is kind of taken away.
Got it. Okay. So you're buying the 20, which is, you're deep in the money right now on a $25 stock.
Right. Well, 20 is an important level because 22.5 is the midpoint of the action for the last 10 months. And 20 is the 200-day moving average. So when we moved above that 200-day moving average, that was a signal that bottom was in place. So that's at a very significant level to lean on. Now, like I said, if this stock doesn't relax at all, and we can't get in at this 650 or 7 in the next couple of days, then I might have to raise my strike price, and I might not want to be that deep in the money. I still want to be deep in the money, but like you said, the delta on that's a little bit sweeter than I typically go. Typically, what I look for is an option that has a delta of about 70%. And then I can look for that to expand as it gets deeper in the money, but it acts like the stock. What I do is super simple. So for anybody looking in 2025, buying in the money options instead of the stock gives you limited risk and gives you bigger payouts on the upside from just modest moves in the stock. Like I said, if we just get back to that 30 level, this option, doubles in value, and we were at 29 or so just a month ago.
All right. Like it, software. A trade on a day in which the software stocks have proven resilient. Yeah, Alan, what's up?
I got to say Merry New Year, because you weren't here last week to start the new year. So, I was working hard. Merry New Year to you.
Happy New Year to you. All right, the 6th. I guess we've got one more day. I think the Larry David rule is Jan 2nd.
And it's over. But
yeah.
You weren't here, so it does apply. That's why I wanted to throw it.
Where's here? Where's here, Alan?
Well, I'm here.
Where? Where's here? We weren't live.
I didn't do any TV with you since the new year.
Yeah. So, if we weren't here, then you weren't here. Appreciate it, sir.
Here.
All right.
Good stuff.
Thank you.
Alan Luttman, Chief Market Strategist, BullseyeOption.com. Buying the money calls on a Unity, looking for some upside. Coming up, let's talk about commercial real estate.
Unity,
risks. Revisiting the discussion on a sector that remains perhaps a pothole that we can steer clear of, or is it a big one? We'll talk about whether or not rates are going to blow up the office space when we come back.
God, that thing's really down a lot. It's a kitty me. I'll be right back.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
Listen to me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Treasury bears are finding some momentum again this morning. We've got bonds selling off, a 10-year pushing past a 4.6, not quite to a fresh high, but it's getting there and makes us wonder whether or not there will be ramifications in the real estate market. Joining us from Peachtree, a real estate investment firm.
SPX double topping.
Principal and CEO. Greg, thanks for coming back to the Schwab Network. Good morning and Happy New Year.
Yeah, thank you. Thanks, Oliver. I'm glad to be here today. So thank you.
Absolutely appreciate that. Some good timing because we're getting ready for this year. So far, it's been generally pretty risk on and I think optimistic on the economy. Does commercial real estate, which had been a big threat the last couple of years, still linger as one?
Yes, I think as you point out, there's a lot of optimism. I think with the new administration, especially for commercial real estate, people are very bullish about what's happening. I think it could be argued that it may be somewhat of a head fake as it relates to some of this optimism, because for commercial real estate in general, you've got higher interest rates that are pretty damaging to the underlying values of assets. And the way we look at the market today, we feel like the intrinsic values of most assets are much lower than where a lot of the trades have been recently across commercial real estate. And with a lot of the policies of the new administration, we think that could be drivers to keep rates elevated, especially long-term rates elevated, which is going to be a huge headwind for commercial real estate over the next couple of years.
Where is the state of the industry in terms of its improvement from like the lows around the regional bank crisis and the deep concerns there that that was going to bleed over into major bankruptcies? Has there been some improvement, or kind of how do you measure that progress from about a year and a half ago?
Yes, I think it's a little bit more stable, across the banks. I mean, when you look at the regional banks, they're under a lot of pressure going back with SVB and some of the other banks that ran into some challenges and issues. I think there's still challenges within the regional banks, and how that impacts commercial real estate is traditionally 50% of the debt or the credit that's provided for commercial real estate assets come from a lot of the regional banks, community banks, and the national banks. And they're just not lending at the same level. I think there's going to be less regulatory pressure, within banks, but that doesn't mean that banks are in a position to start lending back to the levels that they were lending, pre 2022. And so I think they're going to continue to be conservative on how they approach the market, even in a less regulated environment. And so that does present some challenges, but that presents a lot of opportunities for groups like us at Peachtree, where we invest through credit across commercial real estate. We also invest on the equity side, and we're seeing a lot of banks that want to partner with groups like us because they just can't lend at the same levels. And when I say groups that want to partner with us, I'm talking about the regional banks and so forth.
It's a great piece of intel. What are kind of the terms of those partnerships? Do you find that you're able to kind of get them to a place they want to be at more kind of like stable rates? Because I think a lot of the issue now is almost 2 years ago, amazing, the regional bank crisis, was that there were going to be rates that were kind of unsustainable, that all these buildings were kind of going to stay vacated, that eventually this would come up against like this big debt wall. But 2 years later, and it seems like the debt wall has either been surmountable or taken down.
Yeah, well, a lot of the banks, extend and pretend. That's been a big factor over the last couple of years. So I think extend and pretend is coming to an end. But you're finding, the ways that we're partnering with a lot of banks. We buy a lot of paper from banks. Last year we bought, call it about 17 or 18 first mortgage loans from different regional banks. We did a lot of direct loan origination as well. But we also, when we do the direct lending, in a lot of cases we partner with the banks where they'll back leverage our positions. We're talking to banks about it, even JVing with us as we're doing this lending. But what's happened really just with the impact of higher rates, because commercial real estate, there's a lot of different property types. Some of the property types have had, gone through a bigger impact just from secular distress, like the office space, which, I think you're referencing to a certain degree with all the vacancies.
For sure.
I think that's, that challenge is still there, but it's starting to, I would say, stabilize some of that secular, distress that you're seeing. The balance sheet stress hasn't necessarily left. And that wall of debt maturities that you reference, that extend and pretend I talked about, it's only grown. So like over the next 2 years, we've got several trillions of dollars of commercial real estate loans that are maturing. So we have a record amount of loan maturities
Well, that's Tesla.
that still have to be dealt with. Fortunately, for the banks, there's a lot of capital on the sidelines that, is looking to come in and potentially either buy that paper or, looking to help, refinance them. Refinance these assets, but unfortunately that's going to be at the expense of the equity that's in these assets on the commercial real estate side. So the owners of these assets in a lot of cases are going to take losses or have to take on more expensive capital because as these loans are maturing today, they're maturing at
New high on SPX.
Call it 50% to 100% higher than where they were when the loans were originally made on the loans that are maturing. So it's much more expensive debt.
And so from your perspective, are you more willing to take on some of the credit risk than a bank would? Is that where it's kind of a give and take, a symbiotic relationship?
That's right. So we're willing to lend at a higher leverage point, so we're going to higher, loan to cost or loan to value than where a bank would settle at in most cases. And that's allowing for some of these properties to refinance that otherwise couldn't refinance. Because on average, we're usually providing 70, call it 70 to 75%, loan to cost, loan to value on these refis, and banks tend to want to be closer to 50 to 60% on a loan to value basis, and so we're able to bridge that gap to allow owners of commercial real estate assets to be able to refinance.
Where are you the most confident? Which deals are you willing to kind of take on the most credit exposure? Any type of particular vertical or subsector within commercial real estate?
Yeah, so we're very bullish across the hotel space. Multifamily we like a lot. Multifamily is going through a lot of balance sheet stress. So there's been a lot of challenges within multifamily just given the impact of higher rates because a lot of these assets trade at super compressed low cap rates, capitalization rates. And so as the market's normalized out, it's put a lot of pressure on those assets, but we're still bullish about the underlying trends within the multifamily space long term. So we like the multifamily space. We're doing a lot in retail. Retail was sort of like office, going back 15 years ago. Now that market's started to settle out, and retail's having, there's a lot of great opportunities within the retail sector. So we're doing a lot of financing in that space as well.
All right, that's encouraging. For the more fragile stuff out there, for those who have been extending and pretending, at what point does the interest rate market really pinch? Because we're sitting at 4.6, which is below the high for the year from last year, which is below the 5% high from 2023. So at least we haven't been getting increasingly tighter in terms of financing, but it hasn't improved much. If we do blow out in rates, is there going to be a sharp response then? Is that like 5%, the old high?
I think it's here at this level. I think if rates, if the 10-year went to, say 5%, it probably has it definitely has an impact. It probably has a bigger impact on the underlying values of these assets because a lot of them, are more sensitive to the movements of the 10-year Treasury rate because that's viewed as a risk-free rate. But as it relates to, to the performance of these assets or what's going to end up happening from the standpoint of being able to refinance because of the higher cost of debt, I think the impact's now. So I think you're facing that wall of debt maturities we talked about earlier, and as these several trillions of dollars of loans that are maturing, as they're maturing, that's where you're going to see the pressure, and you're going to start to see a lot of realizations of losses across these different properties. And that's going to potentially cause, at least from our perspective, it's going to cause the market to probably start to normalize back to where values should be on a lot of these assets as you see more trades in the transaction environment pick up, and that's going to make it very volatile, chaotic for in 2025 for commercial real estate, but it's going to create a lot of opportunities as well, we believe.
All right, great stuff. Good perspective. Thanks a lot, Greg. Appreciate that. Very helpful.
Yeah, thank you. Appreciate it.
Good stuff. Greg Friedman, Managing Principal and CEO of Peachtree Group. Confidence in hotels, multifamily, and looking for some potential stress still lingering in the upcoming debt walls of commercial real estate and dealing with rates that are moving. Bonds now down almost 0.25%. 10-year trying to get above 4.64. We'll look at charts next. Fortinet on cybersecurity has had a big run coming into 2025 at highs. We're going to take a look at some of the analyst notes that we haven't gotten into just yet this morning. An upgrade from Piper on Fortinet has those shares pushing back towards $100. We'll look at Citi, which is having a great morning. Big pop, trying to break out to a one-year high, and then lift.
LYFT.
Trading at Schwab is now powered by Ameritrade.
$20 price target on Lyft.
Trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
Uber and Lyft are gearing up for their robo-taxi revolution.
And access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way.
But Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? Can do.
I'll get out there.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
We're retesting support again on SPX.
Stocks are ripping. We've got the NASDAQ up about 1.6%. Jenny Horn and Rick Ducat looking at some charts, and let's start with some tech stuff, Jenny. Fortinet, which had a really good close to the year, is pushing $100 this morning on an upgrade.
Okay, if I was a betting woman, I would have guessed we'd start here because I do think this is the most interesting of all our analyst coverage.
Are you a betting woman?
Yeah, I kind of am a betting woman actually. I guess my P&L is looking so hot right now, but I am oftentimes a betting woman. But Fortinet I think is so compelling because if you look at the last 12 months, I mean it's our best performer by a wide margin. It's up 70% over the last 12 months, so had a pretty nice run. We've sort of established now this new range. I mean, right around these highs, we've pulled back about 2% from its recent high. But Piper Sandler today with even more optimism ahead, price target of $120 up from $100. Also upgrading their rating to overweight from neutral. And their survey results they highlighted do show across channel partners and CIOs both really see this firewall cycle ramping in the new year, with vendor commentary also pointing to some positive signs of this early refresh cycle taking place. They also do think that the chip, or their product acceleration, will continue to really grow in this space, and they think that Fortinet right now is one of the most favorable ways to even play this trend. So I think that that's really compelling. I mean, you look at like the trends that analysts are liking into this now new year. I definitely think that Fortinet fits the bill of one that's seen overwhelming optimism from the analyst community as we do begin like what will be the winners and losers within tech. And again, I think that their chart over the last 12 months and the health of this rally, but also the way the rally's been able to hold on despite volatility in December, I think has been huge.
Yeah, it's a great looking. Well, let's see what the chart master says. Mr. Rick Ducat has entered the building. What's up?
Well, I mean, it's kind of a chart with two phases here because if you were to stop right here, things wouldn't look so good here. This was a big turnaround point when we had earnings here, big gap up, and it sparked a longer-term rally that kind of changed the overall trajectory, it seems like here. Bit of a stopping point at this light green line around 84, then another big breakout on earnings after we kind of pushed above that previous high. Now we're finding ourselves once again making a new intraday high beyond our previous high from back in early November here, but dropping off a bit since the open. We're still up on the day, but we do have a red candle now forming after failing to make a convincing push above those previous highs. Much of the price action recently was kind of this triangular shape here, symmetrical triangle, kind of centered around that yellow 21-day exponential moving average. So we have broken out of our triangle, but we're retesting that boundary. Pretty common situation to have happen here. What the bulls would want to see would be a continued push above the previous highs and just kind of continue on our merry way from there. So RSI was trending downward, matching up mostly with our triangular shape and price. We are breaking above the red trend line though, so perhaps RSI following suit with our price action here. Now if we incorporate volume profile point of control, we can see that, well, the volume is kind of around the 95 area. So a big thick area of heavy trading, not really a clear spike, but just kind of a general zone to keep an eye on. Another spike down here, all the way near 75 is probably the closest one that with any bearing.
We probably hit 5999920.
113 or so, that could be a target to watch. For the lows, we had a recent low near
I'll be right back. So far, I ain't done much.
The red or green line would kind of be a break beyond our range and potentially a new area to consider here. We're right around our +1 standard deviation channel as well, so kind of a potential tipping point to watch.
Yeah, all right. So even though it's trying, it hasn't quite cleared it yet, and there is bit of a red candle after fading at $100. So the trend looks nice. Long term looks good. Short term, still kind of a little bit of a battle here at $100.
Yeah, but you know we're above our triangle. That's important to me, I think, and we're holding on at the supportive level. Let's see if we can crack that +1 standard deviation channel.
Okay, I like that. So there was some consolidation. It looks like we're breaking out from it for the most part. All right. Let's talk City. Pretty good move here, Jamie, on the upgrade as well.
Yeah, I will say this chart actually is like the surprise winner maybe of the group because again, on a 12-month basis, we're still up like 35%. So that, I mean, fares well. We've, again, sort of established this new range that we've been actually able to hold on to, if not, I mean, continue to break out to. So that's encouraging. Barclays also with an upgrade today to overweight from equal weight. Price target up to 95 from around 70, and despite this recent run-up, they do believe that large cap banks can continue to outperform the market in 2025 as earnings growth they see continuing to accelerate. They also do expect Citi to amplify these drivers after hitting its revenue and expense targets back in 2024. They only see that trend continuing, if not improving, into 2025. And also did say that their valuation improving in 2025 and 26. They expect as the bank to really build on intangible common equity from around 7.2% as far as their year-to-date versus their 11 to 12% medium-term target. So all things encouraging for banks. I also think that if you've been a follower of the narrative that has been basically speculating on the Trump administration's winners and losers, you'd have to say banks are an expected winner because in an easing regulatory environment, I mean, we've heard like hopefully increased M&A. I mean, from like a coverage standpoint, I'm also rooting for that as well. But all this favorable for all these big banks.
Yeah, for sure. Definitely part of that post-election trade, and one that's perhaps now, if Citi is an indication, finding some fresh strength. So the XLF, the overall banks don't look quite as good as this chart, but how does this one look, Rick?
Well, it's got one notable similarity to our last chart is that we're testing the previous high point here. One key difference is that on our last chart, we did make new intraday highs beyond the previous peak, but today, this chart, we're faltering a little bit. That high point came in below our previous highs by a pretty narrow margin here, but still lower nonetheless. We did break out of our short-term trend line and push above our yellow 21-day exponential moving average. Before that, you know, you could still argue, though, that we're within a broader upward channel between our two blue lines there. So, you know, even though we had a nice breakout above this trend line, it hasn't really brought us into any new territory at this time. So, you know, in one way it's good, in one way it's a disappointment for the bulls here. You can see this green line was another key area. 67.50, that was an old high point, and then supportive area after the breakout materialized. Now we can see as well, green upward trend line and RSI broken, shorter term red trend line also broken, longer term ceiling near 68. We had trouble breaking above that area. We've hit it repeatedly and backed off. Maybe keep an eye on it and see if we approach that point once again and kind of take the situation, you know, as it stands then. It could be a different setup on previous times here. But once again, +1 standard deviation channel pretty close to those highs. 74.
We got a bull flag here on the SPX.
Comes in near 79.
We kind of broke out of it, or not yet.
We managed to push above it. Look for support in our green line, marking those old highs and those recent lows in the 67.
I'm going to know something here in a second.
Seems like the
I just don't appreciate this breakout this morning.
But still dealing with that potential kind of resistance at the old high. Still a nice gap up, though, from
AI optimism fuels tech rally.
So it seems like a decent way to play banks if you're looking for something that's actually leading kind of in the intermediate term. Because it's a pretty good little momentum chart, right? Especially since we got away from all that volume there.
Well, earnings coming up too. Earnings season is
Earnings, yes, banks.
One of the ones that kicks that off, so that could be a further catalyst for growth. We could see.
Yeah, absolutely good point. Where we are on the calendar, good reminder there. All right, last one, Lyft. We talked some Uber earlier, which is pushing up their buyback, but Lyft's got some good news for it too.
It does, okay, but I will say I'm glad you mentioned Uber because it's to me impossible to not compare these two, especially when you consider like Uber's profitable, Lyft really isn't. Uber also commands right now roughly 74% of the U.S. ride-hailing market. Lyft,
wow, really?
I mean, huge. And Lyft's, I think...
I wouldn't have guessed it was still that skewed, to be honest.
I wouldn't have either because, frankly, like as far as a consumer standpoint goes, I don't necessarily have loyalty to one or the other. I just go with whatever's cheaper and will be there sooner.
Correct.
But Lyft recently, we've said, it takes forever compared to Uber, at least in my own experience. So that's where my bias comes in. But I think what's a concerning trend when it comes to Lyft is they used to have more like 35% of the market share of the ride-hailing market.
Lyft had a huge upgrade.
Now it's fallen to like 24%. So the fact that that's a decelerating trend while Uber continues to chip away at Lyft's market share, I think is hugely concerning. But they dominate in the bike-hailing space. I don't. Well, I mean, I'm like, I don't even know who they're competing with.
That's pretty much what I use it for, yeah.
Well, I was going to say, that's like, I forget sometimes that they're the owner of Divvy, which in Chicagoland is our main way of transportation here. But benchmark with an upgrade today to buy from hold, $20 price target, and they do acknowledge that both Uber and Lyft are going to face some of these ongoing pressures from Tesla as well as Alphabet's Waymo headlines, and they said that the argument for Lyft boils down to a few factors, like benchmark really highlights they do believe in Lyft's decision to reduce their surge pricing while sticking with their price look platform, which should drive, they believe, upside. They think Lyft is just getting started with some of this expansion through their partnerships as well as the autonomy portion of their business, which they think stands to grow. They do also believe that some of these prior partnerships are likely to produce more growth now in the new year. But again, this is I think our frankly most disappointing of the charts of these three, and you look at the chart of Uber, they're incomparable. I mean, the size of these companies now, I think the reach and the way that Uber has been able to focus on like shoring up its balance sheet, Lyft is just so many, I mean, like years away from that at this point.
Yeah, the fact they're losing market share is definitely frustrating for bulls in the stock. This pullback is essentially an unwind of their earnings, post-earnings strength from November, right?
Yeah, and it took us to a point that was not entirely predictable here, I guess you could say. That was our best close here, kind of where we topped out several times. We made some highs beyond that point, but not really a lot of great progress. 19 is about where we topped out once again there. So, and I should say that was our initial best close. We didn't close beyond that. But so that's kind of a boundary to keep an eye on there. That 19 level now is once again become a ceiling here, so that would be an area to keep an eye on as we go forward. But moving averages clustered together suggests that there's not really a strong directional trend here. We had some chop recently, and we gave back most of those gains. So that kind of creates this situation where the moving averages are moving sideways and also stacked basically on top of each other. We are pushing above them, but we're retreating a bit here. We're falling back to our 1450 level. That was the point of a gap there, our red line, and also the site of our 63-day exponential moving average in orange. We are crossing above our 50 midline on the RSI here. I wonder if that green previous trend line that was broken could be resistance again. I guess we'll see here. When we look at our volume profile study there, sorry, minimized our stuff there. If someone could help me out there for a second, we could see that there's areas on our chart here that would show some of those key points here of heavy trading here. That's what volume profile tells us. We've also got our red point of control, the area of heaviest trading. The reason we care about these is these are price levels that traders would seek to step back in and defend or establish new positions or maybe have a stop loss or whatever here. So we can see now that the bigger volume nodes, 1625, 1725 to the upside there. Point of control coming in near 1350, which lines up with our linear regression line. So give us some boundaries to keep an eye on in terms of potential areas of note.
Yeah, I like the chart from a trading perspective because it feels like if there's volatility, if you want volatility, there's trend if you want trend. The trend definitely intermediate trend has been downward, kind of at the high end of that channel again. So it seems like there's a little bit of gravitational pull at that 13.5. Then again, for earnings, the thing can go ballistic. So we've got tons of big, earnings points. So if I want to trade around those reports, still a couple weeks away. Thanks for good stuff. Good look at the charts there. Thanks, Jenny, too, for a look at the analyst notes. Market's still ramping up. We'll check in with our team in a moment. A little meet-up chat. Check in on the rally. Russell trying to hang in there despite a bond sell-off. It's doing okay. Big Texas where the story's at. Bitcoin, too, pushing now to 103.
Perspective in full view. Real-time example trades and full options trading. I'm Tom White. I'm Kevin James. Catch me on Facebook. Weekdays at noon on this line.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on Schwab Network.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street in the stock exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest mind in the business.
No politics, no analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market step.
Stocks looking pretty good here with the NASDAQ up more than 1.5%. Caroline Woods, who joins us from New York. Alex Coffey with me here in Chicago. If this is the official start to 2025, it's a good one, Caroline.
It certainly is. If you take a look, strength across the board outside of utilities, staples, and real estate has turned flat. But as you said, tech really leading the way with NVIDIA charging higher after a pretty sideways past few months. It's back near the highs, and we'll hear from Jensen Huang tonight at CES in terms of the keynote. So, of course, all ears, eyes will be on Blackwell deliveries in terms of sustainability for this rally. But also, I know you had mentioned it earlier in the show, just that Washington Post report about Trump potentially narrowing some of those tariffs. Now, he's already shot that down on Truth Social, but if you look at names that could be impacted by potential tariffs, it seems like they're siding with the Washington Post there, because Alcoa, Nucor seeing impressive gains. Names like Dollar Tree and Dollar General, obviously with a lot of imports from China higher today, and GM and Ford higher today as well. So seeing a nice pop there. Airlines are also seeing strength. We did see American Airlines get upgrades from TD Cowen and Jefferies. Both see more than 40% upside for the airline. Actually, TD Cowen now has the new street high price target of $25 per share. Jefferies at $20 a share. TD says Americans emerged from transitory 2024 challenges, and both think that consensus estimates are too low. Both have higher than consensus estimates for the airline. United is up more than 3% today as well. TD Cowen and Jefferies both raised their price targets on that airline as well. Already had a buy rating. And then they also said they're going to begin testing Elon Musk's Starlink next month on flight. The deal, of course, was announced late last year, but they're basically accelerating the rollout of Starlink, so maybe that could be helping. But if you take a look, JetBlue, Alaska, Delta, Southwest, all higher today as well. A few notable movers to the downside. T-Mobile down more than 3%. Wells Fargo downgraded to equal weight. RBC also downgraded to sector weight. So getting hit there. And then no love for staples today. General Mills,
Well, new high.
Palmolive, all getting hit today.
Yeah, tech up big, Bitcoin up big. Who needs staples? Who needs the utilities? Well, some of the utilities have had some of that AI trade, so kind of interesting that they're also lower with NVIDIA up 5%. But to me, that's the story, Alex. I mean, we're about to break all-time highs in NVIDIA.
Yeah, and the stocks in that utility space that are somewhat tied to the nuclears, at least Vistra is the one I always type in first.
True, yeah.
On the day. So
there you go.
It does seem that there's a risk-on tone, and we talked about this last week, and I think we're seeing it. That inverse correlation between the bond market and stocks will come back, and you'll start to see, as risk on happens, the kind of breathing room for the bond to ease lower. And I don't think that we're in a situation where you're going to see treasuries get out of control to the downside here, unless you saw big-time job data with huge wages and a lot of optimism for the economy, because we've priced out basically every cut but two for this year. There's not a lot left to be priced out on that front. But I think it's a reflection.
SPY had a new high.
Some of this volatility the last few weeks worked its way through the system, and now we're kind of back to normal. Now, Washington Post article, is this policy going to happen or not? Well, just wait and see. I mean, you're going to perhaps find yourself in trouble if you try to go over every headline and chase this trade around. You recall back in like 2018, 2019. There's a lot of uncertainty in the fog of war, and this is somewhat of this trade war 2.0 now. So I'll wait and see what actions are actually implemented by the
trade war. Where?
And react accordingly. They say they're going to put tariffs on. What those look like, we'll find out when we get them.
Yeah, good point. Fog of war, I like that. Things that are sort of still unseen, but starting to take shape, and as we get closer to inauguration. I mean, again, a lot of this, it seems like folks maybe just were maybe off the desk on vacation. Some of that chop we got, perhaps just an effect of the calendar at the end of December, because, I mean, this is the first full week with all the data, and they're not messing around, Caroline. I mean, we're rallying big. Even with bonds selling off, the small caps are up. We're only $1 away from NVIDIA at a fresh record. That's usually not a market that fades.
Yeah, true. And Alex and I were talking about this early this morning too. The fact that Santa Claus didn't come to town, that 7-day stretch wasn't fruitful, if you will, and that typically signals a kind of a rough year ahead. Doesn't seem to be the case. Obviously, one day doesn't make a trend, but nothing about today seems like we're off to a tough start.
All right. And the dollar down 60 bips this morning. So
bouncing a little bit though.
Yeah, bouncing a little bit as bonds are selling off. But to your point, I think you made a good point, Alex, that Treasury's easing back with the stock rally. You know, a good reason for bonds to sell off rather than a problematic one. So
the options ain't running that much up either.
Maybe tomorrow when we start to get the data in, but I mean, we'll see.
Slow and steady.
Equities rallying kind of does open the door to some selling, it seems like, in the Treasury market. Thanks, Alex. Thanks, Caroline.
60.25's finally made it to 4.
Morning Trade Live. Thank you for tuning in. I'll see you at 2 p.m. for Market On Close. Up next from New York, Trading 360 with Diane King Hall. Have a great day and good luck.
They just dropped big right there. I'm not seeing much for scalping in a way. Cooking a ribeye, eating ribeye.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Mara had a new high.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction.
Apple about to hit my resistance.
For 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds.
AMD pulled back to a
Stop waiting and start investing in stocks,
little
bonds,
spot.
money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade
I
brilliantly.
want to buy a put. I really do.
Good morning. We're about 90 minutes into the trading day. Welcome to Trading 360. I'm Diane King Hall. I'm in for Nicole Petalides. We are live from the floor of the New York Stock Exchange. Let's start out, of course, with a roadmap for today's show. Coming up, we've got in our 360 spotlight, we've got some stock picks for your portfolio. Take a look at Tesla, Nvidia, and Boeing as well. Today's disruptor is Workday after Guggenheim upgraded that stock. And in our 360 round, we'll take a look at Bitcoin and get some 2025 predictions for the crypto space. Let's start out with a quick check on the market action. We continue to have risk on and early trading in what would technically be the first full trading week of the year. Of course, this week is bookmarked with one day that we will not have trading. That will be this Thursday, where the New York Stock Exchange will be closed to honor the passing of President Jimmy Carter. But we are seeing gains across the board. Blue chips are up triple digits, up 249 points, up 0.5%. Not the bell of the ball, but strong gains. The S&P 500 better by more than 1%, rallying about 71 points.
$4 to 520 on the puts, the 6,000s.
Up triple digits as well, up more than 1.5% as well. But you've got small caps continuing to catch a bid this morning. Russell is up by more than 0.5% this morning, holding on to some solid gains there. As well, let's take a look at some other asset classes. We've got crypto back on the plus side after some fluctuations that we saw last week above 100,000. Gold has been pulling back this morning a bit, down 0.3% there. Yield on the 10-year up 3 basis points right now. Yields are, kind of gradually inching higher. Investors really just kind of gearing up for a slew of economic data that will get crude oil holding above $74 a barrel. When we take a look at West Texas Intermediate, there again amid ongoing gains there. We saw some gains at the end of last week after crude had some challenges at the end of last year and challenges in general, but it's managed to hold above and continue to add some gains there. For a look at some of the top moving stocks in today's market, I want to welcome in Jenny Horn, markets correspondent here on the Schwab Network. Let's dive into some news that we have in the streaming world this morning. Some big news there with a tie-up with Disney and Fubo and entering an agreement. Talk to us about the details with this.
Yeah, good morning, Diane. So Disney now combining, as you said, their Hulu Plus live TV with streamer, of course, Fubo. This will merge together the two internet TV bundles, and both Hulu Plus live TV and Fubo are these streaming services, of course, that do mimic the traditional cable TV bundle, which offers these various linear TV networks. The deal, though, does not include the streamer Hulu, known for, of course, creating some of its own original content, most famously, to me, known at least for The Handmaid's Tale. But Hulu's stock did surge as a result, and Disney also getting a pretty decent lift today, up 1.3%. And now both services will still be available separately to consumers after the deal does close. Hulu Plus Live TV can be streamed through the Hulu app, as well as part of the Disney bundle that also includes, of course, Disney, Hulu, and ESPN Plus. And the deal now,
that should be a big deal for Fubo.
Now trying to reshape the way that you think about a lot of this linear TV. Having two separate platforms today is not necessarily ideal, which is something that was mentioned by the Fubo co-founder and CEOs on this call with investors this morning. They did say that right now they're trying to find a way to give their consumers the most value, while also really seeing more growth for these iconic brands that are, they said, paying respect to a name like Hulu. They did also know that, well, Fubo has been focused on offering more sports and various news. Hulu Plus Live TV is now known for its entertainment offerings as well, which they're trying to now really write home on. Fubo is also expected to become immediately cash flow positive following the deal close, instantly making Fubo the major player, they said, in the overall streaming space. So I think that's huge, the way that we could see an almost immediate impact on its financials. I do think this is a very cutthroat space right now, as we talk about so often, and right now eating away the market share that it seems like Netflix somewhat owns in the streaming space is difficult, but the offerings that do mimic more of this linear TV, I do think are kind of interesting, because not all streaming services, as we know, are created equal at this point.
Yeah, it does seem like, this is where Netflix, it doesn't have to be winner take all, but Netflix has been the clear leader in this space, so you can see why there would be more tie-ups and agreements, joint ventures, etc. What is interesting to see is the share price move higher for both of these companies. Obviously, usually you see one side moving higher, but Disney shares moving up a little more than 1%. Another thing that I thought was interesting is that the Hulu subscription base, like those subscribers, wouldn't be included in this deal. But obviously, we'll continue to see. Go ahead, Jenny. You want to add?
I was gonna say, I thought the same thing where I was like, that doesn't really make sense to me. It must be some licensing. There must be some contractual reason, because that also, to me, Diane, stuck out where I was like, that doesn't make sense. But I mean, I'm sure there's some legal ramifications behind that.
Yeah, it seems like a head scratcher, but obviously we'll continue to see more consolidation, and you know, maybe two is better than one in this space, where you see others try to take on Netflix, as you mentioned. Jenny Warren, a markets correspondent here on the Schwab Network. Thanks so much, Jenny. All right, time now to get some insights on news that's shaping markets. For that, I want to welcome in Shayna Sissel, the founder and CEO of Van Ryan Capital Management. Shayna, thank you so much for joining us today. First off, Happy New Year. And I want to talk to you about your assessment of the market so far in 2025. I know we're really early, and this is just the third trading day of the year. We started out bumpy like we did the end of last year, but we're back to that kind of bullish sentiment that marked much of what we saw in terms of the price action in equities after the election. But how would you characterize the market so far?
Well, first, Happy New Year to you too, Diane. You should have seen the smile on my face when I was told that you would be the host when I was on. To answer your question, though, in terms of market sentiment, to start off, the new year, 2025, you know, we didn't see a Santa Claus rally. We saw kind of a rough end to 2024. And
Didn't
I think
see
that left some opportunity to buy on a dip, if you will, but also, you know, renewed optimism, because we are one step closer to the new administration, which most people see as favorable for the economy and for stocks. And so I think people are coming in and kind of with a renewed sense of optimism as we go into 2025, and taking this opportunity to jump back into, you know, the hottest areas of the market, the hottest trends and the hottest trades.
So how do you see the incoming Trump administration impacting market sentiment going forward, especially when you think about, you know, first there was this Washington Post article that seemed to indicate that tariffs would be more narrow than was signaled. Then you had a social media post from the president-elect saying that Post article was not true, but you haven't seen a washout of, you know, the bullish action. Where do you think the sentiment is going to be when it comes to this incoming administration?
So this is a bit reminiscent of the first Trump administration. There was a lot of threats on tariffs, but when Trump actually took office, they were watered down, because there is somewhat of a negotiating tactic going on here. You know, to really go back historically, the whole Teddy Roosevelt, you know, speak softly and carry a big stick kind of thing. And I think the Post article just reminded the market of that. So whether or not the president-elect is going to continue to have this really hard stance on tariffs remains to be seen. But I think in the first administration we learned that everything is a negotiation tactic, and oftentimes what is threatened is not what actually comes to fruition, and it tends to be better for markets. So I think what you're seeing is the markets reacting to that reminder.
Yeah. All right, let's talk about a little bit about the winners that seem to have turned the page and continue to win in 2025. And really, a lot of that has to do with the AI trade. So you have the NVIDIA gaining ground again. I mean, that stock is up 5% today. You have Broadcom gaining ground. You name the tech company, and you know, it looks like it's just all systems go with the valuations really kind of at premium levels. What is your take? Do you expect these to kind of still be the leaders, or do you see more broadening?
So it's hard to think that they're not going to continue to be the leaders. Again, momentum as a factor is one that you really, really should never try to play against, because it will burn you every time. And when it comes to momentum and earnings,
burn you, baby.
And stock price, when you have good fundamentals and good trends, Valuation is not as much of a factor that drives the stock price in that scenario. So there's no reason to believe that we won't continue to see NVIDIA lead. But I do think there is some broadening that will occur. You know, one of the names that I really like right now is Marvell, which is the custom silicon, and which is, you know, a beneficiary of the continued maturity and evolution of AI. And so they will benefit. We've heard Broadcom as well. So there are names out there that are going to benefit from continued maturity of the AI trade. That is here to stay. So now it's about finding the names that are going to benefit the most as we continue to move through the trend.
And to your point, Marvell up 2.5% right now. But let's talk about the risks that come with, you know, kind of that leadership that we've seen in the tech sector. It continues to lead the market today. What are the risks that you see with that?
Well, I mean, the biggest risks that are out there is that, you know, what happens is people throw money at anything related to a trend. And we're not quite there yet with AI. We haven't seen that kind of broadening where anything that is trading publicly that has AI, even as an ancillary part of their business model, gets money and is not actually a good fundamental business. We're not quite there because we haven't seen a really healthy IPO market that has put those players into the public markets. We are definitely seeing it in the private markets with venture capital. And so that's just something to keep an eye on. But I think overall, the leaders of these trends of AI and any beneficiaries related to AI, like Marvell, like Broadcom, and so on and so forth, will continue to lead unless something happens to break down the trend. You know, that is always the case. You see a lot of money run into an idea, but the leaders continue to lead. Now, that said, if you want to take back on a playbook and look at the tech cycle, once the tech bubble burst, and we can kind of even more recently think about this in the crypto blockchain space, once that bubble kind of bursts, the leaders still lead, but would not quite with as much authority as they did previously when there was a lot of money running into the space and a lot of hype around it. But they continue to lead, and there's no reason to believe that won't be the case here.
And Shayna, before we lose our time with you, I know besides Marvell, you haven't
6,000 strike put at 380.
Leidos, and where people may recognize this name, you'll see this like the security at the airport. What is it about this that makes it an attractive investment for you?
Well, that is quite the pivot because Leidos has nothing to do with AI. It is a cybersecurity, a security kind of name. It's a defense stock. I really like Leidos for a lot of reasons. Stock is actually very, very attractively valued, even though it's done really, really well in the last couple of years. It has strong leadership. It has diversified business model. Their healthcare segment is kind of their growth engine. And the need for the products that they have kind of a stranglehold. Go into any airport and all you see is Leidos. You never see a competitor. They really are kind of the leader in security in the sense of cybersecurity and overall like security in the sense of the airport. So it's just a stock I find very attractive. A lot of really positives and trading at a very attractive valuation and has nothing to do with AI, nothing sexy about it, but a name worth looking at.
So that's something that we have to deal with when we go through the airport. Shayna Sissel, Banrian Capital Management. Thank you so much, Shayna. Also love your hat, your whole hodl hat in the background.
Thank you.
All right, plenty more to come on Trading 360. Next up, it's Big Three, 3 stocks, 3 charts, 3 trades. Rick Ducat goes through the technicals, and Charles Moon takes us through the trades. We're taking a look at AMD, GitLab, and Chewy. That is next on
Chewy.
360 here on the Schwab Network.
Damn. Again.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades, we've got Charles Moon, Senior Market Strategist, Equities Prosper Trading Academy. Great to see both of you. All right, Charles, we're going to start out with you. And the first trade, that's AMD. It's on the plus side today, like much of the tech names that we know. So tell us about this one.
Yeah, you know, AMD has kind of fallen dangerously into this like very lethargic, low demand type of move that Intel has shown over the last 2 years. You know, it's almost as
I'm up a big $20
about in the semiconductor sector, but in the last 2 days, there's been some really sharp buying into this name. And
Prison guys on TV.
Formation standpoint, they're creating this W formation, which is widely known as a long-term trend reversal sign. And you know, they just started outperforming the 20 SMA today. They got these beautiful profit pockets. The initial one's up to 135. I believe that if they retrace and hold 125, that's going to be a superb entry price for a bounce up to that 135 threshold. And if they can cross over that price, this really opens up the potential for them to make this run towards 150. You know, AMD has a lot of catching up to do in comparison to names like AVGO, NVIDIA, TSM. But they certainly are one of the leaders in the industry, and certainly is a name that shouldn't be forgotten. You know, I don't understand kind of Wall Street's stance, but that's not for me to, you know, argue with. I just feel that this is now the time that AMD has potential for actually sustaining rallies as opposed to, you know, having these pop and drops and just really breaking down the lower lows. So they're going to be on watch if they can stay above 125. I love it to 135. I love the upside potential to 150 here in the near term as well.
Yeah, it has certainly been a laggard, especially when it was expected to be the number 2 after NVIDIA. All right, we got the Duke of Data. Rick, take us
That's right.
for AMD.
Sure, a chart that's perhaps taking a bit of a breather, but also in the shorter term, maybe looking like it could be breaking out today. So when we backtrack a little bit, we can see that we had a notable gap back here, this red line near about 175. That's about where we topped out. Once again, a second time. Now the prevailing pattern gives us this downward trend line starting with those highs, connecting here with the point I just circled near 175. But we've also got kind of a series of lower lows here as well, giving us this falling wedge type shape, which maybe counterintuitively to the name is a more bullish pattern here. So you can see as well that we are breaking out of our shorter term blue trend line and breaking above our yellow 21-day exponential moving average. So we could set our sights potentially around there, right around that level edge. That's about that 135 area that Charles was mentioning. This red line right here is about 153, so close to the 150 area that was also being discussed here. And the reason I highlighted that is because it was the open after we had an earnings gap down. So those seem like some notable areas to keep an eye on here. But look as well, another sign of our burgeoning breakout perhaps is that RSI has broken above our red downward sloping trend line on RSI and is starting to push back above that 50 midline here. You can also see that we made a bit of a bounce there, a higher low. RSI followed suit and did not cross into the oversold area once again. So if we were to include our volume profile study as well and our standard deviation channel study, you can see that we are near our -1 channel here, 1 standard deviation below our blue linear regression line, our line of best fit. So couple that with the previous lows and this small volume node close by, dipping below 118 or so could be problematic for the bulls. If we do go beyond that point, -2 channel comes in near 99. But to the upside, that area near 150 or so, 153, that could be a resistance point to watch as it marked a notable gap. We've got our moving averages to cross through here. But eventually, this red line here, this pinkish line here, marking our low point before our gap and then our subsequent high point about 175. That's really the mark to beat.
All right, that's the mark to beat there. AMD right now higher by a little more than 3%, adding to some gains today. Similar to
AMD StradVision to team up and boost driver assistance system for autonomous cars.
Yeah, you know, I certainly love the potential on GitLab. You know, being a technical-based trader, one of the key factors that I always look for is unobstruction, meaning profit pockets. The ability for a stock to move higher without reasons for other technical-based traders to try and jump in and fade the stock. Today, they recaptured the 50 SMA, used that as support, and they're pretty much wide open all the way back up to the recent highs of 73.5. Now, I think that the initial run is going to probably run up to around 67, and the key price point that I'm watching here is 60. They held that perfectly. They're trading near the highs of the day. I think this is going to be an easy run towards 67, and anything beyond that price point, I think it's going to be a push towards 73.5. You know, at the start of the year, we're seeing a lot of new positioning by Wall Street, a lot of demand coming into the picture, but very similar kind of reversal pattern taking place on the stock. Love the potential in the cloud space, love the potential in SAS services, along with semis. These are, you know, two of my favorite sectors to look at for 2025. I think GitLab is an unheralded name with ridiculous upside potential in the near term.
All right, you see an easy run to 67, but Rick, what do you see in the chart when it comes to GitLab?
Well, it's been some interesting price action recently here because, as you can see, we bottomed out here near about 47.
GTLB.
2-week lows, then had a nice rally to the upside, a big candle there that formed that seemed to
Never heard of that
gap.
one.
We did close that gap from all the way back there earlier in the year, right around here. You can see our pink line near about 72.51. But it
Let's
was
keep
not
going
so good.
sideways.
Quickly backed off. We had that big
SPY
red
had a new
candle,
high.
that formed on the day here, suggesting that the bulls weren't having it that day here. So shorter term blue trend line formed off of that high point that has been broken.
Double top on Google.
Above our moving averages. I don't have the
Tesla has a new low.
here, this chart specifically. I do have the 21 and 63-day exponential moving averages here, but you know, kind of the same concept. We're crossing above our moving averages and closing above them. Prices starting to rise. The moving averages are starting to turn upward. These are signs of early trend shift here. 62 is another key level here, all the way back here. That was kind of the higher areas where we closed around that point after our gap down. So around 62 looked important. Then high points, subsequent low point around there too. So we can see now once again, price is crossing above the 50 midline, or excuse me, RSI crossing above the 50 midline and invalidating our red trend line here. So another sign that perhaps the trend is starting to change. So now if we could try to assess some support and resistance areas, well, you can see we're crossing above our +1 standard deviation channel here. The next area of interest could be right here. We've got a bit of a volume node near 66, then our +2 standard deviation channel near 68. Finally, that area near 70 Charles was talking about. It's kind of this whole range here, this where we start getting into the 70s is this big block of volume there. So another key point to consider because it also lines up with our recent high point there as well. To the downside,
Come on,
our green line,
drop.
highs, highs, consolidation, lows, right around there, 56, and then we've got our volume profile point of control near 54. So some pretty heavy support areas.
Practically even again.
To the downside to keep in mind as well as our purple 252-day EMA in that same area.
All right, and let's pivot now and take a look at your final trade, Charles. You've got Chewy on your radar. It sometimes has a little bit of a meme stockish flavor around it, but there's something to be said about the fundamentals here. But let's talk about your final trade. Charles, can you take us through your thesis here?
Yeah, Chewy's definitely a retail trader's darling, very similar to the GME thesis. We've heard that Rory Kitty has played around in Chewy, caused the stock to spike up to 39. It certainly came crashing down shortly after, but they've been recovering. They've been in a really steady trend leading into the end of the year, and now we're breaking through a key threshold at this 36 price and looking to test that 39. Now, between 39 and right around 43/4, 41, that's going to be a really big barometer for the stock. They really need to cover above this threshold, because if they do, it opens up pretty wide up to around $54. And that's really where I'm expecting Chewy to go. Now, the question is, how will the stock behave once it breaks out at new 52-week highs? Will the retail traders start piling in and looking for that short squeeze? And that's really where the potential for this name comes into the picture. If they push beyond 41 and start holding that $40 psychological level, I think this is going to be a screamer towards 54. And again, we haven't seen too many short squeezes taking place, but this is one of those stocks that have that potential. Now, it doesn't have a massive short flow. It's around 7-8%, but that's still pretty high for industry standards. Anything over 5% is considered pretty substantial. So, if they start igniting above that 40-41 price, this is a stock to watch for a rocket ship up until that $50-54 price range.
Okay, so 40, 41, some key levels to watch right now. It's above 37. Rick, take us through the technicals for Chewy, though.
Yeah, some strange price action earlier in the year. Here we had our earnings pushed to the upside, then a very large upper wick on our candle there. That was the day that they announced a $500 million share buyback, I believe, here. So that gave us maybe perhaps an outlier price point here, but nonetheless one worth noticing, because we're getting pretty close to that area. We'll have to see if price finds some resistance or consolidation around that point if we do start to continue.
It's a crazy day today.
Wedge type shape here. We've got our kind of boundary here going along these highs. That's about where we are right now. We are above our moving averages. We are pushing above our previous highs. RSI on the move to the upside, continuing to make new relative highs. Not quite in that overbought area yet, though. So when we consider volume profile and standard deviation channels as well here, you can see, well, most of the volume is way down here near 17. That was pretty close to our low point there. There was some heavy activity around those areas, but here are some more close areas of interest: 27, around 30, and around 32 or so. Those are heavy trading areas to keep in mind if price does start to falter here. But even closer, yellow 21-day EMA lines up with our blue linear regression line and the start of our gap near about 34. So that's a key point to watch to the downside here, as well as these old highs near 36. To the upside, if we do break above those old highs, +1 standard deviation channel comes in near 40, +2 channel comes in near 46.40 or so.
Okay, all right, with Rick Ducat with key levels to watch on the downside and on the upside. Downside 35 stands out to me to watch. Rick Ducat, the chart master, and Charles Moon of Prosper Trading Academy. Thank you both for being here. Coming up next, we're going to spotlight some other stock picks for your portfolio. Our next guest will be taking a look at Tesla, Nvidia, and Boeing. Trading 360. We'll be right back after this break.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Time now to spotlight some stock picks. Joining us now for Insight, Melissa Armo, founder and owner of the stock Swoosh. Melissa, thank you so much for joining us. Let's start out with your bullish picks. We'll start out with the key one that I think it'd be hard pressed to find a bear in. NVIDIA shares gaining once again today, up 5%. Tell us why you're so bullish on this one.
Well, remember, NVIDIA had earnings that were good earnings more than a month ago, but the stock fell after that, which was a shame. So it made new highs and then it immediately fell. So I've been watching this for quite some time to see if it was actually going to follow through on the move that it started on the earnings. And today, of course, it did, which is a great start. Again, first, I want to say full week. The market's closed on Thursday, but pretty much full week where people are back at work today. And people are long NVIDIA. And I like the stock. I think it's going to continue up. I think it's going to get over that 152 and change number that it hit on the earnings, which was the previous high. And it looks like it could go to 155, 160, again, barring what the market has in store for the next few days.
What's the risk to that thesis that you see then for NVIDIA?
Well, the risk is Friday. the market has the econ out on Friday as the unemployment number. So again, if something happens Friday that creates a sell-off in the market with us being closed on Thursday, that would not be good for any stock. Remember that most stocks go on any given day.
God, look at that bounce on
Today, for example, is a good example.
IDAI.
It's up today, so most stocks are up to date with the market. Some things are up on their own, which is NVIDIA, which was up a lot. But again, on any given day, most stocks go with the market. So if the market is down on Friday and reacts negatively to the unemployment number, then we could see a sell-off. And I think
T-Stamp signed strategic partnership with
between now and
Quinta.
the next administration takes place January 20th. So even though we're rallying today, even though the market's up, even though the market's strong to start the year for 2025, and
Projected to generate up to 4.3 million in revenue receipts in 2025.
next 2 weeks. And after that, well, we'll see. We'll see if all the momentum and all the excitement that everyone had after the election really will continue and push up the market after January 20th.
Are you worried that some of this is just momentum and not valuation when it comes to, say, NVIDIA or in general in the tech sector?
Sure, I'm not worried about it. You could be correct, but I'm not worried about it because I trade momentum. So you can't ignore the fact that the momentum's to the upside. And
She
remember,
trades momentum.
earnings starts in a couple of days. So NVIDIA has earnings out the end of January, which is in a few weeks. Between now and then, the stock could continue rallying. After that, if the earnings show something that creates a stock falling, then I might have a different opinion. But it's not always necessarily about what the fundamentals show. If people are very bullish on this sector, which they are, if people are very bullish on the market, optimistic about 2025 and the next administration, people are going to go long, even if what you said is true.
Okay, and let me ask you about your next bullish pick. You've got Tesla in your sights on the bullish side. Now look, you have
ARB got a deal with NVIDIA.
Tesla, and some of that also depends, it seems, on how you view the company. If you view it as more than just an EV company, as an AI company, as Elon Musk is pushing for, if you view the future of the company as more important than, say, the today, like the deliveries, what is behind your bullish view on Tesla?
Well, remember back again, even before the election, which a lot of things rallied after the election, even before that, Tesla finally had a monster lift, which it's been waiting for quite some time. So Tesla was one of those stocks that was in a downtrend for a while, even though we were in a very bullish market. And then all of a sudden it flipped. Now, what the reasons for that, we can debate, but the fact is it did flip, and it had a monster move, which you cannot ignore, to the upside, starting in November, which carried through till the end of 2024. And in fact, I think the stock would have gone to 500 if the market had not had a sell-off at the end of 2024. If we got really close to that number, so close, and I think the stock is going to hit that number. Now, whether or not it hits that number before Tesla has earnings or not, I don't know. You're right that people either hate Musk or love Musk.
He trades on momentum.
But the stock is in an uptrend, very, very strong, has had massive momentum in just the last 2 months, has had a bigger move than the overall market. And actually, that is one of my top watches for 2025. A lot of people think it's extended. I don't think it's extended at all. In fact, I think this is a new move, a bigger move that's started already for Tesla. So when I look at Tesla today, yes, it was up today, it gapped up today, and it's falling a little bit this morning, but I think that the stock is just resting today and could have a bigger move in 2025 than it had in 2024. Because remember, the move in 2024 started at the very tail end of 2024. So we've got an entire year, 12 months to go with Tesla. This stock could double in this year in 2025.
Yes.
And to be fair, as to your point, some of that move happened before the election as it started to turn the corner on some of the numbers for deliveries. But to balance that out, the most recent deliveries were a disappointment. So it looks there's a little bit of chop here. We'll certainly watch this one. But let's flip to your bearish pick. You've got Boeing on your radar as a bearish pick. Now, we do have a note out today. Barclays that actually upgraded Boeing to overweight. They have a new price target that's up 210 bucks a share. That's their new price target. They think it's that they've shored up their balance sheet. They don't see it as an overhang anymore. They say the free cash flow trajectory is much more reasonable. Why are you still worried about Boeing?
Well, today's a good example. Again, I'm worried about it. Why? Again, the stock should be rallying and up more today than it is. And the other thing is, again, earnings coming up in a few weeks, and Delta reports on Friday. So guess what? If Delta is down on Friday, then BA is going to continue to sell off like it's selling off today. And again, it's all going to be about the earnings. That stock has been so sluggish while the market has continued up. The last time the stock saw brand new all-time highs was years ago. And look how strong the market's been in the last several years. And Boeing is nowhere near the highs. It has had problem after problem after problem. It's going to take a while, in my opinion, for that stock to turn around. It could fall before it goes up again. And I think, again, that's one of those ones to watch for a possibility of shorting. I'm not saying you short it today. I'm saying you can watch it Friday, see how the sector does with the other stocks that are reporting before Boeing, and then, of course, watch it on the earnings and see what happens. I think it's January 29th, I want to say, the earnings. I have to double-check it. But that's one that's in January as well. So, I'm not saying short it today. I'm saying watch it for a possible short. It has to do a lot for me to want to go long that again. And in the backdrop of the market, like I said, where everything seems strong and everything is rallying, Boeing just isn't doing it. You got to go with the momentum when you see it, and Boeing doesn't really have it to the upside.
It has it. It is trying to punch a little bit higher right now at the moment. So it's been struggling for years now, quite honestly, if you've been watching this ever since pre-pandemic. So we'll see if you got this right to continue to be bearish on this, or if the page is turning for Boeing from the view of Barclays. But Melissa Armo, great insight. Thank you so much for your picks when it comes to the bullish side, NVIDIA. And
well, I agree with it. As long as we stay above the 200, we're bullish.
Coming up next, we've got the disruptors. Kevin Green will join us to take a look at Workday after an upgrade over at Guggenheim. He'll give us the reason behind the call and an example trade that is next on Trading 360.
AMD looks like the one that can bounce. We are above my little trend line now. Do 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 do. Oh boy. Do do.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street.
MU's up $9.
Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Diane King Hall. I'm in for Nicole Petalides. We are live from the floor of the New York Stock Exchange for a look at developing stories this morning. I want to bring in Caroline Woods. We're taking a look at MongoDB. The stock is higher, although off the highs after Guggenheim upgraded the company. What's the latest here, Caroline?
Hey there, Diane. Yes, this is an interesting one because Guggenheim notably downgraded big winners like Salesforce and Palo Alto, but says now is the time to buy MongoDB, which of course hasn't been a winner. Upgraded MongoDB to buy from neutral with a $300 price target. So as you said, MongoDB off the highs, but still up about 2% right now, but down more than 30% over the past 1 year. And Guggenheim says it's
I'll be right back.
ugly duckling in infrastructure software as of late, more than the soaring eagle that it's long been. However, its recent channel checks indicate that Q4 consumption accelerated from Q3, and assuming stable consumption in fiscal 2026, Guggenheim sees Atlas, which is its cloud platform, accelerating to 29% growth. So thinks now is the time to buy, and shares getting a little bit of a pop today on this call. I should note that this analyst is actually joining the majority of analysts. 80% rate MongoDB as a buy. The median price target is $392, so quite a bit higher than Guggenheim's $300 price target, but both obviously imply a significant upside from current levels. The street high, though, $520, so well off the street high for MongoDB.
Yeah, I didn't catch the street high for that, but certainly the overall consensus for that. And it's not quite the soaring eagle yet, but maybe, it is giving it some lift today.
Yeah, and if you take a look, only been a few trading days of 2025, but it's up more than 8% in the first few days. So off to a good start after a pretty rough year.
So MongoDB, one to watch in 2025. Thank you, Caroline.
Sure.
All right. Time now for the disruptors. Kevin Green, a senior markets correspondent here on the Schwab Network, here with today's company. That will be Workday. Guggenheim has been busy this morning, Kevin, upgrading the stock. What's behind the call here?
Yeah, a lot of analyst adjustments today, just in general, but we are seeing the stock up about 0.5% in the session so far here, and Guggenheim actually did adjust their rating on Workday up from a sell to a neutral here. Now, they do not have a price target, but they're a little bit more optimistic about the vision and the direction of the company, especially with the CEO that's in charge as of right now. They are acknowledging that the business environment has been a little bit challenging when it comes to Workday, but they are observing some company partners that are seeing some positive activity here in the near term that could actually be a tailwind for the stock. Now, Workday has had some issues, some choppy trading, just to say the least, over the last 2 or 3 months, seeing a little bit of a pullback here. And that's because it's been very volatile when it comes to its earnings announcement. They have been trying to change their branding up from being just a human resource management platform to being more of an IT and cloud service provider. And that rebranding has been a little bit difficult. And you are seeing a lot of their competitors kind of outspending them when it comes to CapEx. flex in order to take market share, and that's been an issue for Workday over the last couple of quarters. But once again, Guggenheim believes that that turnaround story for this company might be on the horizon just based on the channel checks that they're taking right now. So it will be interesting over the next couple of quarters to see how Workday does. Where are they going to see margin expansion? Is AI really going to be something that is going to help them out in the long term, or is it just going to be enough for them to just maintain their market share? I think that's the biggest question that a lot of investors have right now.
Okay, and why don't you take us through an example trade for this one, especially when you think about the questions circling around it?
Yeah, so if we continue to see analysts becoming a little bit more optimistic when it comes to Workday, especially when you're looking at the technicals of the stock right now, and you're bullish on the stock, the example trade that I'm bringing here is actually a bull call spread. Looking at the January 31st, so around 25 days till expiration, looking at the 260-280 call spread, buying the 260, selling the 280, doing this for a debit of $4.50. The max loss in the trade is going to be the debit paid, $450. The max gain would be $1,550. And that's if the stock is above that short strike, that 280 strike at the time of expiration, with a break-even point of $264.50. Once again, this is a bullish trade that you would like to see the stock obviously advance to the upside. But if there's a market available, you could also take the trade off if there's a market available and it does go in your direction before the time of expiration. But this is also going to be risk defined in case the stock does not make any type of moves over the next 25 days and or if it reverses to the downside. You do not have unlimited risk. Once again, you're capped out at that $450 level for that debit that's paid there. So bullish example here for a stock that you're seeing some optimism from the analyst on.
Yeah, it looks like there's a little bit mild optimism around it today off the back of that analyst activity. And you're right, the analysts are back to work and busy today. Kevin Green, senior markets correspondent here on the Schwab Network. Thanks so much, KG. Coming up next, time for our 360 round. We're talking all things crypto and, of course, Bitcoin. We're seeing Bitcoin up about 3% on the day, sticking above that key 100,000 milestone level, closing in on 103,000. We'll dive into the space, get some 2025 predictions for Bitcoin and crypto across the board. Trading 360. We'll be right back after this break.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Ooh, low blow.
Schwab, a modern approach to wealth management.
It's time to look forward
Find the next trend.
from every click to every tip.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
AMD popping.
Welcome back to Trading 360. Time now for the 360 round. For that, I want to bring in our panel. We've got Samir Kirbaj, Chief Investment Officer of Hashtags, and Min Jung, a research analyst, Presto Research. Thank you so much, both of you, for being here. Min, let's start out with you, and let's talk about the landscape for crypto in 2025. We've got Bitcoin. It's reclaimed that
132.40
level. What's your outlook for the space this year?
Yeah, so we recently released our 2025 market outlook, and we put a price target of 210K for Bitcoin. Now, that's about 100% upside from where we are right now. And I know it sounds really ambitious, but there are 3 reasons why we believe. First is the macro environment. Despite the hawkish Fed on December FOMC meeting, we still believe we are in a rate cut cycle. And not only US, if you look at countries like China, PBOC is putting enormous stimulus package into the market. And second is the regulatory risk reduction. Trump is very vocal about making US the capital of crypto. And we are already hearing pro-crypto policies and even things like Bitcoin strategy reserve. And last thing is just the general overall market development. A couple of years ago, people thought Bitcoin and the crypto industry a scam, which now turned into something that we cannot ignore. And we are seeing some real demand of the blockchain industry as well. So for 3 reasons, I think Bitcoin 210K sounds very ambitious, but not impossible.
You should have seen, I wasn't on camera, Min, but you should have seen my eyebrow raised for 210,000, and I was like, did I hear you right? I'm coming back to you with a follow-up question on that, because I want to give Samir the floor for his outlook first. So what's your outlook for crypto and Bitcoin in general for 2025?
Yeah, so we pretty much agree with Ming. We believe we are in a cycle, a bull cycle for crypto in the next 12 months. And it's important to highlight that in this cycle, we might have regulatory clarity on other assets beyond Bitcoin. So that might be even more significant to smart contract platforms and their applications than what we're seeing for Bitcoin. We keep a very positive outlook for Bitcoin, but we think when we look at smart contract platforms, if we see regulatory advancements in the US, as it's looking like it's going to happen, that tends to be extremely positive. So overall, looking at the overall crypto market, we're extremely optimistic about this year. We think it's going to be a bull market. And probably, I think it would be very reasonable to go beyond those levels that we mentioned.
Beyond the 210,000? Okay, man, I'm giving the floor back to you really quickly. What risks would you worry about, though, when it comes to that target?
So Bitcoin has been highly sensitive to the liquidity and the macro environment. So as you can see on the December FOMC meeting, Bitcoin almost dropped about 10% after the December FOMC meeting. So of course the macro environment plays a huge role there. And the second thing is there are lots of great anticipations on Trump. And there are even betting sites like Polymarket are pricing like 35% of Bitcoin strategic reserve, announcing 100 days within the Trump's term starts. So those kind of, if something doesn't really come to the market, I think there could be some disappointment into the market. So I think two things, one's macro and one's Trump, is something that investors should look out for.
Samir, I want to talk about another asset within the space, Ethereum. It hasn't had the same kind of price action that
OKLO hit 31.
There was kind of this expectation, especially when you had the ETF wrappers come out for both of those, that you would see some similar action. Is there something fundamentally, I don't want to say wrong, but what's so different that the price action is not the same in Ethereum compared to Bitcoin?
There's a lot of differences between Bitcoin and Ethereum. The most important one, I believe,
nano-nuclear energy gain after U.S. hydrogen tax credit revision.
Especially for the applications of Ethereum. So remember, Ethereum is a platform. And for this platform to thrive, it needs applications. And applications right now don't have like a regulatory clarity to grow in the U.S. So overall, the case for smart contract platforms is not too much known, and there's some questions around its viability, and especially because it's been around for less time than Bitcoin. Bitcoin has been around for 16 years now. So it's a very proven technology, has a strong regulatory clarity, basically in all countries around the world, and Ethereum is still growing and is still in an earlier phase, I would say. And that's why the risk is higher, but the upside would be significantly higher as well, as people understand this, and especially as we see more regulatory clarity coming from the US.
Men, do you have similar views when it comes to Ethereum?
Yeah, so we didn't specifically put a price target on it, but we put a what we call a ETH to BTC ratio. So it has been historically around like 0.05, but over the past year, there was like new platforms like Solana, which provided better user experience. So Ethereum was somewhat underperforming, but we still have the same view that with the upcoming developments and very great developers on the Ethereum ecosystem, we think that the ratios will climb back to 0.05, and we put I think that kind of gives Ethereum's around like $6K target for 2025.
Okay, there's some levels to watch when it comes to Ethereum and Bitcoin. Both are higher today in this risk-on environment that we are seeing. I know we didn't get to go across the entire crypto space. Well, we'll have you back to talk more about that and see where your predictions land later this year. All right, Min Jung, Presto Research, and Samir Karbaj, hashtags, thank you both for joining us and for your insight on crypto. Thank you all as well for joining us on Trading 360. Download the free Schwab Network app. It's available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. I'm Diane King Hall. I'll see you at 2 p.m. Eastern for the watch list. Fast Market is up next.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, a team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
Knock, knock. Number one
broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
God.
I'm Tom White. We've got a great lineup for you today. We'll discuss the markets and then have some option strategies. We're going to look at Microsoft, which is moving higher after raising its CapEx spend this year, and Boeing, which fell about 32% last year but was upgraded today. And like Folio has consumer sentiment data on Starbucks, which fell about 5% last year but has bounced about 30% from those multi-year lows that we saw last July. Now let's take a look at the major indices, which are just off the session highs here. S&P 500 up another 1.2% after rallying 1.25% on Friday. Dow Jones Industrial Average up nearly 350 points. NASDAQ Tech leading to the upside up 1.5%. And the Russell 2000, the small caps up 1%. To help me break all this down, let's bring in my co-host, and that's Kevin Hinks. Kevin, give me your take here. Santa Claus rally never materialized, but we've had a couple good sessions in a row to bring us back close to all-time highs.
Pretty strong recovery the last 2 days in this market, and today is feeling like a bit of a melt-up, actually. It's a strong market. We were downplaying the strength in the U.S. dollar the last couple weeks and how it hasn't really hurt stocks too bad. Well, apparently, it was keeping stocks down because a small recovery, a retracement in the dollar has the market melting up because yields haven't moved. It's the dollar that's moved today because some of the universal tariffs that the Trump administration were talking about putting on, now they're only going to cover critical imports. And that little shift looks like it's lightened up the upper pressure on the dollar, and apparently, Tom, that's giving stocks the big green light here because that and some headlines like I think Jensen Huang speaking tonight at the opening of the CES is going to be a headline-making event.
Yeah,
we'll be talking about tomorrow for sure.
Yep, Nvidia up another 4.5% today after rallying over 4% on Friday, but President-elect Trump did come out and refuted that Washington Post story.
And the markets backed off when he did that for a while.
For about 7 minutes.
You had a brief moment to cover if you wanted to.
Yeah, seeing a broad-based rally expand here a little bit. Let's expand this conversation, bring in our next guest here in studio, and that's going to be Alex Coffey, senior equity contributor here on the network. Alex, give me your take here. It seems like tech is, reemerged as the market leader here. Valuation's still elevated at this point, but it feels like it's almost being used as a safety play because a lot of the specific sectors within the S&P 500 aren't in rally mode.
Yeah, I think, when you look at the performance of the market as a whole, whether or not, stocks will go higher or not from here is one thing. But when you look within the market and you're saying, where would I want to put my money in several different scenarios, logically, you come to the conclusion that some of these large mega cap tech firms perform better in many of them. The one to me that is most clearly beneficial for a broader rally is the strongest economy, one that sees the U.S. outperform the world, but do so with better than expected growth, and one that allows for some of these Russell 2000 companies that have struggled, or some of these cyclical companies to struggle to play a little bit of catch up. But if you're a little bit maybe more uncertain about the trajectory of the economy, or you guys were just talking about like tariff policy or not, I think we can question whether or not you know, how connected the Washington Post or these other news organizations really are to an administration, or how much of this stuff is fleshed out. I'm just going to wait until see what the policies are. In 2018, 2019, you got yourself into a fair amount of trouble if you reacted to every one of these headlines that caused volatility. They can present opportunities, but we don't know what's going to happen. So at this point, tariffs are likely. How wide they are, who knows? But I look at this and say, you know, we have dollar strength. We have U.S. outperformance world versus the rest of the world, and we have interest rates that, let's just say, are going to stay near this level more than likely for a little bit longer than people thought. What part of the market does well in that? You can see why everyone goes to the NVIDIAs, the Microsofts, everything, because you feel like there's a little bit of a safety element. They have giant cash piles. Well, that means they're making interest on that money that they have, and they don't have to borrow. Well, all their peers don't have those, all the competitors, and they're trying to play catch up, and they have to borrow money at these rates. So it just sets up for the outperformance of some of these massive companies. They're right place, right time, but seemingly they're always in the right place at the right time.
Yeah, it's almost like they have that less of exposure to any interest rate risk, but that's why we've got utilities and real estate down with, you know, firming yields. And also consumer staples, they're not going into that either.
Let me comment on something Alex just said. He prefers to wait and see the actual policy, which is the right way to do it, right? But that's never what the market does.
Right.
The market never waits. The market's never patient. The market loves to jump several steps ahead and anticipate, and it goes there either to, I found,
fast.
Career, the market either goes to the worst case scenario and works its way up, or to the best case scenario and works its way back down. But the immediate reaction is always extreme, and it's not patient, and it's a microwave economy that we find ourselves in. When is being patient the right way? Most likely it is.
Yeah. Well, if I can build on that though too, I think that there's going to be a confusion between, which I don't think Kevin's suggesting. I'm saying between waiting and doing nothing and sort of sitting on the sidelines. I'm not invested at all. Versus making reactionary decisions.
AMD got 132.40.
The same thing about geopolitics. Largely geopolitical headlines worldwide, when it's come to conflict, has sent the market lower. When there's this big concern about something, the flare-ups happen, and they've been buying opportunities every single time.
Yeah.
So the same may apply when it comes to kind of trade war 2.0 headlines or policy headlines that are framed in a fearful way. And so I look at this and say, you know, have a baseline expectation yourself, but maybe don't be too reactionary to every headline that comes out in an uncertain environment, because a lot of people are just guessing.
Yep, and that goes back to that investor versus trader conversation. Are you trading this market a little bit, or are you in it long term, or doing both? That's what you should be doing at this point. But Kev, when you take a look at just some of the commentary, every Monday we seem to like have a bunch of individual corporate news come out. There were upgrades across the board. Tesla's actually down after getting upgraded.
I saw that.
By New Street. Yeah. And
I mean, Tesla was up 12, 13, 14 bucks pre-market.
Yep, 426 was the session high in there. American Airlines, 3 upgrades. Citigroup upgraded, COF, Capital One, Discover Financials, Chewy. I mean, there's a lot of upgrade downgrades today that really aren't negatively or positively affecting the market.
Fubo double top.
Moves, if you look at the heat map, it kind of is reflective of the names that are really out there moving higher or lower.
Pull back to the 50% mark.
Big, magnificent 7 names like Google Alphabet getting back up close to $200 after struggling around $190 forever. I see Amazon that was way under $200. Now it's almost $230. I mean, I can go down the list here. Apple is snapping back to, over $245. I mean, Microsoft's having a big day. Obviously, they're making headlines today. But yeah, Tesla was up big pre-market and is now down. So I think clearly this is a new year.
We did hit a resistance here on Mobot.
I mean, you've got an S&P now 6016.
Yep. See, and the S&P 500 only 1.3% below its all-time highs of about 6,100. So Yeah, we had the heat map up there, and it kind of is reflective of the breadth.
The green
kind of
wave.
expanding on this. Go ahead, Alex.
Well, and yeah, you guys are pointing out the green wave, which is true because you have about 70 or so % of the S&P 500 higher, and you have closer to 75% of the NASDAQ 100 higher. But then the brighter colors are all in the right places. The Magnificent Seven basket as its own thing is outperforming the market by almost 2 to 1 today. It's up over 2%, with the S&P is only up about 1.25%. So you also have, you know,
The only one I'm worried about right now is
in
SPX.
the most heavily weighted parts of the market, which is this big-time tech area of the Apples, the Microsofts, etc. So there's a lot of strength, and then there's more strength in the right places. So this is literally the recipe, to Kevin's point, for the melt-up.
Yep.
And then there's Palantir down 4%.
Yeah, that was initiated as an underperform today. So some commentary from the analysts. But we have 8 of the 11 S&P 500 sectors positive, led by information technology, communication services, materials, and consumer discretionary also in that top 5. Kev, we've been talking about interest rates, the impact that they're having on some sectors, the overall market. We've got $119 billion worth of auctions over the next 2 days. So we've got the 3-year today, 10-year, and 30-year tomorrow.
Right. 10-year and 30-year obviously are going to get a lot of attention. But yeah, $119 billion over the next couple of days. Yeah. That's a big.
Like to see 6,000 again. $15 drop.
Because that could.
That'll get out now. I might do it.
Change going into the next day, and I mean, the good news is for the bond market, these auctions keep going relatively stable or positive.
Right.
Is that going to be a surprise if one of these come back stumbling? I mean, you've got rates at 4.6.
Yeah, and that's I think that's what I'm trying to get at is could that be a catalyst this afternoon and tomorrow afternoon, where maybe we don't see as much demand in those auctions. We get yields start climbing even higher. I mean, 4.7%. 4.8% up to 5% for the 10-year is what a lot of people are calling for right now.
Yeah, we're essentially there, though. And so when I look at this and say we're basically at your, 52-week highs in this particular market, we've backed out all but, let's call it 2 cuts for 2025. At this point, are we closer to the high end where the bond market gets in the short term? And is this actually a moment where those who have been waiting for more attractive yields actually step in? And so, I'll be watching to see. I'm usually not personally the biggest follower of these different treasury auctions. I think if you're in the treasury space, if you're trading treasury bonds or a product that tracks that particular market, being aware of when they are on the calendar, as they can certainly impact the movement of those particular products. But I look at it right now as a situation where maybe investors see opportunity to increase their bond exposure, given the fact that you're on the lows on price and you're near highs for yield recently, which maybe makes that a little bit more attractive.
Yeah, Kev, we mentioned upgrades, but there were a couple of big downgrades. Palo Alto Networks got downgraded. That was Guggenheim downgraded them to a sell from neutral, CRM. I mean, come on, you're downgrading Palo Alto to a sell. I mean, Guggenheim, what are you doing there? And then Salesforce also, they downgraded that stock, Guggenheim, to a sell from a neutral. I mean, they've already missed the rallies in those stocks.
And Palo Alto, the stock's already, significantly off its highs of 207 down to in the low 180s, and now you downgraded.
Yeah, and you were neutral, and you missed the 25% rally in those names last year.
And now you're going to sell it. It's $30 off its high. Well, thank you for that timely downgrade. Where were you at 207?
Yeah,
I mean, obviously we're in the. We can second guess all we want, but man, come on, downgraded $30. Now you downgrade.
Right.
It's I don't know.
I mean, it's an outlier. I mean, to say
finally green on this son.
I was astonished that he had them both at neutrals.
Yeah.
And missed the rally in a lot
I
of
think that highlights that this particular analyst don't know much about them one way or another, but obviously, to Kevin's point, to your point, missed the rally. They have maybe a more of a contrarian opinion, let's say, on these names, and then just typical for analysts in general, they tend to be reactionary. So you start to see a little bit of weakness, and then they react to that weakness. So I think when I look at analyst reports, It's important to kind of look at their overall track record, how they view them relative to peers, but oftentimes it's their assessment of things and the kind of the commentary around it that can be more useful than their actual calls or their price target. Keep in mind, they're analysts, they're not actually, you know, portfolio managers or investors. So take their analysis and maybe do your own assessment as far as where the stock may or may not go.
And one last thing, Palo Alto, where the stock is trading right now, back in mid-October, through the end of October, pretty solid base it made right around $180. So you
AVGO's got a double bottom.
Place to enter, actually. Sorry.
Yeah, well, he's been wrong. We'll kind of continue to wait on this. But as Kevin mentioned, this thing's pulled back pretty significantly, about 12% from those all-time highs from last month, above 207. All right, guys, let's take a quick break because we got to get to that.
Tempting to go walk on the treadmill, see if that'll wake me up some.
CapEx spend for 2025, data-driven AI servers are going to be building out. As far as
Also took my profit on Fubo.
Across the board, and a lot of the chip makers, including NVIDIA. We're looking at Microsoft up next. Thanks.
Palo Alto's about to hit the VWAP. IWM at the 63 with a double whammy.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
Low blow.
Probably is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking Microsoft. They came out late Friday with an announcement on that CapEx spend $80 billion globally. Most of that, or at least half of it, here in the U.S. Let's bring in Caroline Wood, Senior Markets Correspondent here.
Go spend some money.
Caroline, the stock had been consolidating for the last 6 months, far below its all-time highs, but getting a nice pop here on this news.
Hey there, Tom. Yes, about 8% away from the highs, but inching closer with today's 2% gain. A couple things could be behind the move. Obviously, you mentioned that huge AI investment. Also did get a few price target hikes on Wall Street. And then, of course, we're seeing overall strength in big tech, likely helping Microsoft as well. But going back to the AI investment, Microsoft said that it's going to invest $80 billion to build out AI-enabled data centers that will be used to train models and run AI applications globally. More than half of that total investment will be here in the United States.
It's a lot of money.
This was announced via a blog post on Friday. The blog was actually entitled "The Golden Opportunity for American AI." And Microsoft
Finally, $390.
Stated not
This has been the longest trade I've been in for a while.
Has the U.S. had the
Kinda.
opportunity it has today to harness new technology to invigorate the nation's economy? In many ways, AI is the the electricity of our age, and the next 4 years can build a foundation for America's economic success for the next quarter century. So Smith actually laid out, it was a long blog post, but laid out a three-part vision for tech success, specifically here in the U.S. First, saying advancements and investments in AI technology and infrastructure are needed, and then said that the U.S. needs to champion skilling programs that will enable AI adoption and enhance career opportunities as well. And then also said the U.S. needs to focus on exporting AI, American AI specifically, to allies and friends, bolstering our domestic economy and ensuring that other countries benefit from AI advancements. It actually wraps up the blog post by saying that the U.S. is in a strong position to win the AI race with China by advancing international adoption of American AI. So, should note, also touted the importance of partnerships. Obviously, Microsoft is the biggest or the primary backer for OpenAI, and really OpenAI has helped it become a leading contender in the AI race. So no surprise they're a big fan of the partnerships there. But we know all of this comes at a cost and continues to come at a cost, which is where the analyst activity weighs in, because of course I mentioned we saw a few price target hikes on the street, but of course they pay close attention to CapEx. Bernstein reiterated Microsoft had outperformed, hiked its price target to $516 from $511. Said Microsoft has become far less.
Come on, drop a little bit more.
Investors' concerns about CapEx and the ability of Microsoft to convert CapEx.
Tempting to get out of this thing. Here comes a fake sell on SPX puts.
Kept an overweight rating
Fake.
on shares. Basically said the next $1 trillion in spend could come over the next 7 years, and says that 2025-2026 can usher in a renewed appetite to invest in the application and data layers after 3 years of moderating growth. And then Citi was out with a note shortly after the blog post was released and said that the $80 billion encompasses essentially all of Microsoft's data center related spending for fiscal 2025. Did say that was in line with expectations of about $85 billion in CapEx for the year, but says the news is modest positive as it de-risks a CapEx cut scenario for Microsoft. So kept a buy rating and $497 price target on shares. But Microsoft off earlier highs, but still up about 2% right now, a little bit less than that.
Caroline, this show has covered Microsoft a lot in the last couple of weeks, mainly because the chart looked so hideous in terms of their price activity. Now, they've come out, made a couple comments, a couple news stories like this. The stock has recovered. You can pretty easy to connect the dots to see who could be the potential winners in spending $80 billion. Of course, it's NVIDIA. Also could be AMD, which is up big today. Could be Dell Computer. Could be Broadcom. Broadcom up less than 1% today, though. But when you look at this story, the chart is so ugly. Yet this cloud infrastructure pie that we keep talking about on a daily basis, which currently at the end of third quarter 24 Microsoft has about 20% of, with the leader being Amazon. This pie is getting bigger. The story might not be market share, but the fact that how big this pie is getting, Caroline.
True, but if you take a look at the majority of Wall Street analysts, they're still very bullish on Microsoft. There are 59 analysts that cover the company, and all but 4 have a buy rating on shares. There are 55 buy ratings and 4 hold ratings, so there's not a single bear on the name despite the chart. If you take a look, the median price target is $500 a share, so that implies about 14% upside from current levels, but other price targets on Wall Street are much higher. The street high is $650. So there's certainly a lot of bullishness on this name despite the chart. That all being said, I think that Microsoft and so many of these other companies that have continued to invest need to show a return on that investment to avoid fears of this entire bubble popping, if you will.
Pop. Yeah, you also have to wonder about that $13 billion investment in OpenAI. When's that pay off? Do they go public?
It's a tricky scenario to plan out because, okay, they're going to spend all this money on AI. They're going to inject it in all their products.
Right.
Are they going to be able to raise prices enough to cover the cost of all that?
Yep. And
it's a big number.
Yeah, go ahead.
And I don't know if you saw that Barron's article this morning that just talked about OpenAI's demand problem, that there's just too much demand for the $200 a month subscription, and it's basically they're losing money on it because it costs so much to power these AI chatbots, like something like 10 times as much as a simple Google search. So it's kind of another AI puzzle piece that needs to to fall into place, because obviously compute power would be important, but NVIDIA is such a dominant player that, you know, affordable AI is going to be tough with them continuing to, you know, take all the market share, and they're able to keep prices high.
Affordable AI. There's the next catchphrase.
Yeah, efficiencies. All right, thanks to Caroline Wood, Senior Markets Correspondent here, breaking down Microsoft. Let's bring Alex back into this discussion here, Alex. As Kevin mentioned, I mean, this stock's been dead in the water for the last 6 months or so, been in a range of about 405 to 455. I mean, maybe this is the catalyst that brings it out of its funk, but it was only up 12% last year, with the S&P up 500, up over 23%.
Yeah, I see it as a catalyst. I'm just not sure that it's a catalyst for Microsoft in the end. I think this is more of a catalyst for the NVIDIAs of the world that are going to benefit from this spend. But nonetheless, I mean, Kevin raised a good point in terms of, you know, where's there going to be a return on this, and at what point is that going to be something that's focused on too? But I didn't even need to think about it that deep. I mean, those are longer term discussions, I think. We have earnings at the end of the month. I wanted to stay ahead of that. And so I just went out a few weeks here, guys, and looked at a neutral strategy. You talked about pretty well-defined range that the stock has been in. I saw around 415 on the downside, around 455 on the upside. Structured an iron condor in the January 24th cycle, just $5 wide, using those two marks as the short strikes. So selling the 415 and then selling the 455 call. Looking at $1 credit on this, so your break even would be 414 on the downside, 456 on the upside. Now, you would like to get a greater credit than this, but you have just a little bit of time until that January 24th expiration. This is not the most volatile stock on the street, but you're, in a way, through risk, paying a little bit of a premium here to avoid the earnings.
I'll be right back. I'm going to go rest my eyes for a second. I'm still in the SPX, and I sold my other two.
So, in my mind, I sometimes will structure trades based off risk reward and how much credit I can get. And other times, when there's a well-defined kind of support and resistance point, you might structure your trade based off of those technical levels. This would fall more into the latter camp.
All right, yeah, let's break this one down. January 24th series, so you do avoid that earnings event, as Alex mentioned, but maybe you want to. If you're doing a neutral strategy, you don't want event risk to maybe move the stock more than what the option market's pricing in. But this one involves selling the 455 call, buying the 460 call. There's a short $5 wide call vertical, and then selling the 415 put, buying the 410 put, short $5 wide put vertical, collecting $1 credit. That's what you can make. $100 with $400 in risk. Alex mentioned those break evens. Kev, this one is skewed a little bit where you've got a little bit more room to the upside, but if you looked at the channel on the top end of the range for Microsoft, it's around that 450, 455 level. So even though you've got more room to the upside, it's still right at that, basically it's been resistant over the last 3 months.
Yeah, and you know how you know it's skewed to the upside? It's got a delta.
Right.
It's not a big delta, but it's you know, between a 1 and a 2 delta on this spread, which means Alex has moved that short put a little closer to at the money and the short call a little further away from the money. And that little balance, and you can see it there on the picture if you're a visual person, it gives it a small delta. Now, you're ahead of an event. So you're not, you have to be realistic in your expectations of how much premium you're gonna take in based on that, unless you move those strikes way closer, which adds risk to the position.
Yep, and we always talk about probabilities on this, and Alex, I mean, you got nearly 80% probability it's going to be above 415, and then the 450, 455 strikes about 89% probability. So that's why you're not collecting as much, because you have better probabilities, right?
Yeah, and for those who focus on, you know, kind of technical and price levels and stuff, you also can, you know, understand, hey, the low is around 415, recent high is around 455. It can fit that as well. And so it kind of, you know, surrounds the recent price action as opposed to, you know, trying to find a level based off risk and reward that it can stay within.
Yep, neutral strategy there in Microsoft. Expecting maybe some more consolidation there on that example. And thanks to Alex Coffey, senior equity contributor here on the network, for joining us. But coming up after the break, we're going to be joined by Landon Swan from Likefolio to look at sentiment data. We're going to take a look at Starbucks. That coffee giant has struggled It struggled in 2024 as that new CEO attempts a turnaround story for the stock. That's up next here on Fast Market.
Finally.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close.
460.
No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab. Schwab, a modern approach to wealth management.
Boom, boom. Come out.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder at Lightfolio. Welcome back to the show, Landon.
Thanks. Great to be here.
Good to have you. We're talking Starbucks. Now, this stock has been languishing. It was down about 5% last year. Got a nice pop from the new CEO, Brian Niccol, coming in there. But do you guys have any data that backs up maybe the fact that, hey, it's rallied the past couple sessions, but, I mean, it's still a dog over the last couple of years, right?
Right, it is. I can support the dog stuff. That's pretty easy for us data-wise. And as far as the rally goes the last little bit, I mean, it's all about the CEO. That's it. I mean, if you look at what Chipotle did under him, it was basically 5x in, 5 or 6 years? Absolutely incredible. I'd bet on that jockey all day. That's amazing. But, you know, he's coming into a tough spot right now. I mean, Starbucks last quarter, their revenue was down 3.2% year over year. We've seen them have a happiness drop on our data, less engagement across the board with our data. A lot of it, I think, is, you know, there's actually a lot of different reasons. One of them is people feel the menu is too complicated. You know, Starbucks itself calculated that there's about 170,000 different drink combinations that you could order. Users on, you know, Reddit and things like that, their math says the number's higher than that, but it's at least 170,000, which is nuts, right? I mean, I get it. You know, I understand how permutations work, but still, that's a big number. They've also gotten, you know, anytime they're in the news, it seems like it's for a negative reason, like political reasons or other things. You get the homeless bathroom stuff, the labor shortages, the strikes, the Israeli conflict, and that whole thing. Like, it's never positive news with Starbucks. It's always negative. And I think that they've moved away from customer experience and more into a, you know, transactional view of the business. And it kind of shows. I mean, it used to be this place that you would go and have a good feeling, and it's, you know, warm and inviting, and it's, you know, they write your name on the cup with a Sharpie, and they got away from that. They did all kinds of stuff, right? It's just they've moved away from what they were, and they got into this number grind kind of company. And people feel that. I mean, they feel that they start going other places, and we're seeing that. We're seeing the competition is really starting to win. I mean, if you look at Luckin Coffee in China, they've overtaken Starbucks as the #1 in the number of stores. They did that 2 years ago. They've overtaken them as the number of sales or revenue. They did that last year, and now they've got their eye on the U.S. They're serving coffee for $2 to $3 a cup. I mean, that's a big difference than what you get at Starbucks. And then you got Dutch Brothers, which is actually another one that we recommended to our clients about 6 months ago. We're up 50% on that. Bros is the ticker, BROS. They've got a simple menu. It's basically drive-through or walk-up only. It's very simple. It's just get you what you want and get you on your way. And so you can see here the I guess brand interest is kind of how we measure, how we look at website visits, and this is what you see, the big divergence between these two. One, both about 20%. One's going the right way, the other one's going the wrong way. So that's, obviously it's very concerning. The stock's really not done much over the last year, but, and this is what everyone is looking at, is the new CEO. Like, can he turn this around? And he's talked about making it, simpler, faster, more welcoming. He talked about the Sharpies on the cups instead of printed labels, which I think people enjoy, and really just making it more about customer experience rather than transactions. So I think that is where they need to go. And if you're betting on Starbucks at this point, you're betting on the CEO. That's it. That's the only reason you bet on them, because you take him out of the equation, and all the data looks pretty poor. But where they're at now, and rewind back to 2018, look at the Chipotle chart. I mean, that'll give you some hope for Starbucks. So at this point, the Lifefolio data, if we had blinders on, we didn't know there's a new CEO, we'd say, now this is a dog company, stay away from it. It's not even a value play here. It doesn't look good. With that information, do you want to bet on the man or not? I mean, in the past, I've had a lot of success betting on jockeys before instead of companies. So maybe this is the right jockey to bet on, but right now the company really needs to turn around.
Yeah, the bad news is, Landon, fourth quarter U.S. sales down 6%, China down 14%. You think he's got a big problem in the U.S.? He's got a bigger problem in China. But, and this is a big but, he fixed Taco Bell, he fixed Chipotle, and you could say, well, this is not a fast food company. Yes, it is. It's fast, and you're getting things. It's really all the same. Now, he's got a price problem. He's got an image problem. There's a lot of things, but you're right. This is the guy who's known as the fixer, and this is just his next product. And you look at guys like this, and you know what? You have this feeling he's going to figure it out. It may take a while. It may be very short. But the stock, interesting enough, 6 months up 29%. 3 years down 19%. So it can still rally, but you're right. A lot of this stock movement has been betting on the new CEO. And why? Because he's got a track record, as you know.
Right. I mean, you get into political discussions online, and people always, they compare how much CEOs make and how much the average worker makes and all this. And at some point, you got to point to a guy like this and be like, he's worth it, right? Yeah. I mean, he gets the job done. Ask the shareholders if they're willing to pay him what he's paid. They'd probably say double it. Pay him more if he can do more than that. So absolutely. And look, to get back to some of the data here, this is the app engagement on Starbucks, going the wrong way. I mean, we looked at the website data, and that's down 20% year over year. The app engagement's down 5% year over year. So it's not like people aren't going to the website, they're going to the app instead. No, they're moving away from both. And it's just an overall trend that we see in the data when it comes to mentions, website data, app usage, happiness. All of it is going in the wrong direction. And you can see how important the app is to them. I mean, they still got, 38% of people don't use the app, but a lot of people are really dependent on it. And yet that number is decreasing on a year-over-year basis. So app is key for them, and it's decreasing. That's not good. Web's decreasing. That's not good. Mentions decreasing. Happiness decreasing. All of it is going in the wrong direction. But all of this has a giant asterisk next to it that says we've got a guy who has turned around two companies tremendously, and now he's got his eyes set on Starbucks. So, I love people, and I like betting on people. So I'm not buying the stock here, but I could probably be talked into it if I pulled up that Chipotle chart and just studied a little bit more Taco Bell. I mean, he's done a fantastic job. He obviously has the ability, and what he's saying is, you know, the corrections that he's talking about echo exactly the negative comments that we're seeing with our data. So, you know, I mean, I'm sure that he's got a lot of the same data that we do when it comes to user complaints, but basically he's zeroed in on what people don't like.
I don't want to see
it. If he
it.
turns that around, I think this could be a good opportunity.
520.
Like you said, it might take, you know, 2 years, it might take 5 years, it might take 10. We don't know.
There's the
but
200.
I think they're in the right hands for sure.
Yeah,
Man.
and they got earnings at the end of the month, Landon. So
Screwed that
is this
one up
of those
again.
Wait and see ones, or is it like a long-term type position? If it does pull back, how do you look at that based on your data?
Well, let's definitely do this one again before they report earnings. I want to see how things move between now and then. But you know, if you're willing, if you're bet on the jockey type person instead of the horse, then yeah, I'm saying buy dips as you see them, as they come in. Wait for dips and buy them. Anything under 100, definitely under 90 for sure. But anything under 100, maybe consider it. We're under there now. You just got to wait and see. I mean, this is not, if you're betting on nickel, this is not a 6-month trade. You cannot do that no matter how good he is. If you're betting on him, you're going to hold for at least 2 years, probably 5. If you're betting on Starbucks,
Are you saying I should have stayed in Fubo?
That's kind of where you're at right now. So if you're
Been a long time since I traded that one.
But he could.
Damn, they're at 550.
He's eventually, at some point, assuming he has success over the next few years, he's going to have that quarter where investors all of a sudden realize it, right? It's going to be one of those overnight successes, right?
570. Dadgummit.
Basically, it's all of the stuff that he's been working on finally comes to fruition in some quarter in the future. That's the one that people are going to get a big payday on. Which quarter it is, who knows? But if he is successful, it'll be one quarter that just pops out and everybody says,
Magnificent.
"Oh, he's doing it again."
I did it again.
That's what you got to look for.
All right, great stuff, great data as always, Landon.
630.
This Landon Swan, co-founder of Likefolio, joining us.
650.
We've seen that the past couple quarters from Likefolio.
660.
Deteriorating, kind of like the stock has been deteriorating and their quarterly earnings. But one of the things we didn't talk about, you mentioned sales in China down pretty significantly. Luckin really opening up a lot of stores. Dutch Bros got upgraded today again, and that stock's hitting over 1-year highs. So competition heat.
It felt like forever.
Is activist investors, Elliott Management's in here, Starboard.
So I bought these puts. Oh, what time did I buy them? Okay, I bought them at 10.16. It felt like I was in there forever. Now they're at 740. Son of a bitch. I just left $1,200 on the table. I got to stop this. Randy. Rub it in, buddy. Okay, I'm gonna go make me a hot chocolate. Kind of worried about taking this test. I don't want somebody telling me that I got calcium built up in my heart.
trading, trading right there, right now. So this is the one that if you went out till next week and sold it, use the expected move. It's $2 this week. It's 3.5 next week.
Right.
So adjust the strikes based on your duration. But if I'm looking at this trade, I know that end of the week, Friday, I'm rolling that option.
Yeah.
In either the same strike or further out, based on where I see the stock moving. But a diagonal is a lower cost way to play this.
All right, let's break it down. February 7th, options, that's about a month to expiration. Buying the 94 call, selling the 96 strike call, and the January 10th option.
Your calcium numbers off the charts?
End of this week.
Did you check your arteries? Did you have to take some kind of medicine? Yeah. I've smoked all my life, though, at weed. I haven't smoked much at all in a year. Plus, I don't hardly eat bread or drink milk or in the last year, 6, 7 months, 8 months. We'll find out. Feel like I need a little bit of hit of Coke every once in a while to keep my eyes open. But I don't do that either. One time. Oh, well. Man, I can't believe I left that much money on the table. $1,300. Magnificent. Give me a B+ for staying in it. I should have bought the dip. That would have probably been a lot better deal. Got them at $2. We hit that $2, $2.30 about 3 or 4 times, and then we'd run up and hit 3, and then it'd dip back down to $2.50, and then it'd run back up and hit 3, and then it'd be down $2.50, and then it'd run up and hit 3, $3.10, and then it'd go back to $2.50. And then finally, what time is it? It's about time for me to go in there and make a thing of hot chocolate. I'm just so irate. I've always had this, I'm probably not built like Mike, but I've always been weight conscious. even if I was 10, 15 pounds over. College, I think I was 190 to 200. But healthy. Had a physique. So I'm going to go make my hot chocolate and I'll be right back and try another trade. I've always had this little fear of doctors. Because they told me I was going to die when I was 20. Man, look at him now. Oh, Jesus, age 840. Unbelievable. That's the second time I played puts today. $9. Golly. 560 bucks. That'd have been $2,000 on the table. You had 10 of them? We got to stop that. I know it ain't funny. You got to pay for that trip. But it just, I don't know. I sat there and watched it and watched it and waited and waited and waited. It just seemed like it was going to be like that because it was so slow, and these candles are so small, like little increments, like they really wasn't trying to pump it up. And the pullbacks every time I'd get close to it, get out, and boom. I say I should have sold it even. Do I think we're going to bounce here? We got a lot of riffraff to get ahead of. If we break the 9, we might, or the 21.
And if you notice, time's gone out to February 21st. That's 46 days until expiration. So he's given himself duration, time for news to come out through an earnings cycle.
Trump came out and said if anyone caught trafficking minors will get the death penalty. We've got 300 to 400,000 missing kids now that cross the border.
Say it's more of an aggressive type trade because you do need movement. On the short put vertical, the stock can go 3 different directions. You can still make money. If it goes higher, stays where it is, or goes lower, but remains above that 163.80 break even. On this one, you definitely need a move. Now, the break even, Kevin, only $4 above the current share price. So on a percentage basis, that's not a lot or as big of a move. And sometimes I'll look on the trading platform, probability of touching. We always talk about probability of out of the money when selling out of the money verticals or options. On this one, probability of touching that 185 strike into February expiration, about a 57% chance of that touching. So there's some probabilities in a long vertical also.
Sure, they're just not as attractive as the high probability short put vertical, but still, it's, the one great thing about a vertical spread is it's very clear what it is. You're looking for a move toward, the date, the break even, where your target is.
Right, you've got that $600.
Hope you didn't get in them calls yet.
Risk also on that, the more aggressive call vertical purchase, but it gives you more duration. All right, that's going to wrap it up for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
We could probably come back down and do a double bottom. It's really hard to tell. There's nothing in here but that.
Join me, Oliver Rennick, alongside
Oliver.
Options expert. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking,
Adobe had a breakout today.
features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited
Something about
fee rebates for cash withdrawals,
ARBE robotics.
and enhanced security features to keep.
Oh, ARBE.
Is linked to your
Never mind.
brokerage account. You can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds.
Lily.
You can stop
Lily's at 772.
bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Which ones? 6110 calls? Oh, shit.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere on
Tweezer, well, almost a tweezer bottom.
Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Hot chocolate.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and
Let's see what the temperature is outside.
and sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Brilliantly. Do 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 do. I don't see.
Welcome to Next Gen Investing. I'm Jenny Horn, joined of course by Alex Coffey, and we are seeing a pretty nice rally today to kick off what was expected to at least be the full week of trading, of course, for the new year. We do see markets close this Thursday in observation of the memorial of former President Jimmy Carter, of course, but at least as far as markets are concerned, we're back to things as usual. Alex, I was joking, I felt like it's been a hot minute since I have hosted this show alongside you. But at least we're seeing some positive momentum to kick off this week. We are up about 1% in the S&Ps, 0.5% in the Dow. Strength today led by the NASDAQ, which is up about 1.3%.
Yeah, I don't think you're alone in terms of, and I myself took some time off around the holidays. I think many people try to, take time around those holidays if they celebrate them, get to see family. Typically, businesses kind of slow down. You're not missing a ton. Now, the market doesn't necessarily slow down, and it certainly had some movement during that time. But by now, I don't know, I guess, when school kicks back off, but it's got to be sometime either this week or the next couple weeks. Return to office, everything. People are in the new year now, officially, I think. After that first week with a couple days there, a couple stray days, it's officially 2025 now. Everyone's back. We're full strength pretty much. And the market acting that way too. I know it's given back a little bit maybe in the last 25, 30 minutes, but for the most part, this is a pretty impressive green day.
It is, and yeah, I think that we were all due to get back. I felt like with the way the holiday period fell, we were just sort of in this lull for an awfully long time. I think the whole world, it felt like, was eager to get back to work. At least as far as my family was concerned, we were like, we need to get back to a more regular schedule. So that's what we're seeing, at least to kick things off, of course. And as always, we will start off our show here with upvote and downvote. We'll be charting and trading those upvoted names, and today discussing Dutch Bros as our FOMO candidate, which did touch new 52-week highs earlier in today's session. So a more unique niche name to look at for FOMO.
Your puts? I know it.
What's leading the Nasdaq today, and that's
it's killing me.
Seeing a pretty nice rally after Foxconn had some nice fourth quarter reports.
It don't have to be like this.
Best actually on record revenue, but also signaling more growth for those names with the various Asia exposure. I also think that relationship has become so important to the chip trade, so we'll discuss that more later on. And we'll close out the show here with under 30.
Right to my support level.
Seeing some love from the analyst community today. Actually, TD Cowen setting a new street high.
Okay.
Jenny, with the new year comes resolutions, and mine's always like, go to the gym more and stuff. And for at least January, I'm one of those who finds their way there, and it's a little bit busier. But, for many, it might be, hey, take control of their finances or focus a little bit more on what's going on in their investment portfolios. And as a part of that, we might have, people who are checking out the show for the first time, this week, and, hopefully will join us for the long term here on the Schwab Network. But I'm glad you went through kind of the show breakdown. Most of the programming throughout the day here on the network is going to be, pretty macro focused. Going to be talking markets, international, different asset classes. This is a stock-specific show. We do look at trades and things, but we're going to be going through a lot of company news over the next hour.
We are, and that's definitely, I feel like, where things kick off. I do feel like the news cycle, I was complaining towards the end of December how we were news light as far as our coverage is concerned. That is really not the case anymore. I feel like there's a lot of catalysts to discuss and a lot of, I think, analyst calls as we, of course, do kick off 2025 officially. It might take me a minute to get used to saying that, of course, as it always does. But to start off upvote and downvote, we'll be diving into one of these tech names that is seeing some unfavorable, actually, price activity and sort of analyst calls today, and that is Salesforce. It's actually our only name that is seeing this pressure today. Guggenheim did downgrade shares to sell with a price target of $247. So this is as negative as things really get, drawing some doubts from what is seen as now the street's newest bear. Guggenheim is concerned about how the company and its peers will be able to monetize a technology that nearly everyone is offering. I think a great point, actually, frankly, to be made. But Salesforce stock has been seen as a winner recently, especially in the back half of this year, as AI continues to help accelerate some of their overall presence. But this analyst thinks that might be misguided. They actually
Hit right to that where I thought we'd hit.
think that the rosy view right now and the potential for Agent Force.
That breakout high right there where we pulled back.
They said they do not believe that Salesforce.
That's where we stopped at. Then we got a hammer with a snake.
Several new assets that have been doing over the last decade what Agent Force aspires to do.
Salesforce.
The company status as a system of record gives it staying power, but in their view, it doesn't give any advantage in providing AI solutions that require this dynamic data with rich context versus some of the static data in the CRM houses. So I see that point. I mean, I think that we talk about the ways in which AI could benefit various business models. I've always said there's the Adobes.
Put on your glasses, baby.
It's massively disruptive and not obviously in a good way.
Yeah, you took the words out of my mouth, which is Adobe is another example of this. To kind of sum up what the analyst position is that I hear is this is a company that had a really strong position in the market, and that's being disrupted right now by this AI investment and AI technologies. And while they have some,
yes, Alex,
so novel and different than what other companies are offering, that it's going to continue for them to establish what they have. Then there was also some commentary on that Agent Force and some of the things they're working on there. But a name that has certainly seen more volatility than it's used to seeing in the last few years. A company that was very, very straightforward in its performance for really a decade leading into, let's call it, the end of 2021. And since then, it's been a little bit more up and down, like a lot of the market, but kind of unique for Salesforce in particular. As always, up or down votes aren't endorsements, they're not recommendations. Let's talk the next one on our list, which is Uber. A name that is pumping up its shares in terms of rebuying them?
It is. So it's announced entering an accelerated share repurchase agreement with Bank.
there she got them on. Oh, come on, girl.
Of their common stock, as they had previously announced within their $7 billion share repurchase authorization. So
the girl of 1,000 disguises.
Know is that right now the total number of shares to be repurchased is based on the volume-weighted average price of Uber's common stock. Of course, nothing new there. Also, though, I think that what is also a catalyst to the upside today, in addition to the overall markets, is some pretty positive analyst commentary from the sell side. We are seeing BTIG actually say that while Uber's commentary on its rideshare business has felt constructive, they do think that their receipt data has more of a downbeat right now feeling, with pointing out the currency moves actually could weaken their even guidance they're expecting from Uber. But they do still think that right now they're in.
This is a commercial. She's on commercials.
End of their 14 to 18% guide, with a first quarter outlook modestly lower. They do keep a buy rating, mind you, so it's still, to me, optimistic at a $90 price target. I don't necessarily look at that as any negativity. We also do know that New York City just became the first U.S. city to launch a congestion charge zone following years of delays and these various legal challenges. To me, this says that right now they're just looking for more and more ways to, of course.
Love is in the air. Oh, almost got carried away there. Mike's here. I can't sing no more.
You look at like the ways you get charged surge pricing.
We had a rock concert while you were gone, Mike.
Airport fee. There's ways in which these prices
They're glad you're here.
Unfortunately, that is not favorable to us as consumers. But I
Archie Room.
want to know. I looked at a note out of Lyft today. Uber does still command roughly 74% of the U.S. ride-hailing market. Uber
Someone say yes.
Actually losing market share continually for the last 4
Randy,
years.
say yes.
Whereas Uber continues to outperform, at least in terms of ride-hailing.
Ooh, Mike made a statement.
Divergence in performance lately.
CRM is going to be one of the top stocks in 2025. I think Uber is too. Uber will break 100.
That seems like a discount. That seems like, hey, we were already buying it. We were buying it at 87. We were buying it at 85 and 80.
Remember Josh, how he pumped his stock?
This a little bit while the stock's under a little bit of pressure.
And it dipped on him?
Things perhaps, but more so, we were already going to do this.
I didn't hear nothing out of him after that.
We're buying back, and I think that the company
190 days ago, or less.
Chuckle at when you hear about these.
And I talked about this one in my video.
All-time highs. It's like that's going to end well potentially, but this is doing the opposite. So I think that that's quite interesting. Doesn't mean the stock can't go down, and it won't necessarily go down, but at least Uber sees this as an opportunity, and take that for what you will.
No, that's a great point, actually. From where we've peaked, I mean, I think that, yeah, you're right. So many
La 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 la.
interesting move to buy right around 52 or all-time highs, and I think I can appreciate like the business moves Uber has made over the last several years is why it's pulled ahead really to me of Lyft. I think that they've done a great job balancing a difficult business model
Okay.
with a difficult gig economy, and I think that still remains to be reflective in its guidance and a lot of the earnings we saw in the last year or so. So I'm definitely more leaning towards Uber loyalty. I know we've talked about the wait times. Uber to me still is the better wait time of the two, but that's just my own anecdotal thoughts. Next name today here is MongoDB. Also with an upgrade, Guggenheim is raising the rating to buy from neutral, $300 price target, saying that MongoDB seems more like the ugly duckling in the infrastructure software as of late than the soaring eagle it's long been, which shares down about 30% from their fiscal third quarter earnings back on December 9th. So they do say their most recent channel checks indicate that fourth quarter consumption accelerated from third quarter, and assuming stable consumption in fiscal 2026, they do see more acceleration, specifically with Atlas accelerating to 29% growth. So yeah, a name that chart is pretty brutal. I know we just looked at some names that look actually completely opposite, but see this as an opportunity. I love that they called it an ugly duckling versus the soaring eagle it's long been. I mean, that's great verbiage.
Yeah, but then they're telling you to buy it. It doesn't get me too excited.
Ladies and gentlemen, we have 14 more minutes before the Fat Cats show up.
Towards the end of the year. And a lot of these names have been under pressure. If you do see the overall market...
So we're going to go over the watch list. And we'll do it on the 5-minute, 5-day. Unless I have to change it. So Uber's had a good run. But it's going to have a lot bigger run this year. We got NVIDIA. We almost hit that double top. We were within 60 cents of hitting it. 70. 65. 70. Something like that. Seems like there's a lot of new... But every time we get up here to the resistance level, it pulls back. And we got Regetta. We did break that $20 today again. That's 2 times now. And we came back and hit the previous resistance. It was 1846. Tesla's at 408. It could probably drop a little bit more and get back down to just under 400. Maybe even stop right here at 401.51, my old employee number. Right in there somewhere. And we got QSI, which is going to be the next Regetta. Now they're not making money either yet. But Kathy Woods and BlackRock are involved in this one. I got a 290 for a solid buy if we ever hit that. And SMCI. This has had a pretty good 2-day run. Now, as we know, we'll erase this. And we'll put the fibbies on it. Start off down here from the beginning of the run. Well, I know I hit that. So somewhere off this here triangle, right around 50% for a strong buy at 34.35. That's a $2 dip. That's where I'd set my alert. Jenny, you're distracting me. FFIE, Mara. Mara's above 20 bucks now. So Bitcoin, new target at 210,000 for Bitcoin this year. Can't wait till he gets in office so I can just get over this Biden crap. I bet she pardons Hillary. But I don't think you can be tried twice. You've probably seen she got the freedom of something. Here's a good watch list for you. $64.10s at 180. Let me see. There's 180 right there. Yeah, that's a 1, 2, 3 bits. Chance to drop down some more. That Rhyme bounced up. I was looking at that dip this morning. I was going to buy them. Now we're at a double top. There you go, Alex. 220. What do you think? $255. Singing machine to showcase industrial leading karaoke microphone. Let me see if I can find that microphone. They're all sold out. Sold out, sold out, sold out. Oh. Is that it? No, I don't think they have it up here. We have 1 minute before the fat cats come back. 1 minute. MDB.
We're approaching our yellow 21-day EMA near 261.50. That could be a mark to watch as we head into the close of this day.
Okay, and especially now when we look at our
Fat cats are back.
momentum is giving us any sort of indication different than price. We are attempting to at least recover some of these losses today with a decent 3% move, and we're up now about 9% so far in January. But gosh, I mean, we have a long way to recover from here.
Yeah, it's been a rough road here recently for this name, and we can see as well that RSI is mostly just kind of mirroring what we see in terms of the price action here. We had this point of maybe possibly bearish divergence. It's kind of weird because we had red candles that were down on the day. You go by the closing prices, not by the highs here. So some slight bearish divergence, but you know, it wasn't looking super promising as we had that kind of rejection. And we also failed to get back to 385, this repeated low point and subsequent high point here. We fell far short of that level before earnings. Then we kind of deflated a little bit. We managed to get out of the oversold area, but we're still below that 50 midline even as we are rising here. So that would be a bullish signal to look for, would be a break above the 50 midline.
Okay, and last but not least here, what levels of support and resistance are you watching? Hopefully seeing this name become more of that eagle versus ugly duckling that the analysts were saying, which was an analogy I loved, but hoping for this nice momentum to at least continue as we progress through this year.
Sure, and you know, I guess I don't know birds very well. But it's yeah, it needs a bit of a lift in its wings here, I guess I would say. I don't know, but we came near our volume profile point of control here, 245 or so. That was the area of heaviest trading at these low levels, so maybe that could suggest that potentially people were willing to make plays at a significant low point here. So we can see that was also our blue line, the site of our linear regression line, our line of best fit. Our idea of fair value is about where we bottomed out recently based on the year of data here. So another supportive area that we managed to hold in addition to those recent lows as well that we saw here.
It's a burn. My shoes broke
August,
today.
September, around that time. So if we were to keep pushing to the upside, well, around this area right here, volume node, 252-day EMA, plus one standard deviation channel, near about 300. That seems like a one place to watch. But then ultimately, all the way up here, 385 represents that kind of double top area we saw, plus two standard deviations, kind of a tough climb here. To the downside, though, we would perhaps be a little bit more curious. Once again, we have more of a bearish read on this one. So if we were to break below this level that I highlighted there, kind of around that 230 area or so, that's where things could get problematic. Then look for a break below 212.74 for those low points on our year.
Okay, the name we'll have to continue to watch and see. I also cannot think of a possible bird analogy, but maybe get some wings beneath the wind beneath the wings here. There we go. That took us a few tries, but appreciate it, Rick, as always, for the technical breakdown.
I think we're going to get more snow. It looks like it is.
For example purposes, very different chart, very different price over the last 12 months in Salesforce, but you'd think it would benefit from a lot of these same trends. I mean, it just hasn't, frankly.
Yeah, analysts starting to change their tone to a little bit more positive. Stocks trying to base. You have that recent low of 230 or thereabouts as a support level. Neutral to bullish strategy here in MDB. Elected to use the February 7th weekly cycle. The reason I didn't go to the monthly cycle was just $10 strikes available in that February monthly cycle. You don't have earnings to worry about until March, so
very cold.
Time to work with this one. 230, 225. February 7th, short put vertical, looking for at least $1.25. That would be 1/4
Ouch.
of the strikes here on this phone.
Tonight it's going to get down to 12.
375 with a chance to make 125. Break even 228.75. Elongated Z risk profile that we've come to know for vertical spreads. Jenny, you just need this stock to hold its recent levels, and this one has a chance to be profitable.
Yeah, just hang on to a lot of these same, basically, which I think is what these bulls, and I'm sure the impatient bulls are hoping to see here. And MongoDB, of course, making a near 3% move to the upside today. But we will leave it there for our Chartmaster segment. Now, coming up next, it's time to look at Dutch Bros, which is definitely seeing a favorable session as we did touch new 52-week highs earlier today. We'll dive into the coffee maker and some of the optimism coming up next.
I'm going to go out and put my screen on my car. Come back.
Empower your portfolio with the Schwab Network. Schwab Network is available.
Crash after on sticky highway.
Any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Yet each and every picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your number one broker.
We're having technical difficulties.
Skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market.
So we knife. Were you able to get out of them?
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
The 6,000s are now at $1,200.
Welcome back to Next Gen Investing. It's now time for FOMO. We are discussing a name I frankly myself have not looked at in quite some time, but glad to see it touching new 52-week highs today. That is Dutch Bros, as it did touch highs of just shy of $89 a share, we'll call it. We've given back some of that strength already on the session, but still up 85% over the last 12 months. So having a really decent rally when you zoom out and look at the bigger time frame here. Joining us now to discuss more is Caroline Woods, Senior Markets Correspondent for the network. So Caroline, analyst optimism, I believe it was out of bear today. We've given back some of the strength, but still, all things considered, a decent pop, of course, to start this week. Hey there, Jenny. Yes, Dutch Bros had a really strong 2024, and it's off to a good start in 2025, up about 10% so far in the first few trading days of the year. And as you said, up about almost 85% over the past 1 year, only about 2.5% away from those 52-week highs. And yes, it was Baird that is turning bullish on the shares, upgrading shares to outperform from neutral, raised their price target to $70 a share from $60. That's a street high for Dutch Brothers. The analysts did admit that this isn't their preferred upgrade approach, given that they did miss out on so much of the rally, but said there's still opportunity to deliver outperformance over the next 6 to 12 months. If you take a look at that $70 price target, it's currently trading around $57 a share, so that's still about 18 or 19% upside from current levels. Barrett said we've become more confident in the near-term fundamental setup as we enter 2025. And we think signs of good operating momentum in upcoming quarters can help to bolster investor confidence in companies' longer-term growth prospects and support premium valuation metrics on the shares. Now, Dutch Brothers is also, or Dutch Bros, I should say, is also testing out an expanded food offering. I was checking the website. It currently only has muffin tops and granola bars, but apparently they're adding or testing out other bakery items and hot food items as well in hopes of becoming kind of a one-stop breakfast shop. And Baird actually says that that is helping give them more conviction as well. So this is a name, a store that I've actually never been to. I was taking a look at the map. There's none near New York City and none near Chicago either, so I'm not sure if you, Jenny or Alex, have been there as well. But it's really gaining momentum. They have almost 1,000 stores now, and they're in about 18 different states. So it's expanding, but just haven't tried it out yet.
Yeah, I have not either, Caroline. Noticing it's not in my hometown either of Omaha, Nebraska. It's kind of surrounding that area, but until it either ends up in Chicago or Omaha or one of these places I go to on a regular basis, I'm probably not going to encounter one. But, you know, New York City, Chicago, these are growth opportunities potentially for a company like Dutch Bros as well. So perhaps more to look forward to. I know not every analyst on the street covers this name, but broadly, it does seem like the street likes it.
Yes, Alex, based on the map, I think there's a greater likelihood that you'll go visit one first, compared to me at least. So you'll have to do a channel check and report back. But yes, if you take a look, there are about 13 analysts that cover Dutch Bros right now. 11 actually have a buy rating, so that's 85%. The median price target is $57.50, which is basically in line with where it's currently trading, so we'll see if there's any adjustments. It's obviously hard to compare a Dutch Bros with Starbucks for many reasons, just due in large part to scale and size, right? Starbucks has 38,000 stores or something like that and operates in 86 countries. But I was taking a look at the analyst breakdown for Starbucks versus Dutch Bros, and only 48% of analysts have a buy rating on Starbucks, obviously going through a lot of changes. China is obviously a weak link for Starbucks as well, but even here in the U.S., if you take a look, Dutch Bros have delivered some pretty impressive, when they last reported Q3 results, for their Q3 results. Q3 same-store sales rose almost 3% in the quarter, while transactions rose about 1%. If you took a look at Starbucks North America, I was looking at when they last reported U.S. comp store sales declined 6%. On 10% decline in transactions. So Dutch Brothers could be chipping away at market share from Starbucks, which, we've certainly seen that as an issue for Starbucks as well. So analysts definitely bullish on this name. I know you can't, compare apples to apples, but pretty close. And obviously both serving up coffee. And with Dutch Brothers or Dutch Bros, could be serving up more food in the near future.
Okay, and I'm so glad that we all have acknowledged that none of us have been to one, so that's always where my skepticism lies, because that's a phenomenal growth story, but I'm like, wait a second, 3 people haven't been even close. I mean, I've never even seen one, so I think that we need to get some closer to, we need to migrate from west to east here. I do agree that it might be sooner that we get one than you all get one, but I do hear really great things, frankly, and I think that that's an amazing thing right now, especially with a lot of negative PR and sort of flack that Starbucks is taking. I mean, is there just the thinking that this is a new brand, it's maybe more consumer friendly, and it's just not the behemoth that is Starbucks, so there's somewhat of a loyalty there to not go to the massive corporations that are Starbucks, McDonald's?
It could be that. It looks like when I was doing some research on Dutch Bros, it looks like they've been around since the 90s, I believe, so it's not totally new. Obviously, publicly traded is a different story, but I do think that, I was reading just in terms of there's broistas, I believe they call themselves, instead of baristas, that actually come out to the drive-through lines and help get orders moving and such too, so it seems very consumer friendly. They did launch a mobile app recently, which accounts for something like 7% of sales, so it might just be a totally different experience for Dutch Bros, I keep saying brothers, as well. That being said, after looking at the menu, the one thing that surprises me, and Starbucks does, of course, have sugary drinks as well, but the menu seems very colorful and high sugar, not necessarily the most nutritious drinks on the menu. I see, I know that they were quick to capitalize off the energy drink phase when that first became a thing, but I'm an iced tea drinker, and there's a lot of fruity peach, passion fruit iced teas, which is not what I get at Starbucks, which I guess surprises me just because it seems like there's such a health conscious consumer out there right now, but I guess that they're still able to capitalize on that, and who knows, maybe they'll introduce some healthier options as well.
So I hear broista or whatever instead of barista, and I think this is a Gen Z coffee chain, because that's the only thing that makes sense to me. It's so funny you also mentioned, I did just sort of peruse over their menu, and I'm a sugar fiend, so I'm like, this is totally right up my alley, which is not healthy, so I need to take a page from you there, but that is such a good point. I mean, broista, I'm just like, who is their target audience? I think I'm too old to go there, but I still... We'll have to find our channel checks and find a store one day when they come a bit closer to us both. But
2025 bucket list. Yeah. One of us goes to a Dutch Bros and checks it out.
No kidding. One between the 3 of us. Gosh, you'd think with a growing coffee chain, someone would have been there, but we'll have to maybe go a bit west. But appreciate it as always, Caroline Woods, Senior Markets Correspondent for the network. And now, Alex, ahead of this trade here, I mean, your thoughts. I know that you've also never been. We have to get one of these closer to us, though. I have no plans to go out west, so I need them to come to us.
This map, and I see a bunch in Colorado. I think we got Kevin Green on in place of George Chelsea. We'll have to see if Kevin Green's been to one, so maybe a bonus question for him at the end of the show. But I guess my general thought on this as to why this stock might perform one way versus Starbucks another at the moment, that seems kind of like they're going opposite directions, is the same kind of thing you're seeing with a Chipotle and a Sweet Green, or a Chipotle and a Cava. These are newer, or at least growing restaurants trying to become Chipotle. Dutch Bros is hoping to become Starbucks one day. Starbucks already has grown, and so now Starbucks is more concerned with how much do coffee beans cost? Do we have too many stores in this area? Do we have too many things on our menu?
Are we too woke?
Expensive. How do we manage labor costs?
Are we too woke?
Dutch Bros is what market have we not broken into yet?
Are we too woke?
We haven't added food yet. Now we can add food. So it's just a different part of the game. I mean, this is really the conversation Starbucks was having 10, 20.
You didn't answer the question right, Alex. How do I get rhyme up there? Okay, we're at the 63 on the 5-minute. Oh, excuse me. Looks to me like we're going to come back down here and hit my third support. Oh my gosh. 6,000 or 1,500, Alex. Go on. They're at 1,500. Magnificent. That'd have been $4,000. Jim, that was a good call. You just should have stayed in them. Not good. Damn, December 6th? Okay, here we go. Randy. Man, this thing went to 1,700. Okay, the calls, the
One
6.
DFA analyst did
Honey,
say that they view
where's your
CES
glasses at? You can't talk until you put them on. We will not listen to you until I see you in your secretarial glasses. I changed my mind.
And so some of this is due to some of those headlines too, but hard to imagine a consumer electronics show in this world of AI and the build out of AI, and there being excitement at this
Golly.
show, and NVIDIA not being
so
at least
pissed
in
off.
part somewhat.
That ain't that big of a move either.
Right, I mean, you'd have to hope if for all the enthusiasm tied to NVIDIA with AI that they should be, I mean, one of the biggest, perhaps winners, or if like.
These that ain't that big of a move. $26 from where I got in them at. The 6,000. Okay, I'm getting ready to take the 6,000 calls at 135. Magnificent. Get that grade pen out. Mr. Doom and Gloom is getting back in the trade. January the 6th. Strike. 6,000 at 1.35. Yippee-yi-yi. Yippee-yi-oh. Let's break out. Yippee-yi-yi. We're at 185. I'm up $500. Ghost Riders in the sky. Uh-oh. I'm sorry. I got carried away again. Brandy. We're at 190 now. Big old long snake. Actually, yeah. Kind of like a megaphone, a downward megaphone. Oh gosh, look how high that goes. Back to 5993.89 is going to be my guess. And that's not supposed to go right there, so let's get that out of here. Leave. remove drawing. We'll do it from this one here. There's the 1, 2, 3. Son of a bitch. 220. Okay. What's going on here? Why ain't it extended out to the right? We hit the pivot point. We're having technical difficulties. We're having technical difficulties. Well, I know my car doesn't like the ice and the snow very much. Or at least it's sticky today. My doors were. I couldn't hardly open my door this morning. It's 15 degrees outside, it seems like, or colder. Hey, there's Mr. Green. He's actually Mr. Black.
But it has improved pretty.
That's racist and misogynist.
40 billion now, so they are chipping away at that, and that's going to allow them to benefit a little bit more, as you talk about, with some of this pricing power and demand that starts to roll in. But KG, you didn't catch this probably, but we got to ask you, Denver area, Dutch Bros, you've been to one of these locations, you tried this product, none of us have.
We have a couple of Dutch Bro locations out here. I personally have not tried it. I'm more of a great value coffee type of guy, but it's always packed. It kind of reminds me of Portillo's when you go to Chicago. It seems like there's always a line of cars out the window, during in the drive-through here, and Dutch Brothers is kind of the same.
Is that a problem?
So it must be good.
Kevin, that is so amazing that none of us,
Kevin?
not Caroline Woods, not you or myself or Alex, or any of us has been there. So we need someone to go and do some proper channel checks. But do appreciate that you're more of a value coffee person, because I myself am not also a fancy coffee person, so I can respect that. But appreciate it. We'll have to have someone. We're going to probably force you to go since you're closest regionally. But appreciate it as always, Kevin Green.
Well, you spoke a lot of words and meant nothing there, honey.
And that'll do it for Alex and myself for Next Gen Investing, of course, for this Monday.
We are at the 21, so that could be a good exit idea. But again, if I sell it, it'll run. And then if I don't sell it, it'll drop. So I got to make a business decision. I'll do the fake sell. Oh, I did that earlier and look what it went to, $2,000. We're having technical difficulties. The fake sell wouldn't go through.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Tesla back to 404.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security.
There's a knife on Tesla.
Your money's safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage.
What'd I say? Just under 400. 397.
Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Never heard of it.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hughes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Ameritrade is now
Fubo's back at top again.
bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the
I had a lot of high hopes on Fubo at one time.
Traders who live and breathe trade.
I really did. I thought this stock was going to go somewhere. I thought it was a great company myself. Man, it's been longer than that. Seems like it just can't break that. Oh, it did today. We did break to 63, so $7 long, really? Disney deal will shake up sports streaming. No, I don't think so. They must have undercutted them. It seems like all they care about is sports. They don't put out any other good content. Jimmy's making money. Yes, I am. So what time is it now? It's approximately 2:01. And it's cold outside.
Biggest stories in the markets. I want to welcome in Kevin Green, senior markets correspondent.
Well, Mike, I'm glad you enjoyed your vacation.
So, KG, as we start out this new week, in theory, this is kind of basically the first full trading week. It's got a little bit of anomaly this week. Does it seem like kind of everybody's
You think puts?
back and it's the buy the dip crowd?
On what?
It's just back to business.
SPX.
Back to business. I mean, we did see a nice little pop to the upside.
I think
6,000 level in the S&P 500, getting actually up to 60.20, but we have since faded here, Diane. It does appear that the market breadth is starting to narrow a little bit. But was actually very
I think we need to move around a little bit. I took my profit on them.
Session like energy, which was up over 1%, has now actually gone to the red, and the S&P 500 right
Golly.
now seems like it
The 6,000s are at $2,700. $2,860.
has been on fire for today. But Nvidia is also starting to spike here too. It was only around
That'd have been $8,000.
all-time highs, but now trading at around
8, 9 grand, almost 10 grand.
here. Hopefully we're going to be able to hold this. But when you're looking under the hood, the market breadth is starting to narrow. We're only seeing around 52% of the stocks actually in the green here today. And in fact, even though we have green on the screen and we're up 0.5%, the VIX is actually higher on the session, up around 0.46 points to start the day off. And that's not really the sign that you really want to see going into this week. You really want to see compressed volatility, as we have a lot of economic data points going to be hitting the calendar, as we will have non-farm payrolls on Friday. We have ISM services, manufacturing services, and PMI coming out, as well as some of the ADP numbers. So a good day to start off, but it does appear that we are weakening.
Yeah, it does. It surprised me. The flagging surprised me, especially when you didn't see stocks flag earlier in the session, when you had President-elect Trump saying, you know, some of the catalysts seemed to be that report in the Washington Post saying the tariffs wouldn't be as broad as expected, right? There would be
My gut was right.
focus. And then when you had President-elect,
I can't tell you how many times I wanted to sell them at a small loss or even get out even. It had to have been, it went through my head at least 4 to 5 times, and I held them. And then they run up to almost 3 grand. 28.60. I had 4 of them. I want to cry. I don't want to do this no more. I've got to take this profit. I mean, these things can dump all the way down to the gap fill now that we broke the gap. January 6th. Don't that remind you of anything? And the Democrats still don't want to give it up. They want to have an insurrection, even after us getting the popular vote. That was such a fraud. How crooked them Dems are. January 6th. Oh boy. Oh, what a night. Do you think we're going to drop more? This guy's a smoker.
That decided to design a new short-haul plane. It decided to
Rethinking shareholder value in modern markets.
And we've seen a whole series of decisions at Boeing which
Really?
have reduced the reputation of that company to a fraction of what it was.
Are you serious, sir?
And while we have you, I want to ask you, because obviously you would have unique insight to this, the difference in terms of the performance between equities in the U.S. and the U.K. For instance, if you look at how the FTSE and the S&P 500 performed, there's
Okay, Jimmy's getting ready to make a new
for example,
trade.
for 2024. What is it about? Why did the U.S. continue to outperform the U.K.?
There are a number of
Because we
reasons for
suck.
that. Probably the most important is you in the US have successfully created a number of international tech companies. We've had much less success in doing that in the UK and in Europe. But in Britain, when a company reaches the kind of size where it might think of an IPO, it tends to look for a trade sale to some other company. In the US, you get an IPO. That's one of the reasons.
Gosh.
There's a second reason, which is we've regulated pension funds in a way that has directed pension saving very heavily towards bonds and other fixed interest investments over the last
That could be a
25
problem,
years.
sir.
And that's removed the growth capital which companies like these might have accessed in a different regime.
That could be a serious problem,
Leave
sir.
it there. Thank you so much, John Kay, economist and author. His most recent book, The Corporation in the 21st Century. Thank you so much, Sir John Kay. Coming up, we've got Options Corner. Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news on Walmart, Micron, and Palo Alto Networks. Stay with us.
Do 63 EMA.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
On the IWM. Okay, we're squeezing between the 9 and the 21.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time now for Options Corner, where we analyze unusual options trades seen throughout the day. Let's welcome in Tom White, host of Fast Market here on the Schwab Network. Tom, all right, let's start out with this one. I was surprised by Walmart. You found a bearish play here. I am surprised by this, especially when you think about how Walmart performed last year. What did you find?
Yeah, Diane, it's pretty surprising the gains that we saw.
Okay, watch SPX here.
One of the leaders in the S&P 500, up over 70% last year, hit all-time highs in the month of December, and they have, the earnings reports that kind of backed it up. They saw revenue growth anywhere from 5 to 10%. They saw a reignition in a lot of their grocery sales. That's now over 50% of their revenue is the grocery side of their industry. And Diane, this is one of those stocks and companies that is almost recession-proof, right? Because if the economy's doing real well, everybody's still going shopping, right? Whether it didn't not dependent on what level of the consumer is shopping at Walmart. And then when inflation hits, those higher income consumers start to go more to Walmart. So seen a real pickup there. Sam's Club's doing really well also. And they expect through 2027 that compound annual growth rate of about 5% on revenue and 17% on EPS. Those are the expectations moving forward. But I think one of the key, thorns in the side for a lot of investors here moving forward is that the stock is really expensive right now. If you look at it on a PE basis compared to historicals, a forward-looking PE that's nearly double the 10-year average on Walmart. Those are probably concerns, I think.
Let's go to Walmart,
A lot of investors
fill up our
having,
shopping carts.
As we've seen this parabolic move over the last year and a half.
Pinball,
in
bird
Walmart.
sees all the things you
The
need.
company reports earnings on the 20th of February. I think that's going to be a key catalyst
Extend to the
for the
right.
stock moving forward. And I think that's what this option trader is setting up for. I did see a big positioning in the February 21st monthly options that expire the day
Randy,
after
I'm in the
earnings.
calls.
On February 21st. I saw a trader buy over 6,000 of the 85 strike puts. They paid an average debit of about $1.06 for these 6,500 puts. That break even for this trader where they start to profit is $83.94, and that's over the next 46 days. So they've got plenty of duration on this trade. The break even is about 8.5% below the current share price in there. Now, I don't know if this is somebody speculating to the downside, buying some cheap out of the money puts to take a position that, hey, maybe Walmart's run out of steam and maybe it needs to pull back and get those valuations closer to the historicals. Or it might be a big shareholder in here, Diane, that's kind of hedging their existing long stock position that's done spectacular over the last year.
Done very well.
Okay, that would be an interesting
Oh, that
one
was a
if
scary
that's what's
laugh.
behind that one. All right, so you've got, on the flip side of this, you've got a bullish play that you saw in action here. This is for Micron. What are the details on this one?
Yeah, this stock got hit on this last earnings event, even though on EPS and revenue, they beat pretty soundly. The problem was the current quarter estimates they guided far below what the street anticipated. Nearly $1 billion in revenue on that guidance cut. You can see here from the stock moves that we've seen recently, stock pulled back. It was actually down just over 1% in 2024 after hitting all-time highs in June of $157 per share. We're off about 37% from those all-time highs already. And if you look at the AI landscape, high bandwidth memory, that Micron's one of the leaders of. You need like 4 to 5 times as much memory to run these data centers. That's been the part of their business that's really growing exponentially. But the problem is all their legacy NDNA and DRAM
back to
memory
130.
has actually been pulling back. They haven't seen a resurgence in those spots, so that's kind of weighed on the stock, and that's why they're giving poor guidance moving forward. Now, the news, the reason that stock's up double digits on a percentage basis today.
Yeah, why?
Probably on the back of the Microsoft news, Nvidia ratcheting back up towards all-time highs in today's session. So a lot of the chip names, and then maybe some
Sister
spillover from that Washington Post report that said that Trump might not hit as hard as far as tariffs go, which really could affect the memory chip business at this point. But we did see.
What have I been saying for months? That they have exaggerated this tariff deal over and over and over and over again. Trump's a businessman. He's not going to do anything to hurt his stock market. We're going to cut regulations. We're going to bring the price of oil down. We're going to stop the wars. And we're going to close the borders. And we're going to arrest anybody that is trafficking children. And give them the death penalty. Biden.
Kind of choppy today.
Biden furloughed a bunch of child molesters.
Advantage of this over 2% pullback that we're seeing in Palo Alto today, and that's on the back of a report, an analyst report out of Guggenheim, where they downgraded the shares to a sell from neutral, $130 price target, and they
I need this thing to break. I can get out here with $200.
Even though new annual recurring revenue for the total business has declined in each of the last 5 quarters. So that growth has been slowing. Now, we always talk about cybersecurity, the need for it, the total addressable market in this space. But now, on a historical basis, Palo Alto shares are getting very expensive on that forward-looking EPS view
oh, really?
2025. That's
PAWN?
I think that the Guggenheim analyst had. But at the same time, Diane, he was at neutral when the stock was hitting all-time highs at the end of last year. So maybe he's behind the curve here a little bit.
The PANW.
Some dip buyers in here in the calls. And these are really short-term positionings that I saw today. In the January 10th weekly cycles that expires on Friday, so just 4 days to expiration, traders bought over 15,000 of the 185 strike calls, paid an average debit of about $1.20 for these calls. So that break even of 186.20 over the next 4 days, that's about
5 weeks up here.
Where they can start to profit.
We did pull back once there.
Volume about 3 times normal daily average volume that we've seen over the last 5 trading sessions.
So if we break,
pull back today, but at the same time, maybe this analyst was out of the realm of what was going on in the stock before, but he put it down to a sell. Somebody's buying the dip here in the calls.
All right, he's maybe possibly playing a little bit of catch up.
Yeah.
Tom White, co-host
Catch
of
up.
Fast Market. Thank you, Tom.
Thanks.
179.06 is resistance to break.
Cybersecurity and what to expect from the Trump administration when it comes to deregulation. I'll be on the other side of this break.
I was listening to CNBC this morning. All they could yak about was tariffs.
Powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed.
Okay, we're at 155 now. Randy. VICT. We got to break it. I really don't want this to go down. What time is it? Oh, Jim, you're entering these trades at a very bad time of the day. Did you get a lot of snow? Come on, baby. Break it. We're still at 135. I do too. What are you in? What are you in, Jesse? QUBT. I need to add that. QUBT. Spy. We have a double bottom here. So you're at a double bottom. So resistance is going to be this right here, 596. Okay, Jimmy's not looking good on this one. What did it do? Break out more? Oh gosh. BBAI. Big Bear Mama Yay. Wainwright adjusts price target on Big Bear to $7 from $3. Keeps a buy rating. That was on 12/31. Yes, buy has to hold to 594.90. There's a little bit of selling pressure going on right now on Fubo. A little bit. Ground cover snow. Okay. NVIDIA bullish trend. Come on. Pull back to support.
On every changing trend in markets. Available any.
Yeah, where'd that old man go? He ain't been around much.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis.
Yeah, so right on these trades.
400 technical studies. Tailor the platforms to your unique needs.
So they looked at that man over at back this morning when I got the puts.
News and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Diane King Hall. A new month and a new year means it's time for a check-in on the Schwab Trading Activity Index, the stacks report. For that, I want to welcome in Joe Mazzola, head trading and derivative strategist here with Charles Schwab. Joe, I love hearing your insights in general, but this one I know is a special report. What
Get some water and I'll be right back.
Stacks report?
Hey Diane, Happy New Year to you. Happy New Year to all the viewers out there. Look, the big takeaways for the December stacks report was that even with the market down about a little over 1% in the S&P 500, clients bought the dip, and they looked at opportunities in stock like Nvidia, which, I mean, let's be honest, that's a crowd favorite. That's one that is traditionally up on our report. But Nvidia, if you look back at the month of December, was down at one point about 10%. So clients bought the dip there. Tesla was another name at once it kind of pulled back after the Fed meeting. Clients kind of scooped up that one. And the last one being Palantir. That was the other client favorite. That really didn't dip at all in December. Just kind of carried forward some of those parabolic gains.
And was there any divergence between what investor activity was in the stacks versus kind of overall activity that we saw in the market?
Yeah, so the real big divergence then was in November, and that's when, following the election and following kind of the post-election move, we saw clients trimming quite a bit. So the stacks is basically flat. And the divergence you saw between the S&P 500 and the stacks was the widest that we've actually seen since we've been recording this. And to see kind of that catch up a little bit. So you started to see, as the market pulled back a little bit in December, clients actually started to, to buy on those dips. I mentioned the three names that they bought the most heavily, but sector-wise, and I think this is really interesting, they trimmed in IT, they trimmed in communication services, they bought energy, they bought healthcare. That's the first time we've seen that in a while, where some of the unloved sectors have been bought more heavily.
Especially energy, to your point, and we started to see some changing patterns at the beginning of this year when it comes to energy. We'll see if that holds.
So we got a triple bottom on the SPY now.
To watch, and so you saw some, where you saw some trimming. Where did you see, kind of big positions being added or sectors being added besides, like, I know you talked about IT. Was there any other sectors that stood out?
Well, like I said, communications, they sold that one. And I think, another one that was interesting to me was utilities. Kind of a little bit, doesn't really kind of rhyme or reason with, with the other two, but utilities pulled back probably, that's probably more rate related. But another theme, Diane, that continues is kind of this rotation into ETFs. And that's just been a big theme over the last 4 or 5 months. One thing that was specifically interesting about December is it had been about 4 months in a row where we saw trimming specifically at the equity level. And what I mean by that is stocks, not necessarily ETFs. So there had been a kind of a big rotation out of kind of stock picking and a little bit more into kind of passive investing. What we're seeing now is kind of that movement back towards the stock picking. And that's, that was a big takeaway for me in the December report.
That's interesting, especially because we've consistently heard this theme, especially given how the S&P 500 has performed the past couple of years, that it's, kind of no point in trying to beat. Even though, yes, there were some big winners for the year, like, you know, you talked about the beloved NVIDIA, which is up today, and, you know, say Vistra, and, you know, Palantir, etc. Let's dive into, I want to take a look at some of the sentiment components that you saw. What stood out to you in terms of sentiment, how investors are feeling?
So that's a great question, and really what we're looking at here is the difference between what they're saying and what they're doing, right? And the stacks, the Schwab Trading Activity Index, measures what they're doing. On kind of how they're feeling, that's a little bit different. So we saw some of that bullishness kind of pull back a little bit into December. We saw a little bit more bearishness, and what we do is, you know, we basically ask how bullish are you, how bearish are you, and there was a bit of a pivot towards there. A couple other things that stood out to me a little bit too is there seems to be a little bit more concern around inflation from our traders. As you know, I was starting to see those numbers kind of ratchet back up. Inflation and interest rates are kind of coming back to the forefront in terms of investor minds.
And then what about activity around crypto? What were the takeaways from the latest stacks?
Interesting there, Diane, is that you know, we're still seeing some of those maybe ancillary names, like a MicroStrategy is a top 10 on the list again. Last month in November, IBIT, which is the ETF that you can trade for the cryptocurrencies, that was on in the top 10. But what they're, once again, there's a difference between what they're saying and what they're doing. And what they're saying is that they expect crypto to have gains in 2025, but maybe not to the same extent as in 2024. Which, you know, is understandable, kind of given the gains that we saw.
Okay, that does make sense in terms of what we've seen. I mean, although, you know, it does seem like towards the end of the year, post-Fed, we did see some selling in crypto, but we've seen some resumption of those levels that they sold off for as when it comes to Bitcoin, for instance, which is continuing its climb today. But I want to dive in a little bit of what investors started trimming in their portfolio. I know you talked about, again, some of the beloved, but where was there more selling, and when we think about stock-specific selling?
Sure. Three names come to mind here. Apple. If you kind of look at Apple's momentum and what it did in December, really kind of, you know, keying off of the move we saw in November, really rallied in throughout the course of the month. We saw some trimming there. AT&T, this name just continues to kind of hit our list. I don't know if it has something to do with rising rates in terms of whether or not that's, you know, makes dividends a little bit less attractive. But then the last one on the list, and this is really kind of a sell into strength, and that's Broadcom. I mean, if you look at Broadcom and about the 40 to 45% move that I had in December, clients use that opportunity as a way to kind of trim some of that risk, take off some of the beta in the portfolios. And like I said, you know, to me, when I see that type of activity, that trimming into strength, it really kind of screams rebalancing. And, you know, here we are at the end of the year back in December, and that's the type of activity that you tend to see as we're heading into the new year. It's nothing really new from a client standpoint.
And then was there anything else that stood out to you when it comes to, you know, say how clients are positioning? I know, especially when we looked at the post-election trading activity, a lot of there was momentum activity. Was there anything, momentum or seeking value? What came up in this report?
Well, so what's really interesting about that is if you look at the moves in some of the sectors kind of post-election, right? You know, maybe the first 2 or 3 weeks, you saw a real broadening of the market breadth. You know, it gotten up to 65, 70% of the S&P 500 above their 50-day moving averages. It looked like there was going to be some follow-through. And then here we go, rallying into kind of that post-Fed announcement, and a lot of that breadth just really dissipated. It's all a very similar kind of activity within our client portfolios. You saw some of the outperformers within those first couple months. You know, financials kind of fell off a little bit. Although I will say this was the first time in a while that we saw more than 8 of the 11 sectors have positive inflows. You know, from a client perspective. So while they were, you know, kind of trimming the beta, right, trimming some of that portfolio risk, they were adding to some of the underperforming sectors. And I think that's kind of the takeaway from what we saw at the end of the year.
All right, Joe, any final takeaways or unique things that stood out to you? I'll give you, we've got a few more, 30 more seconds for any final takeaways.
Sure. Yeah, I still think the breadth is something to kind of keep an eye on, even on a day like today, or even on Friday. We got down to the point where we're about 20% of the S&P 500 above its 50-day moving average. It's something to monitor, because if we want this market to expand, kind of given the valuations and where they're at right now, we need the rest of the market outside the Mag 7 to really make that move. The Mag 7 kind of held the last couple of weeks, through the 2024 year. But if we want to see this continue, it really all starts with earnings next week. Keep an eye on financials. They should, right? They should. We don't know for sure, but they should report pretty good numbers given the fact that they had the steepening of the yield curve, given some of the excitement around M&A, potential for M&A activity, and for some of the deregulation. But that's going to be something to key on next week.
All right, what's the key on ahead? That's Joe Mazzola with the latest stats report ahead, trading and derivatives for Charles Schwab. Thanks, Joe. Still ahead, we bring in our panel to take a look at Constellation Energy and the outlook for nuclear power as demand rises from AI and data centers. That is next.
Come on, baby.
What's up, Carl Nation? It's your #1 broker with the best full service wealth management skills.
160.
Actually, I'm seeing something.
I'm gonna get all of them here.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. Time now for an outlook on nuclear power and the outlook for Constellation Energy. For that, I want to bring in our panel, Anthony Caudill, Executive Director and Senior Utilities Analyst, Mizuho Americas, and Daniel Rich, Senior Equity Analyst, Senior Research Analyst, Equity Analyst, CFRA. Thank you both for joining us today. Anthony, let's start out with you. You've got a neutral rating. Let's talk about your outlook and your expectation for 2025.
Yeah, I mean, our neutral rating is based on valuation. I mean, the stock right now is CEG. It's had an amazing run. We kind of got caught off sides. We did not think IRA was going to pass in 2022. That gave the nuclear plants production tax credits, which was just driven them into hyperdrive. But for us, it trades at roughly a 50 or 55% PE premium versus the utility group. And we just struggle. I mean, earnings growth is solid management team, 10%, 11% earnings growth. But we don't think it should trade north of this valuation, and that's what is our basis for the neutral rating.
Even with the expectation for demand to increase within AI and Constellation Energy expected to be a beneficiary and the reopening of 3 Mile Island?
Yeah, you know, all of those things make sense, right? They're all attractive. We think they're all priced in. If we just take them bit by bit, bringing back 3 Mile Island is great. Adds more megawatts. It brought up their earnings growth rate, and I believe it, north of 10% from the addition of that plant. That is great, but that plant was already built. They retired it or had it in like warm shutdown for a couple years. but they're not planning, nor is anyone in this country planning to add any new nuclear plants. We keep hearing about SMRs. That technology just is unproven. While this new, we believe the AI demand story, the data centers will require a lot more electricity. So far, we have not seen any new nuclear projects planned to get built that are going to meet that demand. So unless I think the U.S. government is going to step up, or a governmental agency is going to step up to build those plants, or if we have a large tech company like a Google or Microsoft looking to build something, I don't think the answer for nuclear is going to come through the utility sector.
All right, Daniel, I want to pivot to you. You've got a buy rating, though, on the CEG, Constellation Energy. You've got $280 price target. What's behind your bullish sentiment?
Yes, so 280 is still our target, even though the last few days have been pretty magnificent for Constellation and kind of already approaching our target. It's something that we'll probably revisit and potentially raise here in the near term. I think a lot of the things that Anthony pointed out, we are just a little bit more optimistic about as it pertains to Constellation. So he mentioned the Microsoft deal, how they raised their long-term earnings per share guidance from 10 to 13% on a compounded annual basis from 2024 to 2030, which is fantastic. It's really probably about double the average for the typical utility. Margins are growing, and they're using a lot of free cash flow to increase share repurchases, which is feeding into that earnings growth. They're also intending to grow dividends north of 10% annually over the long term, compared to about 6 or 7% for most utilities. So, in our view, we think the premium is worth
Daniel Rich. What a great name.
2025 earnings, which is a big premium for sure to most utilities trading in that sort of 15 to 20 range, but we think it's worth it. We also think that the environment for nuclear, although I think Anthony's definitely correct that there's not a lot of new nuclear plants bound to come online in the near term, the existing incumbent players like Constellation, we think are in a really great spot due to AI and data
5990s.
power demand from big tech firms like Microsoft and others that are really seeking reliable 24/7 power from companies like Constellation.
And then, Anthony, I want to go back to you, especially when Daniel just talked about the premium. But so obviously you see that there are opportunities elsewhere. What about the incoming administration and its policies as it relates to nuclear growth and new expansion? Where do you expect, or what companies do you expect to benefit from that? And could Constellation Energy be one of those?
You know, Constellation clearly could be one of those, but they're very open to say that they're not going to fund or build a new nuclear plant. Now, they may partner with a hyperscaler and offer, I think, the proper...
This channel's so much better than CNBC. I mean, they mentioned tariffs one time today. Some guy, some oddball that come on here. I bet you if I went still there right now, they'd still be talking about it. I was so pissed off at him this morning. Jim, you got mustard on your calendar.
Is the one supporting the construction of it. So this new government coming, you know, the Trump administration coming in, I think they'll be supportive of nuclear.
Hell yeah.
Everyone's supportive of clean carbon, you know, that's great. But will they fund construction of new plant? I don't see that happening yet. You know, things
Nope.
could change.
Private
Obviously,
sector.
4 years is a long time for an administration, but we haven't seen that yet.
Great conversation, guys. We will have to leave.
Private sector
We
will.
are short on time. Anthony Cardell, Mizuho Americas, and Daniel Rich, a senior equity research analyst, CFRA. Thank you both. That's going to do it for the watch list. I'm Diane King Hall. Download the free Schwab Network app. It's available in the Apple App Store. And tune in 24/7 on SchwabNetwork.com. Thank you for watching. We've got Market on Close with Oliver Rennick up next here on the Schwab Network.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee.
Are we selling the building?
Worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools.
Always clean this gym. May I help you?
Technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. We got an hour left in the session here. Stocks trying to hold on to gains. Pretty good chunk still there for the S&P and the NASDAQ. Russell borderline as we have been fading kind of since around lunchtime. We're now up just to 40 bips, so yeah, actually we've lost quite a bit. Russell trying to hold positive. Dow went red. It's a bit of a frustrating fade. It looked like this was going to be sort of the official bullish start to 2025 that I think many were expecting, but instead now we're trying to hold it together after failing to get above 6,000. You've got the S&P at 59.66 right now. NASDAQ 0.7%, doing better because you got some big tech names that are working. But there's a good bit that aren't, as some of the sectors have flipped red. Now you've got a market that's about split. Tech and comm service is still up, but a lot else is down, including the banks and industrials, which flipped, and consumer stocks also look like they might be about to flip red. So as far as reason, not really one that's obvious. Bonds have been down a little bit today, but nothing really.
A lot different reaction in this market than what we saw today.
This morning on reports about tariffs and Trump's response to whether or not they're going to go a little soft, according to Wall Street.
Now, I still think there's a lot of volatility in this market until Trump's in office. My biggest reason is because we've had 2 years of a great, huge run that I can't recall of ever seeing, is one. I haven't seen stocks run up in a run like this 2, 4, 5, 6, 700%. So I'm wondering if we're really going to have us a good correction coming up soon for the first quarter. But earnings are coming out, next week? Some are starting Friday. Did I hear airlines? I got to make a phone call. Should I call him today? Yeah, is Brandon there? Yeah, this is Jim with Always Clean to show him the IRS building. Yeah, Brandon, this is Jim Howard. I'm the janitor at the IRS building down there. You're welcome. Anytime, maybe after it warms up, but when's best for you? Probably during the daytime because I can't get in parts of the building without them being in there because they got codes and stuff. No, that'll be fine. As long as we don't get iced up. Okay. Just give me like a half-hour warning. I'm not too far from there. You know the location. It's a new number now. 814 417-814-0672. And if I don't hear it, I'll be there. As soon as you call me, I'll just run right up there. I'm just not even 3 or 4 minutes from there, 5 minutes. Okay, thank you very much, sir. Yep. I called him, and I'll meet him there at noon tomorrow.
More, it seems like, I mean, at this point, ongoing, and so I think that that's the concern of, like, if you lose your major catalyst for growth and you lose what is propelled.
Well, it's power hour right now.
Years, like, what really holds up these markets?
Right.
Which I think we're seeing.
Mike, were you able to get out of them?
The rally's not holding. Nvidia's given up 1% from its high, even on the session. We have inched much closer to its recent high. I will say that, like, the
it's
health
close,
of,
yeah.
I mean, the health of Nvidia is untestable at this point, but it's definitely an interesting way to position this stock as we go into CES. I think we're in a little bit of a buy the rumor, sell the news right now type situation.
Oh, God.
I typically think from following these events.
3,500 a piece. Oh, that's 3,000 times 4. That'd have been 12,000 bucks.
CEO Jensen Huang, but the rest of this week, I think from like a tech perspective, if you're curious,
Those last calls that you were in.
Like a robotics interest, that I think is expected to be one of the pretty major focuses. But again, I think be mindful that we don't necessarily always see a ton of volatility. I mean, the options market today is only implying about a $3 move in either direction for Nvidia right now. That is nothing.
Yeah, that's interesting that the options market hasn't gone crazy on it, because it is the type of thing that can build on itself. And when we were trading it with Tom earlier on Morning Trade Live, he was pointing out that the IV for Nvidia is not crazy. And in some ways that suggests kind of a more measured move, but it also means it's not quite as juicy as it was earlier this year when we were seeing options call buyers basically put squeezes on these stocks because they were...
Well, I did feel very bearish today, but the market just kept going up, and I was freaking out on that because I was down. And I should have, man. I should have just, I don't know. You can't say should have. But that's the way it's kind of been here lately. And this big gap up, I'm going, we had a huge gap up Friday. What's going on here? I mean, this was a big gap up and then another gap up. And as far as I know, these things can go all the way down here and fill the gap now. I've done good today, but I could have done a lot better. A lot. And I think it's going to be like this. We're going to have real volatile days until Trump's in office. Because a lot of these fat cats are nervous as heck, and I don't understand why. They've seen what he done in 4 years. He was real business friendly, cut regulations. Even, prices were down. Gas was cheap, under $2 a gallon. But we didn't have any wars. Maybe they're afraid that we're going to stop all these wars. We got a real mess on our hands, geopolitical. I don't think America could ever elect another guy that can't speak like Biden. If we do, we'll probably get nuked. I told all my liberal friends before Biden got into office, I said, if you elect him, we're going to go to war. There's going to be wars. No, there's not. About everything I said was right. I said it, had argued with a bunch of them about inflation. The Fed will take care of it. I said, they're behind the curve. They ain't going to take care of crap. But my liberal friends, they just, they go vote and they forget about it and they don't care. But I sit here and I waller in the mud and go, God, I'm all shook up. Tomorrow I got to go and leave at noon to meet an appraiser at one of the buildings. I hope the weather's suitable. Okay, we're getting ready to break out of the snake here, maybe. What time? 2:13. I don't know if I want to trade. Again, I should have bought them things. They were at 90 cents. Now they're at 150. I got out of these at 135. 130. $95 to 130. Oh man.
New highs or just near it pre-Fed, and we had breadth almost historically thin on the index. And at the same time, we did have rates rallying into that Fed meeting, which did provide us with a curveball. So to some extent, if we go back to September 23, for instance, Mag 7 did provide people a bit of outperformance when we did have real rates pushing to these levels. The difference this time around is there's a lot more positioning in this group and multiples are a lot higher.
So then if the multiples are as high as they are, which they definitely are, our bar to fulfill those expectations is pretty high. How much is a kind of Fed-related story? How much is a stock-specific story? Do we need the Fed put if we've got all this AI growth, or can we just go on the kind of natural explosive growth of AI? Do we need that Fed to back us?
Well, I think arguably past the post-December Fed meeting, we did have a curveball in that meeting. And yes, we had PC forecasts taken up for 25 and 26. But if you sort of track the Q&A, one of the read-throughs is potentially that Powell wants to write calls in this market and that the strike of the Fed put is actually lower. We had a couple questions in that Q&A asking the Fed, why, what drove you, what compelled the members to take up that PC forecast so substantially. One question was around, is this have to do with tariffs and fiscal? Powell's answer was kind of unclear. He said some members did, some didn't. I don't know with the others. But then there was another question that sort of asked why he was less concerned about the labor market, given that the UR is the same as in the September meeting in the summer. So one of the read-throughs there is potentially that the Fed is a bit concerned about wealth effects. There are some different ways that economists calculate the impact of sort of asset prices feeding into PCE. Some of those imply that in 24, wealth effects added, say, 20, 30 basis points to core PCE. So again, the Fed is in a and has been in a tough spot with fiscal. They prefer not to comment on it. But the reality is the Fed can rate calls into the market. They've pivoted a little more hawkishly here. And that's one potential interpretation. So I generally think that they don't mind financial conditions tightening a little bit the way they have post meeting.
I like that reference to financial conditions and wealth effect and what that might be adding on to inflation and the spending power. I mean, if people are willing to spend $103,000 on a Bitcoin, I'm pretty easily convinced that probably has some impact on spending. I would say, though, it might be more interesting to look at how that worked maybe coming out of COVID from like 2021 into 2022, but that was all that inflation kind of got muddied up by supply chain stuff, I guess, a little bit harder to measure.
That's right. We had a supply shock and a demand shock, and then those unwound on different timelines. So that was a bit of a different scenario. And again, we still have some lagging impacts. We've had a lot of disinflation from supply and from goods, and we've seen sticky services inflation. There are scenarios where service inflation stays sticky, and hey, maybe goods inflation, that tailwind or that tailwind to disinflation, it goes away. But I do think that now the base case for the Fed.
Oh, it might have just lost our connection to Jeff there. Okay, I think we got you back. Hey, Jeff, we lost you for a second, but your base case for the Fed, is it you're looking for 2 cuts, just looking at your notes here?
I think 1 to 2 cuts. The market's priced just under 2. I do think, though, that the bond market is going to be pretty quick to take out, to take that down to a half cut if we do see data a little hotter. And I think we're going to see more volatility around these NFP prints, CPI prints. All right, looks like we're taking hits from Jeff's feed. We got to jump. We're getting close to the time anyway. I do like the contribution on the macro side for Jeff, though, and the potential impact that asset prices might have in keeping inflation elevated. Jeff Phipps, Picton Mahoney, and a good thought there on the macro. When we come back, we're going to talk commercial credit and some interesting ways to maybe buffet your portfolio with different types of assets, loans in particular, and how those will fare, perhaps in an environment where rates could stay a little higher than expected. According to Jeff Phipps' baseline there for 1 to 2 cuts only this year. Coming back in a moment.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Carnivore diet saved that man's life. Watch that video. It's 2:21. Randy, what do you think? You got the balls? I don't know if I do.
Separate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market.
We're at resistance.
Fast Market.
If we
Ready
start
for
to
you.
go out of
Ready
it,
to go at 12 p.m. Eastern on the Schwab Network.
the 59.75s. Give me a yay or a nay. Tell me how you feel.
Russell did go red. Let's switch gears and let's go
You
down
don't know?
a path that we don't too often. We're talking collateralized loan obligations, CLOs, as we look for some creative ideas into 2025. And joining us from Eagle Point Credit, Dan Coe is a senior principal and portfolio manager. Eagle Point, as I understand it, Dan, has two main funds surrounded on CLOs, and the company itself is publicly traded.
$2 now at $2.45.
CLOs in our portfolio. Give me the elevator pitch to start.
Sure. Thanks, Oliver, for having me. We've got two
250,
ECC and
255,
and CLOs
265.
had very strong, resilient cash flows through numerous different cycles, and so we've seen it perform very well, both in 2008, 2009 when there was a downturn, as well as 2020 during COVID, and also provides strong income. We see dividend yields on our stock today, ECC yielding kind of in the high teens, and EIC yielding in the mid-teens. So just a very strong income generating, we believe,
285,
portion of people's portfolios.
Okay,
290.
that's number one, because if folks look at the chart, they're going to have to keep in mind that there's a big
Three black crows
that's coming with it. So this is an additive to the income side of the portfolio, or does the dividend get so big that kind of like crosses asset lines?
Yeah, no, I mean, we think that the dividend yield is what has attracted most investors to this stock. I mean, I think there are also CLO, people who understand CLOs and understand that it's a long-term trade and investment that has performed very well. If you look back to the pre-global financial crisis, CLOs only
God darn it.
as far as we understand, ever took a loss or ever lost money. And so the
360.
median was
380.
So just
Boom.
15% IR, so it's just a strong performing asset class. Although it is quite misunderstood because it gets kind of combined with CDOs, which were the
410
mortgage ones that didn't perform so well.
Yeah, that C scares people a little bit. So tell me, take me through the structure of what's in it then, because it looks like just pulling up some of the inside of the fund. I mean, it's generally pretty strong credit rated, it seems, and also pretty distant maturities as well. So tell me kind of the difference between the two funds. What goals do they accomplish?
Sure. So, I mean, both of them, I guess, have exposure to underlying corporate loans. So these are highly diversified pools, thousands of corporate loans that go into these portfolios on an underlying basis. So these are large companies that you probably would have heard of, whether it's Hilton Hotels or Dell Computer or Bass Pro Shops, in very small concentrations. So that's kind of the building blocks. And these corporate loans have historically had positive returns for the asset class. I think it's something like 29 in the past 32 years have had positive returns for the asset class. It's just a resilient asset class, and those are the building blocks. And then so ECC focuses primarily on CLO equity. So that is the what we call kind of the residual tranche or residual slice of these securitizations. And then the EIC focuses on the mezzanine debt of these securitizations. So the CLO equity is the one that's had only 4% have had losses for the pre-global financial crisis.
Dadgummit.
CLO equity positions. And then for CLO BBs, we understand that, I guess, those CLO BBs have had 4 basis points of annual defaults for the past 30 years. So again, a very resilient asset class, kind of in our opinion.
Yeah, pretty safe, seems like, just based on those rates. And then the asset class as a whole really only getting hit in 2008 alongside everything else. The return's pretty consistently positive. That kind of comes back to my question about where they fit.
Mr. at Resistance.
Obviously, their income, but it's such a big.
That's
chunk of
right.
Income,
If you can count to 3, you can trade with me.
It's something beyond bonds, right? Like a different purpose being served. Do you see interest coming from folks that are worried about their equity positioning and they go, you know what, I just want a 15% dividend or whatever? Or is this people going, I don't want duration bond risk, give me CLOs instead?
Yeah, I mean, so certainly for CLO equity, if you think about CLO equity, because you have on the asset side of the balance sheet, you have floating rate loans, and then your liabilities are also floating rate liabilities, so you're kind of matched there, and it's ultimately a spread arbitrage vehicle. It's like what is the spread that you're earning on the assets minus the spread that you're paying on the liabilities, and so there is no sort of, I guess, a minimal interest rate risk that goes into CLO equity, which is really the benefit. So I don't know where rates are going to go. Rates might go up, might go down, but for CLO equity, you're fairly insulated from that and that minimal interest rate risk, which is kind of certainly in a volatile rate environment, that does seem attractive to investors.
Okay. Correct me if I'm wrong, it seems like you like to focus sort of not on like the top tier credit quality, but not like high risk either, right? You guys are in like the double Bs, triple Bs stuff mostly?
Well, for ECC, it's actually mostly on CLO equity, so that is the residual, I guess, portion of the CLOs, and so that is our specialty.
Okay.
That's what we've been doing since the beginning, and a lot of that is kind of just we follow a private equity style kind of approach to investing, and this is a long due diligence process. You know, it's not just buying a CUSIP, but really understanding.
Mister's had a real good day.
Collateral managers operate, or these management teams of these CLOs operate. And their long-standing relationships that we have with them and the long-term investments that we do make. We do typically buy a majority of the CLO equity so that we're given certain majority rights as that investor. And due to that, I guess we are one of the largest CLO equity, we believe one of the largest CLO equity investors out there in the market, and that does kind of get us some wholesale economics.
Got it. Okay. So you guys are pretty high up on the cap structure, I guess, then, right? Okay. Hey, Dan, thanks. Very cool stuff. Nice little addition for us outside of our traditional stock and bond conversation. Appreciate it.
Yeah, you got it. Thanks for having me.
Yeah, absolutely. Dan Coe, Senior Principal and Portfolio Manager, Eagle Point Credit, EIC and ECC. Coming up, let's look at some options and technicals. KG is going to dissect this fade for us, see how concerned we should be.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way.
But there's a... Carl's Way is the best way.
It is.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Do. La la la. Well, it is now 2:31, 3:31.
S&P 500, 59.75.
Everybody hit the like button there on YouTube.
Come awake here in the last 5 minutes. Kevin Green joins us for a look at the technicals and the options flows. KG, obviously we are well off the highs of the day, but still holding on to a decent advance. So technically, what's this doing on the chart for us?
You know, technically, Oliver, it's kind of a mixed, scenario when you're looking at the market here today. Obviously, we do have green on the screen. We want to be able to hold this, but the reason why I kind of bring this up is because we actually did have a look above and then failed that 20-period moving average. You'd like to see a close above that to really try to give us a little bit of confidence. And the reason why I kind of bring that up, we kind of go back in December 18th, we had a similar type of situation where we kind of failed that 20-period moving average. We came back
Yes,
to
Kevin.
that right shoulder that we've been talking about, got above that 20-period moving average for 2 days, then failed below it. Now this candle structure is also looking like a shooting star. Basically, you open up higher, you try to move to the upside.
Well,
but
that's
then
interesting.
sellers kind of get into the market flush and you close lower. That's not a good sign either.
That's interesting how you put that down in there.
Usually those shooting stars tend to kind of signify that we have a little bit of a reversal on our hands in the near term. Now, obviously, economic data can make that change.
I don't think I've ever done that.
News from CES to actually kind of push us higher here, but this really doesn't give you a lot of confidence as a bull that you are going to see some follow through. On the other side of that, the compression's now in the market. We have defined ranges, at least to the upside and downside. The downside, 58.60, 58.65. You want to be able to hold that. And on the upside, you're still looking at around 6,000 as your area of resistance, and that's really kind of where we saw that failure today. Got to around 60.20. There's a lot of call activity that was sitting there. We talked about that large gamma level at 6,000 already, and that's where we kind of saw some sellers coming into the market. And when you see a fade when it comes to semiconductor space or maybe some of the technology stocks that are still green on the screen, you saw a lot of the other sectors really kind of fail. Energy was up 1% in the session. It failed. If you're looking at healthcare, that was positive at one point. That also failed. So you're just seeing a lack of breadth in the market, and that's really what this candle structure is showing us today.
Okay. And the stuff that's holding up, obviously, probably the most important, but it just is frustrating to see so many others, sectors and styles struggle here in the day. And to our point, we talked this morning, Russell, just like always the weakest. The failure to extend past 6,000 kg, is that a hard rejection? How many times do you think we could take a shot at that before bears get serious?
I don't think it's so much to the upside how many times you're going to take a shot at it. It's when you get closer to those downside levels or those support areas, really where the bears are going to try to capitalize on this. Obviously, we saw some buyers stepping in, but if we continue to retest these resistance levels and these support levels to the downside, that's when bears are going to say, okay, bulls don't have enough confidence to really try to push this thing to the upside. Now we can actually sell off here in the market. And unfortunately, as we talked about last week, looking at a lot of the stocks below the 200-day moving average, below the 50-day moving average, the 20-day moving average here, where could the selling actually occur? And that's going to be mega cap tech, unfortunately, here. Now, NVIDIA had a really nice showing to the upside, but also, Oliver, I think that was a little bit of a problem, too. I mean, it got within, 70 cents of its all-time highs, and then you saw some selling pressure there. So you really don't want to see that candle structure, as we kind of talked about, that shooting star candle closing below that 20 period, because if you are going to see some sellers coming in, once again, they're probably going to take some chips off the table on some of the high-performing tech names in the space here. Now, with going into the close, what actually will be interesting, though, if we kind of get a bounce, and we try to get a little bit of a bounce, if we can get above 59.80 and try to rally a little bit higher here, there's still kind of some pen risk that's sitting at 6,000. I mean, it's not out of the realm of possibility for us to kind of go back and try to retest that. It would take a lot for us to do so. The market on close imbalance on the buy side would have to be pretty substantial, looking at $6 billion, $7 billion on the buy side to really try to wake this market up and get those short sellers out. But you don't really want to close below 59.80 because that is technically negative gamma territory for today's session if you're just looking at volume. And once again, the structural setup when you're looking at the technicals also kind of gives you a sense that, hey, we tried, but we just didn't have enough in the tank to do so.
Exactly.
Especially with the market starting off so well. I mean, we had almost 90% stocks in the green starting off today. It may be at 50% right now.
Yeah, that's where the failure today in particular stands out. If it's failure, I think right now it's almost kind of a wash to some degree, but, the breakout, it definitely failed above 6,000 for sure. So that is like the first step, because generally you still have the trend. I mean, I know we've been consolidating, going sideways, for several weeks now, but when you had such an explosive rally that lasted for such a long time, the faded rallies do suggest more of a running out of appetite than some exogenous risk. And so if you're going to sell off just because, you ran too fast, now you're tripping over yourself, that's kind of what we're doing. It's not like an exogenous event that hit us. It's not like we crashed this morning on the Trump stuff or anything like that. So VIX and volatility, 16.3. What do you see for volatility right now, KJ?
Okay, so with volatility, there's two things. I have a seasonal chart. We're going to probably look at this a lot more as we do have a seasonal trend where volatility actually gets a little bit higher. We saw that flush to the downside. That matches what we've seen over the 15-year average. A flush to the downside, making a little bit of a base, and then we start to move higher. The problem that we also have with this market, Oliver, here, today, what do we have? We have stocks up, right? If you're looking at the S&P 500, what else do we have up? VIX. Now, once again, it's not by a lot, but that term structure actually did kind of reverse on an intraday basis. So we do have a VIX up, stocks up scenario here that we always have to kind of keep on the radar, because usually when we have that type of environment and it's not excessive call buying that's taking place, which today you can make the case maybe at the start of the day it was, but towards the end of the day, once the VIX really started to rally up, that was really put side driven, especially when you're looking at out of the money puts. VIX up, stocks up, not a good scenario. Shooting star candle on that daily, not a really good scenario. Failing the 20-period moving average, not a good scenario. Once again, I'm not trying to be a bear in this market, but we have to also have the reality of the fact that it's going to be fairly tough over the next couple of weeks with the economic data that we have, as well as the leap expiration for the third Friday of January. A lot can actually happen in this market. We still have to be prepared. We're not out of the woods yet.
Yeah, okay, good stuff. Nice work. VIX up, stocks up, always interesting. We will see you at the closing bell. I know you got some commodity stuff for us. Thanks, KG. We'll get started on that conversation with Scott Bauer when we come back, talking some movements in the dollar down today. Bonds have been a little changed. We'll take a look at gold. We'll take a look at Bitcoin. Maybe some copper will enter the chat as well. And then bounce on Carvana stock is our developing story. Be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market.
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do.
Oh my God.
Instead of
They can do it, they can do.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in. We got stocks still okay right now. NASDAQ still up almost 1%. Bitcoin too looking pretty solid, up almost 4%. Scott Bauer joins us, CEO of Prosper Trading Academy, to talk about some of the other stuff we haven't hit quite yet today. Stocks have a little trouble fading, but Bitcoin seems pretty well perched. Scott, what do you say?
So a few things, Oliver, and I've been on the floor quite a bit today down at CBO. Volume is really, really light once again, just like it has been over the last several weeks. So, you know, I wouldn't put a lot into the move today in the equity markets. Overall, you know, still fairly strong. The NASDAQ is the leader here, but to me, there's been a lot of bottom fishing, and I'm not sure that, the narrative has really changed too much about what the outlook is. I mean, I think we're still very dependent upon what Fed does, where the 10-year is going, and, you know, before we know it, it's going to be earnings season. Now, you know, if we move over to crypto and to Bitcoin here, I think a lot of this is all back on the new regime's policies. You know, the new administration coming in, there's a lot of chatter, a lot of news today about, you know, Trump being very pro-crypto again, pro-Bitcoin, looking for new opportunities. So I think there's a lot of optimism there.
Jan 20th inauguration, almost, I guess, exactly 2 weeks.
Yeah.
How do you think this plays out then? Like, we're kind of in uncharted territory to some extent.
That's true.
When it comes to crypto and Bitcoin in particular, and like waiting for news. In some ways, it seems so antithetical to me. Obviously, I'm kind of a cynic, but like this idea that the whole value add, at least that I thought it was supposed to be, was this entirely independent, you know, regime, and now it's like waiting for policy to be designed around it. How does it make sense?
That's a real tough one, and I don't know what is going to be the impetus for getting back to new highs or beyond. What I will tell you, though, is over the last several days, there's been some massive call option buying in Bitcoin that expires out to March, up at like the 130,000, 138,000 area. So, you know, maybe that is fueling some of the fire, but I couldn't agree with you more. I mean, it's not going to be like day 1, 2 weeks from now, we're going to have policy that's going to change the landscape here. So the bulls are really happy. I was hoping for more of a sell-off than what we got, below 92. You know, I had been looking for that 75, 77 area, never got it. But I don't know what is going to be the next catalyst here, and I'd be very careful.
Okay. Thinking about the price action, a high of 109 roughly and change. I mean, we're not too far off that type of move Bitcoin can do in a day. Do you chase it if it breaks out? And what happens if it doesn't? Take me through kind of the trading regime.
Boy, that's a tough one. I never want to chase anything. So if it breaks out and I've been left in the dust, I'll be watching from the sidelines. I mean, I still think that 77 area, 75 area, to me, that's where I want all in. 92 didn't do it for me. Maybe if we had broken down through 90, maybe I would have nibbled a little bit here. But again, to me, that 75, 77 area, which was the old highs, the old big resistance area, that's what I really need to see to have tested again and hold there, to have a ton of conviction outside of what's going on, you know, maybe with some animal spirits and the excitement over the new administration. To me, it's maybe setting up as a little bit of a buy the rumor, sell the news type of event.
All right. Hey, Scott, fair logic. How about gold? Awfully quiet in the world of the bugs for now about 3 months running for gold.
It really is, and interesting that Goldman kind of changed their narrative today, saying, you know, 3,000 originally was going to be hit 2025. Now they're pushing it out to 2026, and I think that all goes along with, you know, their change in what they see the Fed doing, what the dollar is doing. The dollar has remained, awfully strong. I know it's off a little bit from the highs we saw, 109 and change or so. But gold is hanging in there. To me, again, gold, the range down, I wouldn't mind seeing it break down below 26, around 25.75, 25.80 area. To me, that is a really solid area for a nice entry. But just like Bitcoin, I'm not sure what catalyst I see for gold really advancing, unless all of a sudden there's a big shift in inflation data and inflation numbers, and all of a sudden the Fed goes back from maybe we cut 1 or 2 times to we're going to get aggressive again.
That gets interesting.
How does SPY and SPX get there?
This consolidation, lower highs but higher lows. So maybe to your point, that'll kind of be a better read on any surprises from the Fed, where if they're going to actually have to tighten things up, gold might get smashed.
Double bottom
or if
on
data
SPY, double bottom on SPX.
Then gold maybe comes
I'm
back
gonna
a
wait.
little bit because it had a really
I bet
great
you we open
first
up
9
red
months
tomorrow.
last year.
Oh yeah, so I think that trade, which was a very much.
I bet we open up red tomorrow. Down. I was really, really bearish today when we first got in here on this gap up, and man, I was scared to death. That thing kept going and going and going and going and going and going and going. And then finally, at the end of the day, I could have had another big day if I'd not been so freaked out this morning on the market going up on me. Because I was solid about getting puts and riding it all the way down to the gap. So I think next 2 weeks are going to be not so easy. So we want to be very, very cautious until Trump's till Trump's in the office, and we know he's in there. Because I don't know what could happen. I mean, we don't know what can happen. They might not even have the inaugural. They might have it at Mar-a-Lago, and because just liberals are too crazy, unhinged. There'll be riots. Could be a big bomb go off and kill a bunch of people. You just don't know. I really don't know. So I think, yeah, I'd rather see him do it live on TV. Not make a big deal out of it like that we always have. Because they're still talking insurrection. The Democrats are still talking that smack. They say peaceful transition. I ain't seen nothing peaceful about any of it. From selling border walls and these. I mean, we had even one of our supposedly unhinged Green Beret blow up a cyber truck. And then we had that in New Orleans, a guy running all over all them, killing them people. I'm glad I live in a small town. At times, I always loved big cities. I lived in some of the biggest cities in this country. Memphis, Tennessee, Portland, Oregon, Sacramento, California, Honolulu, Knoxville. What else? St. Louis and Kansas City, but I didn't really live there. But nothing like some of these other ones, like New York, where they have these riots. So we'll just have to see what the next 4 years bring. But I know the next 2 weeks are going to be very volatile. And it could be like the correction we're looking for, but earnings are coming up. So they're going to market will pay more attention to the earnings. But again, you know, we're at such high levels, it's a little bit risky. No matter if the earnings are good or bad, it could still pull back on us. I think it has to be guidance again. It's like Nvidia right here into close. $4 dip from the high. $2 right there.
For 6 years in a row with Investor Check.
I have no clue who they are. So tomorrow I got to leave at noon, a little before noon, and then Friday I go get that calcium scan.
Ameritrade is now part of Schwab.
6 more minutes. Anybody have any questions? Jesse, did you come out okay today? Hopefully not too bad. Magnificent. You lost. Let's be a little bit more patient for the next couple of weeks until the right setup's there. I just wish I'd have held them. It went to $3,500, those contracts. I'm going, no. The puts. I left a lot of money on the table today. Magnificent. My puts that I bought this morning, they went to $3,500. Probably more. I haven't even looked at them. It went to almost $4,000. $50 shy of $4,000. Oh, profit is profit. Okay. If that's the way you want to put it, that sounds good to me. I didn't have a red trade today, at least.
So that has come down quite a bit. So what I think is important about that is that it shows that although the labor market's not falling off a cliff, it is softening a little bit. So that's going to be important in terms of what the Fed is going to do. And looking back to the most recent
The Fed has nothing to do with it.
A lot of dispersion about what the Fed was projecting for where they're going to end up in 2025. So that labor market,
They're behind the curve.
That's going to come into especially.
Hey, they're behind the curve. You understand? They're a reactionary Fed. They're not based on future insight. They don't know what this market's going to do. When you react late, you don't get the right results. For one, we sat on these rate cuts way too long. I would have cut them sooner so the market wouldn't run up so fast.
Excuse me, this year. So what we've been suggesting to our clients is it takes take a little bit more of a prudent or cautious approach on duration.
So much, I mean, not fast, but so much.
For a benchmark or below duration. But as we continue to see yields move up, that presents more opportunity.
Justin Trudeau resigns.
If we do see the Fed a surprise in any way, which way do you think that likely is to be? I've been hearing most of our guests say 2 to 3 cuts this year. Do you guys think they may be pinned a little bit more? Maybe can only do 1 or 2?
You know, in my opinion, I think that the surprise would be to fewer rate cuts. And the reason being is that, yeah, the labor market is softening a little bit, but it's still holding up okay. The economy is running at about 3% GDP, so that's by no means a falling off
Kevin O'Leary can afford that.
hard landing scenario. But with inflation not going down to the 2% target as quickly as expected, I think the case for fewer rate cuts is stronger than
This is what I'm talking about.
The case for more rate cuts. I also think that
Socialism is where the government picks and chooses winners. Conservatism, capitalism is where the private sector does the picking and choosing the winners. There's a whole huge difference there, and people are left out when the government picks the winners and losers. I don't think I'd have well, I survived, but I don't know how with my business under Biden. We got less than a minute.
Trading at Schwab is now powered by Ameritrade.
So I'm going to sit here and try to warm up, man. It's cold. I have concrete floors. Ding, ding, ling, ding, ding. I hope you people on YouTube heard what I was saying about the market. We need to be extremely careful, and there's going to be a lot of volatility. Today, I thought we ran up when we shouldn't have, probably. We gapped up. And then you can see the pullback we had. I could have had a real nice $4,000 contracts there if I'd have held that top up there. And if I'd have added it $2, ooh. And only had 4, but I got out with a couple $100 and I could have come out with about 12 grand. With 4 contracts. The market's bullish, but we just got to wait next couple of weeks till Trump's in office, I think. That's my opinion, but I'm a little biased. So I'm going to get on out of here. YouTubers, hit that like button. I got 6 likes. Whoa. We'll see you all later.